but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Woo. Hola.
Did you wear that yesterday?
I did. Yes, I did.
I'm just
I'm calling you
now.
out, girl.
I didn't think I would get called out.
I'm gonna call you out.
I didn't think I would get called out. I kind of like this. It's warm.
It is warm.
It was right there on the top of the pile.
It's
I was
cozy.
Like, okay,
It smells
I'm gonna
good
grab
still.
that one.
Oh my God,
Nobody's gonna notice.
I'm looking at my I'm looking at my 16-year-old and it's
I clocked it.
I wear black, blue, gray, basically every single day. So I figured there'd be nobody would spot this.
Well, evidently somebody did. Did
Oh my God!
you do the walk of shame?
thanks.
Is there a story? What's the story?
It's outing me.
Clocked it.
Come on, lead us off. What's the
Brutal.
story? There's got to be a story behind this. Walk of shame.
You just felt cozy.
I mean,
you
come
felt
on.
cozy, comfy.
Let's be honest. At least I have a clean white tee on.
Silver getting to you.
Tom would wear the same shirt every single day for 3 days, 4 days.
All right, perhaps. I didn't think I'd ever see it, but
Wow.
okay. All right.
Wow, that's.
Wow, V. 15 years, you never saw
I
me
feel
do that.
attacked.
I'm not allowed to wear the same thing.
I feel attacked.
I guess you're allowed to now. Now you're allowed to. Now you're allowed to.
Unbelievable. Unbelievable.
Out of the gates, I'm on his list.
But the thing is, I went out to dinner with Mike and Ilya last night. We had
Oh, how was that?
It was fun. It was fun.
Where did you guys go?
The Loyalist.
Oh, I
Right down
haven't-
the block from here.
Yeah, how was
Yeah,
that? I've never
it's
been
great.
there.
Good, it's always
You've
good.
never had?
No, never.
It's great. It's a
Well,
great
it's a burger meaty.
Yeah. That's
Oh yeah.
Yeah.
No, I don't eat burgers, but that's okay.
They have other.
I'm sure they do. I'm sure
Really
they
nice
do.
Caesar salad. Mike and I split.
Ooh,
You
Devil-
split
That's a
Caesar-
girl
wait minute,
dinner.
You split a Caesar
No, they do it
salad?
like a table Caesar salad. You
Oh.
can't eat the whole thing. You don't want to eat the whole thing.
Caesar salad, Diet Coke, and fries. Girl dinner.
Yes, that's we did.
Is that what you had?
Basically.
You had girle dinner.
No, we had cheeseburgers afterwards.
Okay.
Really nice.
You split that too?
No, we didn't. No, we didn't. You know what?
Mm-hmm.
But I changed before that.
Okay.
So this isn't exactly like.
So why didn't you wear what you wore last night, this morning?
I should have done that. That was also on the top of the pile. That
Yeah.
was,
But I get it is warm. It's colder this morning than it was yesterday. I mean,
It is, yeah.
I thought it was supposed to get a little warmer. My wife was showing me the forecast for next day. See, look, it's going to get better. It's going to be in the 20s. 20s?
It's not even going to feel in the 20s, but technically, yeah. But yes. But we live
It's
here.
cold.
Why don't you go to your Florida house?
Excuse me?
soon.
Or is it it's actually going to get cold in
for
Florida?
Valentine's Day weekend.
For
Yeah.
President's Day weekend.
President's Day weekend,
Yeah.
Valentine's Day weekend. I can't forget it's Valentine's Day, so I've got to
Sure, that's
Valentine's
true.
Day weekend. I can't go. President's weekend, yeah.
But it's supposed to get cold in Florida, though.
Yeah. I don't think that week, but it's been colder now.
Yeah.
Right now. It's
Should
been
have
a
left
beautiful
like a
winter
faucet
there.
running or something. I don't know.
Yeah. Of course, it's not going to get that cold. I mean, it's below the frost line, so it'll be in the 60s is cold there.
No, I think it's going to get like 0
No,
degrees.
No,
like it's not Valentine's Day weekend because we don't have weather out that far, but I think like this weekend, like really, really, really like legitimately cold in Florida.
Yeah, it's 39 there right now. You're 100% correct.
Yeah.
39 to 70. Yeah, so 39
but
to
like
60.
into
you're
the
right. Yeah,
weekend.
50s is a
Yeah.
high one day on Sunday. Yeah, you're right.
Yeah.
Yep. You are correct.
The videos that come out of Florida are probably going to be even crazier than the Texas ones.
I don't know. The Alaska
iguanas
ones.
falling?
Did you
Yeah.
see the guy ride the side by side up the stairs of the Philadelphia Library and the Rocky music played? Da-da-da.
And in D.C., my daughter lives in D.C. She said they haven't plowed or anything else like that. The schools have been off for the last 3 days. So
Oh, no.
Yeah. They got a lot of.
I think 400,000 people are still without power. Like the guy on NPR, he was reporting on like Nashville, and he was like, and yes, even this NPR reporter has been without power for 3 days. I'm like, dude, that sucks. Because all the hotels are booked up in Nash Vegas. So
It's tough.
I like the ones in Texas where you see them like driving down the road and
all the trucks and the side by
and they just,
sides.
like are like spinning out because
I saw one of those, like 3 or 4 cars hitting each
black
other.
ice. Yeah.
Oh, I saw that in Austin. Yeah, it was
Yeah.
just like a sheet of ice.
Yeah.
Mm-hmm.
And then I saw the video.
Nashville's having problems too, I think.
Yeah, Tennessee, it's really
there,
bad.
yeah. Oh, well.
I saw the video of them like salting in Atlanta, and they're like, "That's just lemon pepper seasoning." they don't know what they're doing.
Well, it's good.
So it was just 2 dudes in the back of a truck, like just.
It's good for me because we're going to ice fishing on Saturday.
You're going ice fishing, Nikki.
Yeah.
Ooh.
Which I've tried to like search it, but
Have you done it before? I've never done it.
I have not done it before. But I'm afraid that it's too cold.
Yeah, but you're going with some North Shore kids. Don't they have like their own hut and don't
You're
they have
going to
like
Wisconsin?
don't they have like a guy that
Oh
comes
yeah,
out and starts
you're gonna sit out in the
starts the
wind
fire
and not
for
have
them?
a hut.
No, don't they have a guy that comes out and starts the fire for them, makes the hole for them?
Well, there are different levels to like what
Yeah.
the huts are. Like some are just
you probably
like
have a
pop up.
masseuse.
Yeah, like some are really
We got
nice.
a good setup. We got
Okay.
a good setup. But don't be over there like
No, I mean,
you're
you
gonna
have
be you're gonna be there with a pickaxe making your hole. No chance.
And a black garbage bag.
Yeah, yeah.
But do you have like the
Fishing for dinner.
you have the
for
camera, you have the cameras and the infrared technology and the lasers. I don't know.
I don't know.
Okay.
We'll
What are
see.
you
have like
what are you gonna wear? Like, because that's a special outfit. Like,
I got some snow gear.
Okay.
Got some good stuff, some warm stuff.
I set him up with the electric quarter zip, I guess you
Yeah.
would call it, or
they're going to laugh him off of the ice.
no, he puts that on the inside.
On the
And
inside,
He's
yeah,
got
you
the
don't-
bib.
you don't
I gave him the
like
bib, the snowmobile bib that I have.
Karate guys, heat on the inside.
Yeah.
The big question is like whether it's the weather being so cold
Yeah.
is gonna stop the fish from biting because the fish if it's too cold.
I don't think that's a thing.
You don't think so?
I don't know.
If I remember,
Have people chime in the chat.
yeah, no, you'll be okay.
I'm sure Frankie will.
If I remember, I mean, how could it be too cold? I mean, the ice is going to be ice.
Yeah.
The water's going to be water. I mean, like, it's not like it doesn't matter. I mean, the ice will just be thicker, which is better for you.
Which is good, yeah.
Yeah. I have a camera.
An underwater camera?
Yeah, I have an underwater fish camera.
Didn't the state take that away from you? Didn't you have to turn it over?
I was using it in the bathroom.
Yeah, didn't you have to turn it over as the state's
Yeah.
evidence in the okay.
If I remember, I'm gonna bring it in for you. But I don't know if I could trust you with the technology. I don't know if you'll be able to do. I mean, because you're gonna be sitting there drinking whiskeys and everything else like that, and before you know it, my camera's at the bottom of the lake or something like that. I don't know. Can't trust you.
Possible.
We'll see. Anyway, looks good. I'm excited for you.
Yeah. It's gonna be an all-day event. It'll be fun.
And make sure you make a big enough hole because you guys are gonna catch some really big fish.
Really big ones.
Really big
ones. Some of the biggest. Yeah.
No, but seriously, don't you have you have a wooden structure, don't you?
I think we have a tent.
We have a tent.
But we have like heaters and stuff. We're fully stocked.
Yeah.
Yeah, we have like a guide that's gonna help like set
That's what I know. Yeah.
A concierge,
concierge.
a valet.
Now he's coming clean.
Yeah.
Now he's coming clean.
I mean, it's not like I have fishing gear sitting in my closet.
Or like an ice saw.
In
I don't know.
my condo. That's not like part of my,
Snowmobile in your closet.
Yeah.
Are you
What do
gonna bring some of your
Oh, sorry,
soup?
snow machine.
Am I gonna bring what?
Some of your soup? Well, you gotta have food.
That's a good
right?
idea.
No, like you gotta have food, like in one of the thermos, like in
Yeah.
like they make like portable crock pots, like or
Yeah,
something.
it's a good idea. Bring soup for the boys.
Yeah. Ferta.
Yeah.
Soup brings all the boys to the yard. Boys to the yard.
Yeah.
Oh my god.
You have to have food. Like I'm not being naive and like you have to have food. Right? Okay. Well, okay.
So you would just eat some jerky or something like that. You know what I mean?
Yeah.
Soup.
Yeah.
Something warm.
Have a good bouillabaisse.
Ooh.
No, I was thinking I'd bring sandwiches. I want to go to one.
But it's hard because it's gonna
Just
they're
go
gonna
buy them.
freeze.
Go to Bari or something like that and buy them.
Wait, you think I'm gonna make sandwiches?
In this economy?
No, I'm going to.
But they're gonna freeze like real.
Yeah.
Like if you have it in an outside pocket like that, that sandwich, you're going to be able to use that as a
No,
hammer.
come
we'll be
on.
fine.
Yeah.
We're gonna have
Okay.
a nice warm.
Well, in the room, she's the only one that really has gone camping. And she
Oh, I
probably
camp in
knows
the winter
most
too.
of
I have a hot tent. Yeah, I have a, yeah.
I bet you do.
Okay.
Should've hit-
All right. Right to
Get
jail.
out of
Should've hit you
Right
up
to
for
jail.
gear.
I'm 5'2".
That's true. That's
my
true.
gear.
Not that
won't-
gear, but
Oh, like
tent,
other gear. Oh,
you
sure.
know.
Oh yeah, I got like a nice little portable wood burning stove.
Ooh.
Like a exhaust thing. There you go.
Nice, nice.
Maybe you should be borrowing stuff from her.
Yeah,
Can't zip it, but it'll be good.
yeah.
All right. Well, I'm not going ice fishing this weekend. I'm staying home.
No,
No ice fishing for me. Any ice fishing for you?
No.
You traveled? Do you go into any state park or doing anything?
It's
like
so cold. No,
Yeah.
yeah,
Yeah.
it's
Don't
just
blame me.
another winter of just below zero.
Mm.
But how was Vinny's birthday?
Vinny's birthday was very good. A little anticlimactic.
Well, we've been celebrating it for 40
Yeah.
days and 40 nights, as foretold in the Bible.
It's kind of true. It's kind of true. Mom couldn't keep a secret, so he basically had everything that we gave him for his birthday. He got already. So yesterday we went to Costco for a minute, and they had, he likes to cook and stuff like that. So
Sure.
they had this like 30 spices. These the kinder.
Oh, Kinder.
Kinder?
Kinder.
Spices?
Yeah.
Kinder?
Yeah.
Spices. So they had like 30 of them in a box, like
Oh,
only
that's a good
Costco
deal.
could.
Yeah. They make
They're only-
good
but they're
spices.
smaller ones,
And
you know what I
rubs.
mean?
Yeah.
So we wrapped that up and told him we had him a special birthday present for him.
Aw.
So he loved that. He put that in the pantry, like he lined them all up. He's got his own shelf in the pantry.
Okay.
Yeah, so he was very excited about that. And then I wanted to take him out to EJ's for a nice dinner or something like that, but he wanted Chinese food. We ordered in. That was it. Then he went to go skate with a buddy of his on the what does he call it? On some abbreviation, but a home rink.
Oh,
Somebody
okay.
built. He gave it an initial, almost like ice, but he gave it like an initial. I don't know.
Sure.
I don't know what it was, but that's what he did. So I'm sure he had a couple of brewskis or something like that. I was in the don't ask, don't tell stage of my night.
Okay.
Birthday. Got late. Wednesday is the late arrival. So they don't go to school until like 9 o'clock in the morning or something like that. So
I'm sorry, was there legislation passed that the
Yeah, I don't
drinking
know
age in
about this.
Illinois is now 16?
every yes.
I was not aware of that.
Every day you have
Congratulations,
late
Governor
assignment.
Pritzker.
Yes.
He just doesn't have the energy to fight it anymore.
Yeah, right. You're
It's
right.
just like
you're
that's
right.
all it is. Is like he's fought it so many times that this one it's just like
Make good decisions.
yeah, just
That's what I would say. Make
like-
good decisions.
Like stay alive, just come home.
Yeah. Right. Yeah. As long as it's not a pill or a powder, I guess I'm okay. I don't know what to tell you. I don't know.
Sage advice right there.
The bar is on the floor.
Yeah.
The bar is just straight up on the
I
on
don't
the
know what
floor.
to tell you.
No.
So wait, no league for you last night, Nikki. So
No, we start.
Whoa!
next
How did you
week.
know this? How come?
We start next week.
because he yeah. Okay.
I must not have been listening when he was speaking.
Yeah.
you were not. No, you just
Evidently.
went out with
Yeah.
Ilya and Mikey.
Yeah.
You're going out a lot this week. You are not.
Oh.
You are not
Are
29
you on tilt or
anymore.
something? What's going on?
I
over
need
there?
a nap or something. I mean, this is a lot. At the company party tomorrow, I mean,
Yeah, I burn the candle at both ends there, son. You'll be wearing that shirt for the next 4 days.
it's too much socializing.
How do we get a 9 o'clock start? How do I get on that list? That's what I. That's
I
what
haven't had
want.
one for 15 years. I haven't had one for 40 years. So sure.
Well, we have a great show for you today on this wonderful Wednesday. Hope you are somewhere safe and warm. At the top of the 8 o'clock hour, we have an options jive, expanded profit drivers. What does that mean?
Huh?
It's an interesting title. It's
I know
just
that's
a
what I was
basic
like.
piece
I was like, what am I
on-
reading?
Yes, it's just a basic piece on just kind of the three metrics that we trade around: delta, vega, theta.
Okay.
Just kind of a basic outline, something you could send to somebody and be like, here's what options are.
Yeah.
That kind of thing.
Very simple.
Yes.
Somebody
And
who's just starting out and doesn't know what an option or option thing is, we're going to take you back in time.
okay. And then also we have, because it is a wonderful Wednesday, it's Assume the Position
Yes.
Wednesday. We have What's Your Assumption? This is where viewers submit their trade ideas, but they have a directional bias. So people feel very strongly about their trade and they want to guide you in a certain direction. So the bats are going to do viewer submitted trades. That's at 8:40. Then 9 o'clock, we have the man, the myth, the legend, Thomas Preston in the house.
He is surviving the great freeze.
Right, we have to check in with him
Yes.
on Preston Ranch. I want to make sure that the animals are okay.
Yes.
No, I'm serious.
I asked him last time.
They
I
have
was
fur
like,
coats.
do you bring the alpacas inside?
Right.
Like, do they stay in the house with?
Do they have little jackets and boots?
Yeah.
Only on Saturday nights. TP.
Sick.
I have so many questions,
Yeah.
and I just hope all the animals are okay.
Yes.
And then we have live from the trade desk at around 9:20 today, Glenn G Money solo.
Whoa.
He is the Beyonce of the trade desk, and so
Yes.
he is going solo.
I think. Wait, don't we have Q? I thought we.
No Q.
No.
I got a specific email. No Q.
Oh my
No
God.
Just
God.
Glenn,
Ryan.
yeah.
He's freaking.
One night only, one night only.
All right, we'll take Glenn.
Yes,
He has-
Glenn.
He has some repenting.
He's
to
a
do.
star.
He is a star.
He's a star.
He's quite the character, but he has some repenting to do.
Okay.
I'm not.
You were still mad about your Swiss franc.
Yeah, that one is painful.
Yeah.
Franc, euro, pound.
Oh.
He's mad about them all.
They're all not good.
Not good.
Yeah,
No bueno.
I liked trading FX products. Not recently, not so much.
Not so much.
Not so much.
And then Liz and Jenny at 10 a.m. They are live from the SIBO. So make sure you
Woo.
tune in for the ladies. They did last call yesterday. It's always great. We had a lot of good comments come through on social. If you want to speak to the ladies, hashtag LIZJNY for your trade question, or just give them a shout out. But it's always electric when the ladies are live from the floor of the SIBO. So tune in for that 10 a.m. today. Always
Beautiful.
doing a wonderful job. Doing double duty because some boomer over here is.
Yeah.
Some people don't want to work anymore.
What the hell?
Wow.
So what's wrong with your generation? But Liz and Jenny holding it down yesterday. But hey, in the meantime, in between time, I got a boatload of news. You want your daily dose?
Sure.
Hey, this is my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Across the wire. Our leading story. Top story. Jump in.
In today's headline,
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's January the 28th. This is the part of the show that's called the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat earnings for this
Yeah.
evening.
Yeah, this is the moment you've been waiting for.
Is it?
Well, if you're an earnings slayer, it is.
Okay.
Microsoft, Meta, Tesla, IBM, LRCX,
ServiceNow,
ServiceNow. Don't forget about telephone. But there
waste
are
management.
waste management. If you're an Italian,
You know, I was like, wasn't your dad head of waste
Right.
management?
we used to have good numbers. I don't know if they will anymore. I used
Yeah.
to have,
They're
hit on
always
those.
good numbers. Come on. Look, you think those books are not good?
Are cooked. Microsoft, Meta, Tesla, LRCX, IBM. Those would be the one. IBM doesn't have the greatest market. I'd actually rather trade Microsoft or Meta or Tesla than IBM just
Sure.
on a liquidity basis.
Well, the S&P 500 barely managed to record a closing high on Tuesday, but nonetheless, it did its fifth straight day of straight gains with investor
going on?
optimism ahead of mega cap earnings being countered by a mixed reception to the latest earnings report. Where do we go from here?
Higher,
up.
it seems like.
Yeah.
But it was a weird day because the Dow was down so much yesterday, but then the S&P hit new
Yeah.
highs.
The UNH, yeah.
Yeah, the
What do we
UNH
what do we
move,
take
yeah.
away from this, and what are
Yeah.
you doing in respect to the indices? Where's the opportunity?
I mean, yesterday was a pretty interesting day. You had the dollar getting absolutely smoked.
Annihilated.
I will get into that.
Metals keep mooning. Volatility has stayed kind of sticky, which I guess is interesting. But
1860, you bought some, what, 1830-ish or so?
what it got down to yesterday?
No, didn't you buy some the other day?
Yeah, at 1833, I think.
Which is 48 hours ago.
Yeah.
We're at highs and,
Sure.
and volatility kind of staying a little bit bit. I think it has more to do with some of the news that's coming out this week
Yeah, you
and
got
also the
FOMC,
earnings
yeah.
coming out.
Yeah.
So I think it's a little bit of a take the volatility upticking as the market's going higher with a little bit of a discount, but you're kind of reading in between the lines. We're trying to see something that maybe isn't there. Volatility staying bid at 1860.
Yeah.
Well, something we're getting today. The Fed is releasing its latest interest rate decision today. Here's what to expect. I hope you're hungry for nothing. That's basically what the Fed's going to give. No one's expecting the Fed to. There
Fed
we go.
Watch 2 is what, 97% or something?
Yeah, it's a 3%. There's a 3% chance. But the near-term stance likely will be one of patience as a series of cuts made last year work their way through the economy. Let's check in on bonds.
Bonds have just been holding steady between, a wide range of 114 to 116. If you've been watching the market and ask where are bonds trading, you'd say somewhere in the low 115 handle, and that's where they are, 115.04. They're actually down 13 ticks, but they're 115.04. That's pretty much the middle of the range.
Yeah.
Middle of a relatively tight range. Ivy ranking there is 11.
Yesterday, when I reported the news, the dollar had reached 4-month lows. This morning, as I report the news, we're now at 4-year lows. What? As President Trump spoke last night in Iowa, he was like, the economy is doing great. Everything's fine. But dear reader, things are not fine. The dollar continues to grapple with a crisis of confidence as it struggles near 4-year lows as the president brushed off its recent weakness. Let's talk about currencies.
Well, the euro, the yen, the euro, the pound, I haven't seen the yen yet. Let me take a look at it right now. Yen's unchanged. They're taking a breather this morning at around their recent highs, the dollar at around its recent lows. Catch a small little uptick right now in the dollar.
Oh, no.
Let me guess. Let me guess. Silver. Yes, silver.
Butchie, what did you do?
I don't know.
He sold silver. He's trying to figure out if he likes being a futures trader.
I don't like it.
Okay.
I don't like it.
I talked to him in the morning, like on the show, and he was flying high. And then I asked him a question yesterday in the afternoon, and he's like, "No, I fat fingered this, and now I'm in hell."
It was a great morning.
Yeah, that's what. Yeah,
it was a great morning. You scalped it wonderfully.
yeah, you made like $1,000.
A couple of grand. Yeah.
Then, at the end of our session,
when I said to him, "Okay, fly, little birdie."
Yeah,
fly.
No. As we're getting out of here, I sold him at 109. I was like, "That's the last one. I'm gonna hold this till 100." We sold off to like 105, and I'm looking at my P&L, and I'm like, "This isn't. Something's wrong here. Why?
P was not L-ing.
Why is this not bigger than it was?" And I actually had bought it instead of sold it. I fat fingered it and bought it, and now I'm out basically everything I scalped. So then I started chasing a little bit because you get a little pig-headed. I'm like,
you get twisted in the wind real quickly. Maybe you want to sell some calls now, but then I wanted to be short this product, long the product.
So then I start selling calls in SLV, and I'm a little pig-headed. And then I close it. It rallies. I wish I held it. So then I sell it again, and then you get, it's not good. So this one
took all night to try to cover it. Finally covers it. Sells it 40 cents higher. Yes.
So this is
primetime capitulation, is what this is.
Yeah.
Futures trading is a very difficult for option. I always thought that option traders should stick in their lane, and futures traders should stick in their lane. It's very hard to do both because when you trade. As an option trader, when you trade futures, your portfolio becomes very futures-centric, meaning your P&L all of a sudden becomes very heavy just on the futures side because they're so much bigger than your option position. Even in the portfolio, the totality of the portfolio, if you're running a little delta neutral, a little delta long, a little delta short, as soon as you put on that future in the same direction that you have your portfolio, because of course, your assumption hasn't changed because you're trading futures. You've just became 3, 4, or 5 times bigger on the futures side. And it's a very momentary product, meaning it's instant gratification, instant pain. So
staying in...
You'll learn.
More pain coming up.
Staying in that lane, gold yesterday vaulted past 5,200 to a new high. Gold's like, hold up, wait a minute. Let me get all up in it. They didn't want silver to take all the shine, so gold, new highs. Let's talk about gold.
Yeah, gold playing a little catch up to silver. Now it was at new highs yesterday too, but it was only up like half a percentage point as silver was up, 4 to 8 or 9 percentage points. Now yesterday you had gold kind of catching up 3 or 4%. It's up almost 4% this morning, $195 to 53 and change.
Ratio still at 46.
Ratio is still at 46, which is very low.
Yeah.
That's why that pairs trade is very heavy on silver. If silver, you're long 2 gold, short 1 silver. If you get this 10% move in silver to the downside, that ratio will get back into the 50s. But it's not right now. Not right now. 46 is near its lows. 45 and change, I think, is the lows.
Crazy.
What a time to be alive.
What a time to be alive.
What is your favorite way to play gold?
I mean, I think as the options go, I mean, GLD is probably the way to be now. As gold has become,
is it getting as much love from retail investors as SLV?
I don't think so. It's a lower price.
Yeah, I mean, SLV is $100. I was going to say sub $100. That was yesterday.
Yeah.
I know, but I just mean like the volume and like the amount of trades in SL. Like it's just breaking records. Like the number one traded. It's like beating equities. Like
Yeah, well, certainly beating equities. I mean, even the S&P's volume in the futures has been relatively light-ish as we've been making new highs. They're both trading pretty well. Silver has better. Again, not something I wouldn't have said last year, but you'll say this year. Silver has better markets than gold. SLV has better markets than GLD. I think if you're going to trade silver, I think SLV options are the way to trade over the future itself. I think the future is just too big when it's moving 10%.
Looking at you, Nikki.
a day. And when you're trading gold, you might want to look at the G/GC options over the GLD option. So it's kind of flip-flopped there. I think /GC has far superior markets on the option side than GLD.
Well, keeping it moving, U.S. dollar-backed crypto tokens known as stable coins could pull around $500 billion in deposits out of U.S. banks by the end of 2028. What? That comes from an estimate by Standard Chartered. That's hard to say. I forget that stable coins are a thing, but $500 billion, that seems like a large number.
You got Bitcoin just spot just under 90, futures at 90.
90,500 on the futures, I know we're cheering us along at 90,000. It's its range is probably high range 98, let's say maybe high range 95 if you throw out those the day that it was in over 95, but you got from 95 down to about 85-ish. We're sitting at 90 and no velocity to this. I mean, the IV rank in Bitcoin is low.
The crypto peeps got it all right.
Yes.
Dollar.
Yes.
Printing forever. Dollar going down. Asset inflation. They just have the wrong product. It hasn't gone anywhere.
Yep.
Fun fact, money launderers received at least $82 billion in cryptocurrency last year, up sharply from $10 billion that they netted in 2020.
What they do, like a public offering?
Driven in part by fast growth among Chinese-speaking groups, said blockchain researchers.
So they know who these money launderers are?
Oh, sure.
They're how much they're getting and
like,
how much taxes they owe and stuff like that?
They're like, there they go. And they're like, what are you going to do?
They can't stop them?
Go get Ryan Grace. This is my fear about Bitcoin. It's like if I own it, that I'm gonna just like wake up and it's just gonna be gone.
No. Not if you got your Tasty Trade account. That's why
I know.
They're talking about where is this in China?
No. I know. Well.
Well, you woke up and 3% of your cash was gone, and
with the dollar being
the dollar went down.
That's why I don't date. That's why I don't date anymore.
You basically own the most depreciating asset, which is the dollar.
Oh, I thought it was my youth. No. What is going on in Coinbase or IBIT this morning?
Coinbase, you would imagine, is going to catch a little bit of a bid. Coinbase 213 and change. Let's call it up $3, but it's really up more like 2.5. And IBIT is up about I'll say $1, but it's really up like 50 cents.
Yeah.
Apple, Meta, Microsoft, and Tesla report earnings this week after having shelled out billions on AI infrastructure in 2025. But investors are going to want to know, what did we get for our money? Last year, megacaps upped their CapEx several times to meet unfettered demand, and Wall Street expects another big year of spending from the giants. But the stakes are high this reporting season as worries about an AI bubble continue to get frothy. Like, what standard, if any, do you think these companies are going to be held to? Like, if Meta's like, we spent like $100 billion, like what do we get for that $100 billion?
I don't know. They'll
At the
invent
moment, I
something.
just don't think it matters.
It doesn't.
But when will it
doesn't.
matter? Like, when will they be held accountable?
I mean, these companies.
What do you mean by accountable?
Meta's going to print
Like, like reflected in the stock price, like performance.
They're at all-time highs.
No, that's what I'm saying, but they haven't delivered anything. So when is that going to?
Delivering all-time high stock prices. You mean that Apple has to come up with another color on their phone? I mean, it's all behind the scenes. Don't you know that, Bonetta?
Okay.
They fixed their infrastructure for a better experience for you. Come on.
Well, Anthropic reportedly upped their latest raise to $20 billion. They doubled the amount of VC funding they aim to raise. They make the popular AI Claude and the also equally popular Claude Code. Ever in your life, because I mean, you've been in this game longer, if you hear a company like doubling their ask to $20 billion, like, never mind like that they're worth multiples of that, but had you ever thought that it would be at some point a company's like, oh yeah, around, it's a casual 20 billion?
Yeah, well, you could see they're showing you. They got you by the balls there.
Yeah.
That's what they're doing in that
Pretty good,
picture.
yeah.
Yeah, so you should have known. You should have known.
Yeah.
I don't know what to say for that. I really don't.
But you've seen, like, I can't imagine the things you've seen, like the numbers and the valuations you've seen in terms of just like market.
Yeah, this
like,
is worse than milk being a nickel. There's no doubt about it. No doubt about it. There's no doubt about it.
The company is currently valued at $183 billion.
Sure.
Could be one of the hottest IPOs in 2026.
Yeah, so they're raising 10, 15%. This is no big
Yeah,
deal.
whatever.
This is
Nothing.
Nothing.
C3 AI, they have
Christmas party.
the best ticker and they're not capitalizing on it. Their ticker is literally AI, but it's C3 AI. They are the enterprise AI software provider is in talks to merge with privately held startup Automation Anywhere. If the deal materializes, Automation Anywhere would buy C3 AI and go public as a result. So do with that.
AI, the best symbol for a stock, ticker for a stock with the worst stock price. It did close at $12.60. It does look like it's up about $1.50.
Just under $2 billion company. If you're OpenAI or
AI, the symbol
Anthropic,
should be worth $2 billion.
Just buy the freaking thing. $2 billion? It's like you find that in a
Yeah.
couch cushion.
Sure.
Come on.
Sam Altman, where you at?
Yeah. I mean, that seems like a no-brainer.
Meta, which is reporting earnings after the bell, announced they had signed a deal with Gorilla Glass maker Corning for up to $6 billion over the next several years to help them provide fiber optic cables for their AI data centers. Again, talking to that CapEx and the spending, they're like, hey man, we're going to spend just $6 billion on dongles. What are your plans to trade Meta for earnings?
IB rank at 37, not bad. I mean, we were going to lean long last week when we talked about this. It was around $600, 600 and change, kind of on its butt. Now it's rallied about.
We wrote it up this way, but
We did. We did.
I don't know. If the market's going to go higher, Meta and Microsoft have to start it off.
Sure.
Agreed. I think that's got to be the move. I have Microsoft. I did a trade for Microsoft yesterday to play it up to like 500, which is right at the.
Microsoft looks just like Meta on its chart. You know, they both made lows around the same time, 440 and change in Microsoft. Now it's 480. It's up $1 this morning. Yeah. Different animal today than it was last week. So we'll have to see. Ivy rank of 42 and Microsoft's pretty good, but I agree with you. The market's going to sustain. You need Microsoft.
I mean, you even see it today. Like you have, the memory stocks. Seagate had earnings yesterday.
Oh yeah, STX.
And like a bunch of those stocks are going nuts. I mean, all the semiconductors. SMH is up $12 today. I mean,
SMH at SMH.
yeah, it's up 3%.
Shaking my head, yeah.
The market's kind of going nowhere. It's telling you that, you need something to light the fire for the next leg higher.
Seagate up $35, 10% move, almost 10% move.
It's up
LFG.
10x in a year. It's gone from 40 to 400. I mean, it's
Yeah, the start of 2025, it was a $100 stock.
yeah.
Bonkers.
It's over 400 this morning.
Pinterest, poor Pins. We never talk about Pins. They're laying off 15% of their workforce as part of an AI push. That sucks. The company says they're reallocating resource to roles and teams focused on artificial intelligence. The cuts are expected to be complete by the end of Pinterest's third quarter. Stock up tiny this morning.
Pins. You ever looked at it? Do you have a Pins?
I don't know how you could even spend a fraction of a second thinking about Pinterest in this market. It's, like
It is so pandemic. I will give you that.
Think
very
of the
pandemic.
soup recipes.
Yeah,
That's
there you go
true.
for soup
That's
recipes.
true.
That is true. There
Yeah.
you go. But I see. I'm not a soup.
Because I use
Not a maker
Pinterest
soup.
like for protein meals,
Yeah.
for crock pot recipes. I got an Instant Pot for
Yeah.
Christmas, and I was like, I don't know how to use this, so I got some Instant Pot recipes.
But Pinterest is going away too. I mean, like you want to buy something for, like I was looking at curtains. I ordered some curtains.
What have you become?
He's so
I use-
domestic.
I use ChatGPT. I plug it
You
in.
pregnant?
I put my curtains in my room. I mean, I don't even.
Oh yeah. You
I don't
can
need
see
Pinterest
it. Yeah.
to see what these look like in
Right.
some other room. I'm going to put them right in my own room.
Right.
I will tell you this. I have a friend, and she is a hairstylist, and she's so frustrated because people bring in pictures of hairstyles, and she's like, baby girl, that is AI. She's like, I, with all the tools at my disposal, cannot make you look like this. Like, this is AI.
It's almost like it's in
because
the
it's just like the
the Godfather movie. Like, look what they did to my son.
Yeah.
Yeah.
Exactly.
Make him pretty.
But it's
Yeah,
so
good.
frustrating, like makeup artists, hairstylists, they're like, we cannot, like, this is not reality.
Well, Pinterest, if you're a value trader, this is about as low as it has been this
Love
year.
value trading.
So 23.60, it's up about 30 cents, but you haven't missed anything. It started last year closer to, it got into the 40s. So it's 23 right now. It's been cut in half.
Hey, here's a company we don't talk about a ton, but Cloudflare, ticker NET. Their shares surged 14% yesterday as around social media buzz started to percolate around the Claude bot. It would be an AI agent, and that rekindled investor enthusiasm. We haven't talked about them. I don't know if it's a good trading.
Yeah, that was in my cybersecurity basket that we
Was
talked
it?
about a couple weeks ago. I sold puts there, and then the stock proceeded to go down about $15 straight against me, and it had that one-day move from like
$175 to
like-
$85.
to like 190, and I scratched that put, and then the next day it's up $15.
Ah,
To
But I also had
205,
CrowdStrike too, so I
Sure.
traded CrowdStrike to the upside. That was another one that I was looking at too. But
Yeah,
stocks are in play, I think. Next.
So, net, I haven't traded. It does have earnings February 10th. Markets are there's some volume in here, believe it or not, but the markets are not tradable in my opinion.
Okay.
Over $1 wide.
okay. Well, I just saw the headline and I was like, oh, I remember this stock. I was like, we just hadn't talked about it. Hey, Tesla set to report their earnings after the bell today, and industry observers are expecting the company to report troubling numbers showing that the EV maker is falling further behind Chinese EV maker BYD. The numbers are going to be ugly. Deliveries are going to be down. Margins are going to be compressed. EPS falling 40%. But
The head of Russian EV cars, I believe, behind Chinese.
But they also announced moves like they're ending their full self-drive software. They're making that a subscription model, but they're also getting into robotics and to like AI.
Stock's up $2, 432. SpaceX is coming up. Elon going to be the richest quadrillionaire ever to walk the face of this earth pretty soon.
Hooray.
432 in Tesla. IV rank of 8.
Yeah.
So bidirectional in there.
Ugh.
Not a premium selling product, in my opinion, even with the earnings after the close today.
Yeah.
Amazon is converting some of its fresh supermarkets and Amazon Go stores to Whole Foods location. They're like, look, we don't want to run a grocery store. This isn't working. Whole Foods deal with this. The plans to close its Fresh supermarkets and Go Convenience Marts. The plan is to close those locations and make them into Whole Foods. It marks the latest pivot in Amazon's nearly 2-decade effort to grab a bigger share of the grocery market. What are you doing at Amazon?
I
Had a
actually
big
was in
move
an
yesterday.
Amazon grocery fresh store.
You been in one?
I've been in one. Yeah, I have one not too far from the house. It's interesting. I don't know how I feel about it.
As an introvert, I loved it. You just throw everything in your
Yeah.
bag, you walk out that yawn,
Right. I love it at the
Yes.
It was I mean, it was a little disingenuous, I guess, when you found out that it was just like, cameras in the ceilings and
right, and then just like
some guy
customer
in
service
India.
people in
India.
India.
Yeah. It was
That's
a
fine, whatever.
Yeah.
The technology wasn't kind of as space age as
Yeah.
you thought it was, but
Yeah.
Anyway,
I will say it for like stadiums, it's the greatest thing ever. Like they have them at the United
They do.
Center and
They do.
at Soldier
Yeah.
where you just grab a beer and you
Yeah.
like,
Yeah.
walk out.
but that's just some kid in Elmwood Park.
Probably.
But it would be great at like airports or like they had it at
Yeah.
Union Station too. You
where you just grab
in a
and
rug,
go,
yeah.
you're out. It's good. And, I'm long Amazons.
okay, well, they're set to report earnings next week.
Yeah.
so-
246 up about $2 or so. Trading
Another
near the
one, I
higher
think
end
there's
of
some
the range.
catch up. I think there's some catch up there.
And again, this is another stock that was around 230. It didn't have the fall like Meta and Microsoft may have
Or
had,
Apple.
and rally back as much, but its chart looks exactly the same. The Mag 7 have been running in tandem with each other.
Yeah.
They still are.
Hey, interesting pricing dynamics are emerging. A trip in a Google Waymo robo-taxi still costs more on average than a comparable ride in a human-driven Uber or Lyft, but the gap is narrowing. That's according to new data published yesterday by Obi, a company that aggregates real-time pricing and pickup times. Two factors are working together. Waymo has lowered its pricing, at least in the San Francisco Bay Area, and Uber has raised their pricing. So it's getting closer and closer. So Google and Uber, look at those two stocks.
Uber unchanged, IV rank of 31 or so. It has earnings early in February. Google, one of the Mag 7, has its earnings around the same time, February 4th. Google, IV rank of 37. Google has just been straight up, not quite the hockey stick as you saw some of the other stocks that we've mentioned, some of the chip stocks,
Yeah.
but Google is going to be
Strong.
at new
Sure.
highs. It just does it a buck or two a day.
And if Google were to buy Uber, it would be Goober. In other news,
Which are good, by the way. Goobers are good.
Do
Goobers
they
like the
still make
peanut.
those, Boomer?
I don't know, but those were good. I mean, that was Goober and Raisinets was, if you were having Goober and Raisinets, you were at the movies.
What's
Yeah.
a goob? What's in a goober?
It was like, wasn't it a chocolate covered peanut?
Peanut. Yeah.
Oh,
You put 'em-
that sounds good.
You put it in the popcorn at the movie
Yes.
theater and it get kind of melted.
Yes.
So some of the chocolate would get on the
Popcorn.
and then you grab but then your hand was disgusting.
Sure.
Right.
Gross. The U.S. Senate Judiciary Committee said that its antitrust subcommittee is going to hold a hearing next week on the proposed tie-up between Netflix and Warner Brothers. The February 3rd hearing will examine the competitive impact of the proposed transaction. Netflix.
Another interesting one that I am long, and I feel like at some point it's going to all of a sudden just like kind of V-bottom back to where it was, but it's kind of in the doghouse.
Correlation of 0.41 has not been a 0.41 correlation over the last 6 months or so. July was $130. Today it's $85. It looks unchanged, maybe even down a dime this morning. Netflix is uncorrelated right now. If you're looking for something in your portfolio that doesn't have correlation to the market,
Yes.
you go to Netflix.
Yeah. It's hard to park cash there when things are moving 10% a day.
Hey, Chicago's United Center will be the first in the country to sell THC beverages. Let's go. Starting in early February, the rollout will be via a partnership with Green Thumb Industries. It is a first for a major U.S. arena. They will be selling Senorita and Rhythm THC drinks. I do not want to know how much they're going to charge you for these, but let's go.
Yeah, I don't know. Not my thing. Tried them.
I mean, it's great.
Have you tried them?
Not this particular brand, but I have tried THC
not this
drinks.
particular
Yes.
brand either,
Yeah.
yeah.
No.
Yeah, not my thing. I don't know how I feel about it.
No.
I won't ask you.
No, I'm not. This isn't my thing.
Yeah.
I like a cold beer at a game.
But I guess why not?
Sure.
I don't know.
Yeah, no hangover.
Yeah.
You do you. It's legal here, so like, let's go.
Yeah.
Hey, this.
Those taxes go to reduce my property taxes. That's what I'm wondering.
You were never seeing that money from this in your entire life. Are you kidding me?
And just like the funniest, like, what did you think was going to happen scenario? Diego Pavia's Senior Bowl measurements are official. He was listed at 6 feet on Vanderbilt's team website, but the short king is in fact a short king. Official measurement 5'9" and 7/8". I don't know why men think they can grift. Like, we have eyes. Like, we can, like, you can see that you are not.
He was listed as 6 foot?
On Vanderbilt's website, and in the Heisman thing, he was like, "Oh, I'm 6 feet," but you could see him standing next to Mendoza and like the other Heisman candidates.
The other
and they're
6 foot candidates,
right? Yeah, like, you're like, the math is not mathing. So just like, why? But I don't understand why you would lie about this, because it's something they're gonna measure your short ass. Like,
we've been lying about 6 or 7 or 8 inches our entire life, so why not? I mean, the kid is just trying to get, what is that?
Omaha.
Thank you, James.
Kid's trying to get 3 inches. I mean, we've been lying about
come
3 inches
on.
for a long time.
Nothing.
Nice, fine.
like, this doesn't even matter. Like, to me, like, he's still over half a foot taller than me. Like, he's like 8 inches taller than me still. Like,
I don't think that's his barometer, though.
I know. No, I know. But I was just like, I just didn't understand like where he thought this plan
Was
going. Right.
Yeah.
Like,
yeah.
okay.
Behind closed doors with the lights off and everything else like that, I get it, but not here.
Finally today for my viral video, Bat, are you a big dad joke guy? Do you like dad jokes, dad humor?
I try to say I have a good sense of humor. I don't know that I've been dad joked my entire life, but I don't know. Sure, I think so.
I love dad.
You got
joke.
one?
I love dad joke. Okay, yeah.
Okay.
To give you my favorite dad joke.
I'm ready.
This one kills when I meet the parents. Knock knock.
Who's there?
Dishes.
Dishes who?
Dishes Sean Connery.
That's good. That's good.
I love it.
Thank you. It's so good. But this one.
You almost couldn't get it out. You were
I
laughing
know,
so much at a
because I
time.
cracked myself up.
Because you
But
do a much better Sean
this
Connery
is
accent.
Sean Connery.
Yes.
Yes. You owe me money, Trebek. Well, finally, for my viral, I think I have a new dad joke to add to the repertoire. Watch this. Pretty good.
Dude, I asked for Sprite and they gave me clown juice.
I have to alert all the dads. All of them! It's the best dad joke yet!
The good one. That's a good one.
I'd never heard
Sprite
it.
and they gave me clown juice.
Not bad. Not
I
bad.
asked for Sprite and they gave me clown juice.
I'll be using it.
Alert all the dads.
Very good. Very good.
Good job out of you. Good job out of her. Good job out of everyone. Everybody gets a participation award. We're gonna take a quick 90-second break and come back. We got an option jive. We got confirm and send. We're gonna take a look at the market. We'll be back in 90 seconds. It's Tasty Live.
Also, if you're a DILF, call me.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Wednesday, January 28th. But before we do, let's take a quick look at the market. Even the S&Ps up $13. Says a lot, but let's look at what happened overnight. We're actually only, 10 or 13 points handles off of our lows, which would be unchanged for the day because last night the market was nothing but higher. Actually, even the S&Ps were almost 30 handles higher. They're 13, almost 14 handles higher right now. You can see here over the last 6 days or so, we've been straight up in the market. I mean, at some point, is it lulling you to sleep? Is it just the equity side of the market? I'll get to the metals and everything else like that in a minute, but just the equity market. It does seem like it's almost like a holiday week in its trade.
It's been that way.
Relatively light volume.
The whole year, pretty much. I mean, we've been relatively low.
Well, the year's only a month old, but sure.
I know, but for all of this year, it's been pretty low volume. I mean, we're talking about like 1 million contracts has kind of been the mark of liquidity.
You're talking about even the S&Ps at the end of the day.
Yeah.
Like on the future side.
It's been sort of a grind.
I do have to remind you that it was only about, about 2 weeks ago that we were 6,800 on the E-mini S&Ps. We're over 7,000 right now. We were it almost looked like
we were bouncing 68 to 69.50.
It almost looked like January was going to do what I've been saying or thought it was going to do all along, where it was going to finish lower than where it started the month. Is the way I thought. Now, they talk about January, the January effect. As January goes, that's how the whole year goes. I know it's the 28th. We still have time in this market, and in 2 or 3 days, you could be back down to 6,800. Although even the S&P's expected move in that time frame with everything that's going on is only about 70-ish handles, 78 handles to get to February 2nd. Volatility, you can see, is a little bit elevated. I know we haven't opened yet, but it's around $28. Yesterday, it was $19. It's been averaging, not averaging in a statistical way, but the way I've been looking at it, watching it, around $24 on the opening. So even the S&Ps, a little bit of volatility expansion up and around highs, a little unusual for that. NASDAQ up $201. Russell's been a little bit of an underperformer. It's been up every day the last 3 days, but you can see here last 3 days I had that big move down. It hasn't recovered yet. Only up around 9. And the Dow, which was down yesterday on the heels of UNH having a bad day for earnings. You can see here going from around 350 to around 280 and change. Up $2 today to 84 or so. That brings us to volatility, unchanged at 1860. You can see volatility catching a little bit here. Maybe it's because of some of the economic news that we have coming out, Fed decisions that we have coming out. Although earnings in Microsoft, Meta, Tesla, IBM. I mean, you have Starbucks yesterday, not in the same usually wouldn't mention Starbucks in the same breath as Meta, Microsoft, and the rest.
A little bit different.
No, but it's having a day like that, up around $6 now. It's up about $10. I think I saw it at $10. Did you too? Yeah, I saw it up. Yeah, we're around 105. It's 102 in change in Starbucks. Bitcoin over 90,000, 90,600. Kind of lost a little bit of its oomph. Look at the IV rank, relatively low at 10 here. I mean, you throw out the highs, you throw out the lows. It's around $90-ish. It's kind of the mean as you look across here since December in Bitcoin, finally catching a small little bit here. Ethereum up $14, moving in tandem with Bitcoin. Oil up almost $1. Look at oil here, man. It's gone from around, the mid to low. Let's call it mid 50s, 56.
We got the Armada with the discombobulators. They're outside Iran.
Yes, the same technology that they used the last time, allegedly.
Yeah.
I've been seeing the tweets.
So oil's going higher.
Oil does seem to be going higher, obviously, up 1.5% to 63 and change. Good IV rank of 54 in oil. So oil definitely a premium selling candidate. I think /CL is probably the product I would go to if I was looking to trade it on the option side. USO is up around $1. If you look at the March options in USO, they're decent too. You can see the volume, open interest here. The open interest on those, I'm not going to call them odd numbers because 76 is not an odd number, but the numbers that aren't the typical 75, 80, 85, you'll notice those have the most volume on them because they've been around the longest. They added those dollar-wide markets after expiration. So USO, decent product to trade too, I guess, with an IV rank of 54. I prefer CL anyway. Gold, we finally got to the metals. Look at this gold. The market's been up 6 or 7 days in a row. Gold has been up 6 or 7 days, but this is what I'm talking about when something's going higher.
Yeah.
Gold has gone higher over the last 6 or 7 days. When the market has marched higher, this has sprinted higher, just under 5,300. Got to 53. Now let's round up, 53.50, 53.45, really up 3.5%. Silver's been marching higher. No, it's been sprinting higher also, up 7.5%, 114 and change. When does it stop?
I don't know. It looked like yesterday we were going to get what I've been looking for is spot down, vol down, because you've had spot up, vol up on the way up. And it kind of exploded yesterday. Yesterday was
which is typical in commodities to have volatility up, market higher, spot higher, future higher.
I wouldn't call it typical to have 100% implied volatility on it.
No.
That would be a new occurrence.
Nothing's typical at 100% implied volatility.
And so I thought it felt like that was kind of the signal. You have this kind of blow off in volatility. You have this huge move. That's usually like the spot where it gets, toppy.
Yeah, you talk about 100% implied volatility or more. I mean, it's rising every day. That's the equivalent to like a medical stock coming out with an announcement if they've cured cancer.
Yes.
That's the type of volatility you have in the metals, which is not typical. It's not usually that news-driven event in volatility that you would get like you would in a medical stock as opposed to a metals stock. But yeah, silver volatility, as you said, IV rank, I'll go to SLV just to get a little bit better indication. 116 in change in there. That means volatility is as high as it's been ever in silver. So if you've sold any premium, which I thought would be a good play in silver.
You could do more today.
You could do more at better prices today. Watch your size. Nat gas down 4%, finally acting like nat gas should. 3.6 and change. It got higher than I ever thought it would get. Nat gas is a hard product to trade, in my opinion, whether it be on the option side or the future side. Corn, wheat, and soybeans all catching a little bit of a bid here. You can see they're off of their lows in wheat, off their lows in soybeans, and off of their lows in corn. But I think all those commodities are taking a backseat to the other commodities and chip stocks and the rest of the market. You ready to go to a little bit of confirm and send on this Wednesday, January 28th? Let's do it, my friend. Wednesday, January 28th, confirm and send, where we go to you you, our viewers, thank you for participating, sending in the emails that we can put up here and hopefully help everybody. I mean, if you have the question, everybody has the question, continue to send them. We appreciate it.
Yes.
What do you do with an earnings trade that really doesn't move one way or the other after earnings, but the volatility drops? Do you keep the position and give it time, or do you close? So let's give it some context behind this, between the lines, because usually if you sell premium in an earnings play and it doesn't move, it's going to be a winning trade. So let's say you went directional and you sold a little premium here. You had defined risk, so you don't really benefit too much from that volatility contraction. Now you've got a defined risk trade on, whether it be an iron condor or one side or the other. What do you do with that trade after earnings?
I think we're pretty mechanical with earnings, and it's especially with short premium trades. If you're selling strangles or iron condors, you're out. You're out after the first 15 to 30 minutes of the open. I mean, that's just kind of how it is. Sometimes holding it would have netted you a couple more dollars. Sometimes holding it, would have given up your profits. Like that's just kind of how they run. And in reference to that and the 50-50 kind of aspect of earnings trades, the instant pain, instant gain, our Research Corner segment that we do every Monday that Kai puts together for us, every single earnings season, it ends up being 50-50. In terms of up, down, the net move is basically zero.
Relatively speaking, 49-51, 52-48, but it's not like 80-20.
Yes, they're right there. So, overall, the directional assumption trades, those either work or they don't most of the time. With the short premium trades, if you get that vol contraction and it's an inside move, you're taking the money and running. It's kind of... I try not to overthink it. Like I'm not looking, and I'm never looking on any trade to get every piece of the premium that you're selling. It's always managing the trade, because there's also the aspect of opportunity costs. You're holding this position to make X amount, where you could put that into a new trade in another earnings trade or in something that has higher implied volatility. I mean, there's always that cost as well that I don't think a lot of people think about. Everybody thinks about, I want to, it was a great trade. I don't want to close it and leave this 50 cents on the table. But that 50 cents is costing you $1 or $2.
Opportunity cost somewhere else with that money.
Trade.
Yeah, 100%. I don't think I can add any more. And a really short answer, I'd probably look to close it. That would be typically my first way to go. I did the earnings trade. It worked or it didn't work. And I'm trying to just close it. I'm going to use my money someplace else. As you said, give me the opportunity cost. Next question, please.
How does a falling dollar affect the market? Is it bearish or bullish indicator?
Well, I mean, obviously I don't know, because nobody knows, because we've had a falling dollar. We've had a huge falling dollar lately. Yes. I mean, decade lows in the dollar price. Usually that would be inflationary. That would be good for gold. And metals like gold and silver, assets, which have been climbing not just since this recent move in the dollar, but months before that. So now, sometime in the future, if the market ever has a downtick, somebody's going to come on X or Twitter or something else like that and say, "See, it was set up for this." But it's been like this for a year. So you could have been, or more. You could have been, you would have been early, obviously, if we ever get a down move of any type of magnitude, 5, 10, 15, 20% in the market. And then you will be talking about how the cards were on the table, it was easy to see kind of thing. But it means, obviously, it means very little right now to this market that we have.
Sure. Yeah. Yeah, no,
I mean, so if you
there are pockets, obviously the currencies themselves are moving significantly. In metals, I think you can put some of that into the metals move as well. Yeah.
So let's play the flip side and not be a genius here for a moment. Okay, let's just assume for a second that the market keeps its footing and its ground. And let's just say for a moment here that contrarian role, that the dollar is at or around its recent lows for decades, and we catch a bid in the dollar. Does that mean, forget about what the market's going to do, what's a better play here? Because that's what I need to figure out, for my own portfolio. What's a better play here? Do I buy the equities at higher highs going higher, get that delta? Or do I think the metals at highs, if the dollar is going higher, that the metals are going to go lower? Do I get a more of a velocity to move to the downside? That's what you have to figure out, or at least play for yourself.
Yeah, the trade is harder to.
The trade is not what the effect is to the market. It's like, what can I do with the market that we have today? I don't know what the future is going to bring, but I know what I can see in front of me today. So how do I benefit from that?
Yeah. I mean, just from a general, like, you think of dollars. If dollars are less valuable, it makes assets in general more expensive, right? For every unit of dollars. So if you have $100 and it goes down to $98 in value, to purchase whatever you're purchasing is more expensive. And so, assets go up. And so that applies to metals and stocks and real estate. Things go up. And so if you own those things, they go up, and that's, good for if you own things.
That's correct. Good one out of you. Next one, please. I believe that's
we did that
same one. There you go. Do you have a target amount of profit you look to make each day, or do you just focus on theta?
It depends if I'm long or short silver futures.
So you're not lying.
Yeah, sometimes when I'm too heavy on my short silver futures, I pray to the heavens and whoever is listening to bail me out.
Or whoever will listen, right? Yeah. I mean, anybody and everyone
was forsaken me this to start this year. But I think it's hard when you're trading and you are an active trader and you have 3 pages of positions to hyper focus on a specific value or a specific, I don't hyper focus on my theta number. I don't hyper focus on the exact P&L day to day. I try to be a little bit nimble and things that are working, you go and you take your profits, or you reduce, you change your position, reduce delta exposure. I just try to take it day by day. I think the more you get, if you get too granular, you get stuck. And I think a lot of people get stuck in that. They have the spreadsheets and the journal entries and all these things, and then you end up kind of just missing the moves and what's happening in the market.
You miss the big picture, I think.
You miss the big picture, and it's too slow.
What were you going to say? What were you going to say? You missed the big picture. Yes, you're 100% correct. I think that's really what it comes down to. You miss the big picture. I'm not looking for any individual, how much money I make or lose per trade. I mean, if you look at it, your buying power, the more buying power you're using, the more you should be making on that trade. And the lower the amount of buying power, the lower your expectations should be on that trade.
Yeah.
Next question, please. Is there a maximum amount of capital you'll use in one day on earnings? One day like today, there are a few bigger names reporting and I want to trade them. Even if I cut my size by half, I would trade all the earnings I want to trade. I'll be using a lot of capital in total relative to the way they normally do it. Would you cap yourself on total capital used, or do you not worry about IVR is high?
I think this is another kind of over analysis, because you're trying, you want everything. You want to trade them all. I want to trade every single one of them, and you got limited capital. Everybody has a capital limitation at some number.
Sure, one investor's floor is another investor's ceiling.
You can't be in every trade. Like you just can't. So I think in this situation, look for the stocks that you're most interested in trading generally, whether you have a directional exposure or directional assumption or not. Like I'm bullish on Meta and Microsoft. If I had to pick out of the 10, those are the 2 that I'm gonna allocate the capital towards, because I have a directional assumption, and then you go from there. You figure out if you want to do the short put spreads or call diagonal spread, or you want to lean a little bit bullish with an iron condor. Those are all kind of subjective, decisions. But ultimately, I think that's you got to pick kind of the amount that fit your capital limitations, and then go to the things that we trade around. Highest volatility can be a deciding factor. Most liquid markets can be a deciding factor. If you have a directional assumption, that can be a deciding factor. That's just kind of how you have to approach it.
Yeah, totally agree. I don't think
can't be everywhere.
Can't be everywhere. Size matters.
Yeah.
Earnings plays are exactly what we've said they are, all long 50-50 shot basically on direction. If you want to trade them all and you usually use, let's say, a limited amount of money, $1,000 on per trade, you're going to have to be very tight with a defined risk trade if you want to trade them all. And that's just the nature of the business. I'd rather you kind of pick the one that you like, you did your analysis on, everything else like that, and go a little bit, to allocate your money there as opposed to trying to sprinkle the infield. That would be my recommendation, I guess. We'll take a quick 90-second break and come back. We got much more Tasty Live coming up after this with Option Jive, then the opening bell. Back in 90 seconds, it's Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's Option Jive. Nicky, that's right. It is time for an Option Jive as even the S&Ps, they're about as low as I've seen them all
crashing
all night, up $10.75. NASDAQ up 173 and the Russell up 8. The lone bucker is the Dow down 61 and volatility up 6 cents. Bonds down 16 on a percentage basis. Silver still your lead in the clubhouse, 113.67.
You think today is an SPX day? Like an Iron Condor day? Because you got Jay Powell, well, that's last hour of the day.
Yeah.
You got to be careful of that, but you got to think for most of the session up until then, you kind of just chop and go nowhere.
From our research, that seems to be the way it goes. So maybe we do something in SPX.
We try and load that up.
Listen, if you don't have expected move that's $19 this morning and it's in the 20s, I think you can do something. If you got an expected move that's low like yesterday, $19 and change, I think it's a hard way to make a buck. But we'll see how the market opens. Right now you got about a $28 expected move, so you're looks like it'll be on target.
Yeah. I think that's something we can try and do.
Option Jive. What are we talking about today?
A very basic one. We're going to be this is one that you can send to your friend that hasn't traded an option yet, that wants just a quick little overview of what exactly we do here. So let's do it.
Ready.
So trading options gives us opportunity to still make money, even if the market trends sideways or even slightly against our directional assumption. The last couple months have been pretty good for short premium.
Yes.
We've gone higher. It's been a grind higher, but it's been mostly sideways for 4 or 5 months here.
Yes.
I mean, for the most part, you've had a little bit of two-sided action, not like a face ripper like we're seeing in the metals here.
No.
Markets like these, knowing how to make money in other ways besides just being long is very helpful. A lot of people are just statically long stocks, and that's it. It's very binary. Up is good, down is bad. Options give you a little bit of a way to kind of play a different set of outcomes than most people are stuck with.
True.
So when we talk about buying and holding, an asset, your P&L is determined and depends entirely on the change in the price of the underlying. This makes the profit for long or short underlying strategies very binary and unpredictable. I mean, when you are buying stock, it's really only good when the stock goes up. That's it. That's all you got.
It's pretty simple. That's the simplest of simple.
Yes.
Right? I mean, stock goes. If you buy stock, you want it to go higher.
Yeah. So
hard to argue with anything there.
The difference, though, when you're trading options, it changes because you have a little bit more that you can kind of play towards. So on the next side here, when we talk about kind of the variables that you can play for, when trading options, changes in underlying implied volatility in the passage of time also contribute to the profit potential of a strategy and make your P&L more diverse over time. So, one of the things with option trading, and we talk about this a lot, selling puts is a directional trade in that you ideally want the stock to go up, but you don't necessarily need it to go up. You have other tools in the toolbox here. The directional move helps you. You sell puts, stock goes up, that's a directional move in your favor, but you're also playing for implied volatility. So if the stock goes up, you typically see volatility contract. That also goes in your favor. Sometimes when the stock goes, kind of chop sideways and the stock goes maybe slightly lower, volatility contracts as well. And that can help you even though you're long delta. These three aspects are what you're looking for in pretty much any trade that you put on. And the ideal situation is that 2 of these is going to go in your favor. So let's use the short put as an example. You sell a put and the stock goes down. Let's say it goes down slightly. That goes against your delta, so that one's not helping you. Implied volatility ideally stays flat or maybe goes down a little bit, or time passes. Like one of these is going to kind of be in your favor, and ideally you have 1, if not 2 of these working in your favor. That's how options become profitable. I mean, that's very simply, 2 of these have worked for you, 1 of them works against you, you're probably profitable on that trade. If only 1 of them works and 2 of them don't work, you're probably a scratch or a losing trade.
Yes.
I mean, that's the very basic of option trading. And this little pie chart is binary 50-50 for a stock trader. That is the difference. That is the most basic difference in options versus stock. In options, you have 3, if not multiple ways. When you get into the more you talk about like correlations and beta, and when your strategy diversification, when you talk about diagonal spreads or calendars, when you look at your portfolio as a whole, you have, short delta here, long delta here, neutral delta here. It all kind of gives you a little bit more to this pie chart than just these 3 things. But when you think of just naked put versus long stock, naked put, you have 3 ways that you can benefit from. Just long stock, it's binary. It's one or the other.
That's correct.
And that's basically it.
So you'd say it takes a little bit of intelligence, an intelligent trade as opposed to just trying to be long or short.
Sure. I mean, look at us. It's not like we're the most intelligent ones and we could do it. We
Intelligence
figured it
is
out
relative. Yes.
Yeah, it's all relative. So just expanding on this more, for example, even if an underlying price is stagnant over the course of a trade, there's still the potential to profit from other variables. You have time decay, IV contraction. It is not uncommon, despite the market that we are in, for stocks to go sideways for a period of time. And so, options provide you that ability to profit from that sort of trade as well. Whereas, with stock, you just don't have that opportunity. You got to be directionally correct.
Good. Don't have too much to add to the takeaways, and we can take it away and get ready for the opening bell.
Yes, a couple takeaways. So trading options offers clear opportunities using short premium that do not require directional bias to be correct. So the big thing with options is that you benefit from more than just the directional move. When trading short premium strategies, there is the potential to profit from not only the price movement of the underlying, but also the changes in implied volatility and time decay. It's obviously we love trading options, and that's our bread and butter. But I think everybody, whether you're an active trader or not, can benefit from adding options to your trading in some sort of capacity. Covered calls, short puts spreads, as a way to get a little bit of leveraged upside to a position that you're bullish. Everybody should be using options.
I 100% agree and concur. And if you thought the Dow was going to be your help to the downside, it just turned green. Actually, it's down $4 right now. But we're going to take a quick 90.
How can we do with the down days? They're just so painful. We should just never have them again.
We should outlaw them. We're going to take a quick 90-second break and come back. We got the opening bell next. Back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with tastytrade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. You know what that means. In about 4 minutes, the opening bell will be imminent. Even the S&Ps are up 13.25, about where they've been since we've been on the show. Not too much movement there. NASDAQ up 177, in the middle of its range, a little bit higher than last time I quoted it. Russell up 9. The Dow is definitely higher than the last time I quoted it. Dow was red by about 60 or 70 points. It's up 13. There's a small moves in the Dow. Remember, it's a $49,000 index or product. Volatility in by 8 cents, trading close to 1860. These are small moves that we're talking about here, just about in everything. Bonds have been holding steady at 115.02. Notes hanging in there. I know we did a great segment yesterday with the CME on bonds and notes. If you missed that, you should check it out. All about the notional value, how they DV01. I mean, we went into the weeds with some of the bond and note products. You should check it out, especially if you're new or thinking about trading bonds and notes. You think interest rates are interesting. You should check that out. Bitcoin up 600 and change to 90,400. Ethereum doing a little bit of the opposite, basically unchanged at 3,030 and change. Oil up 78 cents, about 40 cents off of its new highs that it recently made, back to where it was in early October or so. Gold up $181 to 53 and change, about $45 off of its highs, significantly off of its lows by $100, which would be new closing highs, basically anywhere in that range. Silver up $7.80. I know you just sold them at 114 or so. They've been hanging out right here between 113.50 and 114.10 or so, up around 7%. Big mover there. Nat gas down 9 cents off of its lows by around 14 cents off of its highs by about 10 cents, down 2.5%. Corn, wheat, and soybeans all a little bit higher. Starbucks for earnings was up around $10. Last time I looked, it was up around $8. It looks like it's up around $7-ish to 102 and change. You got Microsoft, which is up around $1 pre-market. Meta, which is down small. Is it still down 2? I think it's
basically unchanged.
Basically unchanged.
Yeah, up $1.
Yeah, up $1 now. Meta up $1. Tesla up small also for earnings. Tesla 431. LRCX is another one that you might look
at. Up like $10.
Yeah, just like $10. It was up like $10. Now
it was up $10.
Now it's only up like $2. Yeah. And IBM up like $1 or so. So you've got some stocks that are.
I mean, things are moving. They're moving $5 a second on some of these things.
We have to get used to this type of market because
it's been like this for 5 years. Since COVID, I would say.
Yeah, I mean, the numbers have just gotten bigger.
How insane the COVID. We would be up. A Meta would be up $30 every single day. It was every day. You couldn't miss.
Yeah, you couldn't miss. Yeah,
that's what this is right now.
And what did we do after that? We continued going higher too. So I mean, we continue going higher again here. Do we just ever not have it? It's getting kind of boring.
I know.
And when you get bored, that's when you have to worry.
Yeah.
And you have to worry not only about what the market
complacency,
the complacency. When you start to get complacent, you start letting things that go against you run too far. You don't stay mechanical. So don't lose your discipline and don't lose your focus in this market. But just buy everything you can because we just go higher, right? It's just the way to do it.
Easy peasy.
That's just the way. Except for Hood, which I did for my option trades today. Hood, when it goes higher, it goes up by 10 cents now. And when it goes lower, it goes down by dollars. Mm-hmm. There's your opening bell. We'll get a quick little look at what's going on to the downside here. Carvana down small. Boeing down $1 and change. Palantir down $1 and change. Here we got a little bit more updated numbers here. To the upside, SanDisk up $24 over 500. SMH, you mentioned, that's the semiconductors. Semiconductors up 1%, $8. Up almost 2%, $8. A big move in SMH. Gold up $7 and change. AVGO up $6. Crowd up $5 or $6. Come on, even the Qs are up $4.50 or so. MSTR up 3.5. Coin up 2.5 with Bitcoin trading over $90,000. Has not been able to hold that. We'll see what happens today. Boeing after earnings down $2. That was yesterday. Day before it had earnings. Boeing down $2. PDD down $1 and change. Palantir already mentioned. Small moves to the downside. GM down 60 cents. What do you think here, son?
You want to try and put that SPX in?
Sure. If you're going to do it, let's take a look at what the expected move in ES is. ES is $26 and change. Definitely much better. $19 expected move yesterday. So you're looking at SPX 0-day. What are you looking to do here?
The 20 delta, and we go like 15 points wide, 10 points wide.
Okay, 15 points wide. Try it. What do you want to do? What's your put side? 69.60. It depends on where you're.
Yeah, sure.
69.60, 45.
Oh, go to the 65. Go a little. Fine. Go to the 20. Yeah, 20, 10. Yeah.
You want to do $20 wide or 15?
15. Yeah.
15?
Yeah.
Okay, 50, 65 on one side, and on the other side, you want to go to the 70, 25?
Yeah.
70, 25, 40?
Yeah.
I got around $4.60 on that trade to be mid-price. Let's see where we go in here.
Put that.
I did put it in for you. I'm trying to cancel and replace it here. Mid-price is going down as quickly as we can. What do you think the mid-price is on that trade right now? Even the S&P's up 18. They haven't moved $1.
That'll be like 4. Yeah, you're at 450. It's moving up.
Yeah, it was 460 a moment ago. I'm in at 450. I haven't gotten filled yet. I think I just got filled.
No, that was my NVIDIA.
Oh, that was your NVIDIA. No, I did
not. Had a diagonal spread that
I did not get filled.
Stock up $3 and change here, so I just took the money and ran.
At 450, I'm going to go into 445 and let it sit and see if we get filled there. If we don't
trying to get. There you go.
445. Started at 460 and just walked it down. Even the S&Ps really haven't moved. They're up $18. Maybe you can get 450 if you work it a little bit there.
I was trying to work in order to close out of this circle. Big lizard-ish. We did the straddle with the upside wing.
Sure, it's up $2, right? You want it to be higher.
Market's kind of stinking. That stock stinks.
Yeah, in February, it's more than stinks. They stink bad.
Ooh, got a little scoopy in UNH, the devil of the company.
UNH had earnings the other day. You tried to buy a little bit of a downtick there. You got directionally right there. It's up about $4.60. You put on, you just sold a naked put right in the $5 handle, 5 and change.
Yeah, 540-ish or something like that.
You bought it back at 420. Pure directional trade, just trying to, hoping volatility stayed bid yesterday, comes down today.
Yeah. I got the, I traded the USAR, covered call there. I just closed the call. So I got the stock going into earnings next week. I mean, come on, we got to pump those metals, right? I mean, those are the rarest of the metals.
It does say rare earth.
It
is down $1.40. So what'd you do here? You put on a directional bias to the upside, right? Stock's been going a little bit lower.
I bought stock and I sold a short-term call into earnings. The stock is actually down about 3 or 4. Oh, I got
your MXP.
I took like $100 out of that.
Yeah, did that.
Those markets stink, so you got to be careful.
Yeah, you're talking about with Ryan. Is that MXP?
I did this on my own.
I know, but he introduced you to the product, right?
Yes.
Yes. Yeah.
Yes. The futures are not that liquid.
They are not that liquid. / MXP. You're talking about micro futures on XRP.
Yeah.
So you bought them, you sold them out.
Yes.
Just to close the trade. Good job.
Oh no, silver at highs.
Silver 114.60. You had about $500 profit. About
I was there.
Loss.
And they just take it right away. They take it. They don't. There's no quit.
My buddy Christopher just told me total volume in SLV and ZSL were 16% of the New York Stock Exchange trading on Tuesday, January. So 16% was in silver. Did you ever?
I mean, that's how this market has been, though. Like for a couple years now, there's one or two names that take the attention, and that's it. I mean, you've seen we're at highs on the E-minis, but for the most part, it's not moving anywhere near what you're seeing underneath the surface. You got Micron up another $15 today. Like, it's up 4% from yesterday.
Sure. Intel with the chip stocks catching a bid again. America trading just under $48. It got as high as $48.07 this morning. Intel by the dippy.
Yeah.
What else you got, my friend? I know you're trying to trade your circle, put it in at your price.
Put that one in. Have anything that's...
E-mini S&Ps are down about $3 since the opening. You good to go?
Yeah, I was looking at Intel. We had puts, and then I put the call ratio on, so we're basically a scratch there. I'm wondering if we just take that money and run, but I don't know. I think
take the money and run.
Yeah, you're right at the money. I mean, oh, did you put that SPX in?
Yeah, I just
closing.
Just put in for
like that
20ish. What is it? Almost 20%. Maybe I'll change the pricing. I just put it in to see what was going on. So I could see the pricing move in my my working orders there.
Yeah, I'm good to go.
Awesome. Let's take a quick 90-second break. Not too much movement. Dow catching a bit here. Volatility up 6 cents. Trying to see what's moving around here. Let's take a look before we do and get to our first what's your assumption, where we go to your trades. We do appreciate that. Let's see what some of the earning stocks are doing this morning. Microsoft looks like it's down around 50 cents. IV rank of 42 seems to be expanding. Meta is down around 70 cents after having a nice rally over the last week or two. IV rank seems to be expanding, but 36 relatively low. Tesla up $4, $4.35 and change. Volatility is anemic in there, so not really a premium selling so far of all the ones that we looked at. LRCX, IV rank of 49 is quite good, basically unchanged. Next thing I would do in LRCX is look at the options, see how liquid they are. They are not that liquid, even in the 0-day, which would have the most liquidity. So if you're looking to do something in LRCX, it's probably a defined risk trade with a directional bias to it. IBM, unchanged, IV rank of 42. Let's go into IBM just to show you what's going on here. And you look here, you got dollar-wide markets in IBM too, equally as bad as LRCX. So those two would be my two fringe traders. Fringe trades for earnings for that person who wrote in the email talking about what do you trade. Microsoft, Meta, and Tesla would be the next one. And then from there, I'd probably pick my poison from one or two of those, probably not doing all three. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got what's your assumption?
That's right. That's
ideas,
right.
baby.
That's
We
right.
need 'em.
Trade
I
ideas.
need something good because I stink.
And we'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the to the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this, what's your assumption? I think your timing was a little better than mine on that one.
Yeah, you were a little early.
It's a little premature.
Okay. A little jumpy.
All
right.
Even the S&P's up 19. What are you thinking here?
Little Baba.
Oh.
I also took off the calls I had.
Closing Baba, closing Apple.
Yeah.
Closing MXP. Closing USAR, but you have a directional bias. Closing UNH.
Yeah.
Opening SPX. That's the only trade that we've done so far today.
Yeah, what's that one at? Are we close? Are we on the
$4? It looks like it's trading around 405, maybe.
All right. What'd you put the GTC at?
375. I don't know.
I like it. I think that's good. I think that's a good mark.
I don't know.
Yeah. We'll see where we're at after cherry picks with TP.
Yes.
And that can kind of dictate, like, if we're at like 60 or 65 cents, maybe we just take the money and run.
You're going. And what if it's trading at $5? Sold at 445. Let's trade at 550.
Then I just blame you for the $50.
Perfect.
Yeah, but that has been
nothing pales in comparison to what you're doing in silver. So let's get to
I can't be worse. I can't be any worse.
Get to what's your assumption.
I'm gonna be a hero.
You're a hero. Yeah, heroes get
taken out to the
statues for their hero-ness. Yeah. All right, what goes on next? Let's go. What's your assumption? What's our first assumption here? Tesla bullish for earnings. Mike in New York, thank you for participating.
The IV does look terrible. Okay, how do I play this if I'm not bearish? So I
probably have a diagonal spread on there.
That's what I have. I did a crab trade, which is just a calendarized ratio. So I did the 475 in March. I'm long that. And I sold 2 of the 500s against it. I bought the wing at 550.
Mm-hmm.
So you actually have a little bit of upside risk, like tail type risk. But that I don't want to sell puts here because volatility is super low. It has not been one of the loved names recently. So
it's up $6 today. I hope you did this yesterday when you talked about it. I mean, I'm talking about Mike, not you.
Yeah, I've had this on. I mean, I'm basically a scratch on this trade. So
yeah. So here's another question. Go back to the confirm and sends. Do you close what you have on and put on an earnings trade, or do you keep what you have on in the Feb March?
I'm going to keep it. I
tend to agree with you. Ivy rank 80 instead of 8. Maybe you look to do something with the directional bias that you have in the front month or the weekly options, as opposed to March with 50 days and February with 23 days.
Yeah. So
totally agree.
I'm going to hold, but I agree with you. It's a tough one with where volatility is. It's a tough one to be trading naked.
Yep.
Like, the puts, you used to sell them at $15, they're at $5. And that's, you got to move that capital elsewhere, I think.
Very good. Very good. Totally agree with you. Mike, we're with you, but we can't do this one. We're going to go to Dave.
We have some long delta there.
We do. We do. Yeah. Dave, Fargo, cold in there. Ooh, cold over there.
Probably, I don't know. We're pretty cold. The lake effect is the differentiator for us, which you don't believe in for some reason.
Science.
Yeah, the science. You're
science did me wrong. EWZ neutral in March. Selling the 35.42 March strangle. Ivy ranks high. You are right, Dave. It does rank high.
Look at this move.
In Brazil.
33 to 38 in a week.
Yeah, since the middle of the month.
It's like where we tariffed South Korea, and the stock is now up about, let's call it 10% EWY in 2 days.
Yeah. Relatively so high Ivy rank 52, relatively IV monthly 33. Like it's a $30 some odd product, so you go to the 30 delta options, or you're looking at under $1 is what I'm trying to say here. You're not getting dollars for stuff, but everything is relative. You got a $3 expected move in the next 50 days. You've moved $6 in the last 15.
Yeah.
What do you think about this trade?
Oh, I don't love this.
Yeah.
I mean, 33% implied volatility. You probably had about 100 or like 50% implied volatility, 60, 70% realized volatility, I should say, over the last week. So implied is certainly, it's on the higher end of where it has been historically, but you've seen a huge move in this ETF.
So if we go, can I show you something?
Yeah.
If we go further in time, forget about February, 45 days being optimal. You look at March options with 51. Those would be the ones that you look at. You've got good markets, 3, 4, 5 cents wide. If you go to April, hear me out here, 79 days out, you've got the same type markets, 3, 4, maybe 6 cents wide, decent size markets. You could put on your directional, and we would probably be, I'm looking at a little bit of a bearish trade here. So maybe a little bit of bearish delta trade in EWZ between March and April. The last thing I'd have to look at is the implied volatility, both around 33. So you're not doing any vol differential between the two, not advantageous having March higher and not having it bad, March lower there. So maybe just a diagonal spread on the put side if you want to go directional as opposed to neutral. If you wanted to go neutral, you can do a calendar spread.
Yeah. What do you think about just doing like a 40 strike calendar?
You could certainly do that.
You basically look at it like
40 strike would be a little bit bullish.
Are you thinking? Yeah. So you want to do a little bit bearish?
What
about we do them both?
You could do a double calendar spread. Yeah, you certainly could.
I always poo-poo the double calendar.
Me too.
Because you're kind of trading for everything all at once.
Yeah, it's very hard to do. CRL. Look at you.
Bye. See ya. I'm happy to have that one gone.
You're happy to be out of that trade, right?
That is a dog of a stock.
Market's not great in there. Oh, you put that in 50, 60 cents higher than where it was trading. So, 56 cents lower than where it was trading. So you really weighted it out. So you went in at your price.
Yeah.
A good one. EWZ.
Okay, this could be this trade. It might not move for the next 40 days. I'm thinking we do the short strikes, the 35.42, but we do it the double calendar.
Okay.
And we just buy the 35 and the 42 in April It's a 66-cent credit. You basically look at this like, okay, we chop around. I got a free tail for the next 30 days.
Fine. Let's do it. IV rank of 55 is good, but like we said, 30 some odd dollar stock with 30 some odd implied volatility at its highs. Hard for us to play this neutral after moving $6.
When I say this is a Johnny trade,
this is about as Johnny as you get. This is too bad it's not Johnny trades, because this would be the Johnniest of Johnny trades. This would be Johnny with an IE.
This is paint drying. This is literally paint drying. I had to do it a couple times just to wet my whistle here.
Yeah, so you can, you've
it's a
got
67-cent debit.
69 cents. Yeah, you're really looking at, one time you got 60 some odd dollars worth of risk.
Yeah.
It's going to be worth something.
Yeah, it's going to
so
be
you
worth
want to say it's 30 cents worth of risk, 35 cents worth of risk?
Yeah,
per contract. So you do it a couple of times. Yeah. I agree with you.
So, all right. Dave, I have not traded EWZ in quite some time. I think EWZ had one of those weird, like, special dividends that kind of.
You
was
can
it EWZ. Or
I don't know, because the option strikes are the same. Usually, if you get a weird dividend thing, you get some sort of 26.75 strike. I don't see those. Maybe my memory.
I think this was like once upon a time. I'm thinking like years back.
Could be. Could be. Next one, please. We're looking at Intel bullish. Wow, I hope you did this yesterday too.
Yeah.
Anything that you did bullish, I hope you did it yesterday. It seems like everything just goes higher. Catching the falling knife here, I don't know about that. Thinking Intel got oversold after earnings, you're right. Bullish diagonal call spread, you're right, Jeff. Good call out of you, my friend. Closed at 42 and change 2 or 3 days ago, 2 days ago. Up $4, closed at 44.
I'm right here. I mean, I missed this, Jeff. I wish I had this yesterday. And congrats on your wealth, me lord. But I'm wrapped around right here. I'm in March. Synthetically, I'm short like the 45-50 strangle, but it's more so like a straddle right here. This is the perfect spot if we just kind of sit here for a little.
Perfect spot.
The perfect spot.
How many times have I heard that in my life? The perfect spot. All right, good on you. So we're going to abstain.
But we have it. So like,
pulling for you.
Consider this a win here.
Definitely pulling for you.
Yes.
Next one, please. Meta, they're hitting us for the earnings here. Meta was down small pre-market. It's up $2.50 now. Can't keep a good Meta down. Trading $6.75, up $2.44. Neutral earnings play. Betting it won't fill that $7.50 gap. Expected move for earnings is $43, which gets you to about at this point around $7.20, $7.25 or so, but stays above the 600 recent lows. Tony in Bend, Oregon, what do you think here? He hasn't earnings play. You'd be looking at the January options. IV rank at 36 is pretty good. $43 expected move. Markets are decent in Meta. What do you think here for an earnings play? Wants to go neutral.
I kind of lean a little bit long here. I'm interested in Meta.
Okay, you're interested.
I'm interested in Meta. I'm interested in Microsoft. I think there's a catch-up.
Euro.
Oh, Euro. We got a little bit of a move in the dollar here. We sold that call yesterday. Euro proceeded to rally
in our face.
In our face. You're getting a little bit of a little reprieve today. I sold the put against it. It's a 16 delta put, so I'm about 10 deltas, 15 deltas short in the euro.
You're basically making it a strangle.
Yeah.
Euro is down small, about 190 ticks. That's about an eighth of a percentage point.
Yeah.
So you've changed the trade from a straight short delta trade to a more neutralish trade.
I'm thinking a diagonal spread in Meta.
Diagonal spread in Meta. Feb March has 6 vol differentials here. This is a good example. We were looking at before in the other trade March, which March April. You have 2 vol differentiators here to your advantage if we were selling March. If you go into February, which I think is where you're going to go, 46 monthly implied volatility versus a 40. That's a good 6 vol differential. 2 or 3 is usually too much if I'm trying to do it the other way. 2-ish is too much, really. 3 is way too much, in my opinion. This is 6 vol points your way, 5 vol points your way. I like that.
I did the 700, 750.
700, 750 is fairly wide.
Pretty wide.
Yeah, even in a $675 stock.
But it's all kind of the same. Like if this was $100 stock, this would trade for, the diagonals are going to trade for about half the width.
Yeah.
On this sort of thing.
Yeah, 20 some odd dollars is what you're putting it on for. If it was if this was a $100 stock, you'd probably be doing one that's $10 wide. You're trading for $5.
Yes.
So you increase your risk by how wide you go with the amount of money.
But it's a bigger stock. Like it's the same amount of capital you'd put up selling the put, but you have the extra upside here. The caveat is that you have downside risk. Obviously, if the stock goes down, you're going to lose some money here, but you don't have the tail risk on the downside. So there's
a gimme for every got you. It has 24 long delta, which is typical what you have when you put on other diagonal trades. Somewhere between 15 and 30-ish deltas would be where our range goes. 20, the low 20s, you're around 24, mid 20s here. So maybe a little bit more bullish than you normally would, but it's 5 deltas one way or the other. Very good. Next one, please. So we are going with you, Tony, a little bit more bullish in there. SPX neutral. We did based on the FOMC 0-day research, we enter iron condors 5 minutes after announcement. 100% win rate so far. Let's try it. We'll have to wait on that. We have one on right now that we sold at around 445 with even the S&Ps right here. It's trading at around $4.05. We have a 375 bid in, so hopefully we'll get filled on that. Have a little bit of money to put to risk, and we'll do this SPX trade right around 1 o'clock, right, Central Standard Time.
Yeah,
we will be at our ready. So thank you for reminding us about.
And we
that.
have ours in that's wrapped around where we're trying to get out. It's
what
close.
do you mean? Say it again. Oh, it's trading there now. You mean?
Yeah, it's up like $50.
Yeah.
We have an order in to close it for 75.
Yeah, I don't know. So you want to take a 10% profit on this?
We'll let it sit. We'll keep going.
Okay.
But I'm just saying we're trading this. We're in.
We're in. Even the S&P's expected move was around $28. It's about $26 now. So it's come in about $2 in the last half hour or so. Max, thank you so much in Santa Barbara, California. We appreciate you. You're good, You're good. What movie? Oh, come on. That was good, James.
Yeah.
You're good.
Is it Goodfellas?
No.
Casino? It's Pesci, isn't it? Pesci?
No, it's not Pesci. It's I can see his name with the big glasses. Come on, Robert De Niro. It's more of the comedy one.
Analyze this.
What is it?
Oh, it's Analyze This.
Analyze This. Thank you. Yes, I couldn't remember it. Yeah, you're good. You're good. Energy Fuels. First thing I'm going to do is take a look at the markets on this $25 stock. Markets are okay, about 20-ish cents wide. IV rank of 37 is pretty good. So Rob in Indianapolis, so far I'm good with you. Now I'm going to take a look at what the stock has done. It's gone from 15 to 25 in the blink of an eye.
5 to 15 to 25.
Say again?
5 to 15 to 25. It was a $5.
Now, if you want to go all the way back to the summer, I mean, you can say it's gone from 5 to 15. I was just going back to the beginning of January when it was $15. They're still bullish. Premiums rich. Earnings come after February expiration. They're right about that, February 25. So he wants to play the 23 day options, $half wide strikes. Are you bullish on UUU? What are you thinking here?
Oh, man. I was going into March, and I was looking at like a call ratio.
You were going into March.
To play into the call. I don't know. I mean, this is a tough one to get.
Call ratio would make you omnidirectional, slightly bearish. They're bullish.
Like maybe you do the 20 put and then the 30-35 call ratio for $2 if you can get filled here. Do you hate that? Do you love it? Do you not like it?
I mean, it's okay not to make a trade that doesn't fit your assumption to somebody else that comes in on what's their assumption. It is your assumption too.
But
I would love if you don't make this trade for Rob to call us up when UUU is $35 in a week or two.
What about doing the diagonal spread?
Feb has a
March Feb.
You can do that. Feb, you would expect with earnings coming afterwards that it wouldn't get bid up
25.30. You do that at the money long. You do this at $2. It's a small little.
Sure.
It puts this on my radar. For the future.
Yep. Let's do it. You go in at your price. Market's a little wide there, or you move it 3 cents and you get filled.
Yeah, whatever.
280.
What about 200?
283.
Silver's at 115.
Silver's at 115, up almost 9%. Gold is up $205. That's a 4%.
No stopping.
No stopping. Can't stop. Gold silver ratio is actually under 46, back to 45.88.
The speed of that move, has been incredible.
Yes.
For the history books.
One for the history books.
No doubt.
You were living through crash up in the market.
Yes.
100%.
All right, so we're in a little long delta.
Yep.
Diagonal spread, Rob.
Yep.
We're a little different, but there.
Little Johnnies.
We're little Johnnies.
Next one, please. RBLX, I have to say, I have a diagonal spread in RBLX already. A bullish diagonal. They are bullish also, so I am pulling for you. I put the trade on last week, I believe. I think I'm up about 50 cents on the trade. I've been down around 50 to 75 cents on the trade. RBLX first rally because of you, Tyler, because of you. That's right, RBLX up $3.34.
Oil catching a little bit of a bid. I closed out the put spread. I sold against the call spread, so now I'm just leaning a little bit short here. I took like 90 cents or 9 cents, which is $90 out of the put spread.
It's just kind of scalped it, right?
Yeah.
I mean,
exactly 50% of what we sold it at.
Yeah.
So I got a little short delta in oil.
Yeah, you got to. RBLX is a hard stock to trade. I mean, markets in February are about 20 to 40 cents wide. Earnings are February 5th. I knew that when I put on the trade. I was playing it into earnings, trying to do a little bit of a contrarian roll here on something that has a correlation with the market that's typically 0.61, which is a relatively high correlation for a stock, especially a stock that hasn't had a bid as market's making all-time highs. This stock was $140 in October. It started the year at 80 and change. It's down to 70 and change. I was playing a little bit of reversion to the mean on a correlation and to the overall market. Finally getting the move today. What do you think about it?
If you're okay holding it at 60, and the question is like, what, a suggestion for a trade, you could look at I tried to sell the 65 strike puts at 250. I didn't get filled there. But that might be a spot where you sell a put and, you are playing bullish into earnings in February. You'd use the February monthly as where I would go. But if you get down there, you'll get a little bit of extra long delta into that move. So that might be the move there. But we've got this, so we're in with you.
Yeah, I don't think it warrants a multi-trade position in RBLX, but I'm pulling for you, and today's the first day that it's rallied.
Yes.
Next one, please. Microsoft, look at this. They are doing it to you again with earnings looming today after the close. Microsoft, what do you think here?
I'm with you. Oh, you're neutral. Okay. I'm a little bit long to neutral.
It's lost momentum, he says, in this AR run. What do you think?
I've got short premium in the weekly, right at the expected move, around 500. I'm long the 490s in the February monthly. So I'm playing for inside up or at the expected move to the upside. I'm playing for upside move. If we stay neutral, if we go nowhere, I'll probably be fine. My risk is really to, if we get a move back to 440, that would not.
It's unchanged. I mean, a week ago, you could have said it definitely lost its momentum, was down near its lows under 450. It's unchanged for the year.
Yeah.
Maybe Microsoft is back, baby.
Yeah.
Jack and Philly, you're more bullish on Microsoft, I believe?
Yeah, a little bit. I think we get back to 500. I think if we're going to continue this move higher, we got to have Meta and Microsoft started off.
Okay.
So that's my play here.
Okay. All right. Good. Let's.
Could be wrong.
Wouldn't be the first time.
Wouldn't be the first time.
Let's go to our next one, please. OKLO in March. OKLO in March.
Okay.
Up $4.60 this morning to just about $90 as a stock hasn't really participated in the rally for 2026, but it is pretty much unchanged. No longer the $180 stock it once was in October. They're bullish. Sell the March 75 puts for $670. The March 75 puts are trading at $560-ish or so. They're $585 on the offer, $570-ish maybe. Significantly under the $670 where they were looking to sell it. OKLO up $5 today. Jake in Travis City, I hope you did these yesterday.
Yeah, it's a good trade. I mean, volatility, IV rank of 38. I mean, this thing flies around. I've been getting
I don't think you chase it. I don't think you chase it.
I was looking at like the 70 puts at $4, a little bit further out of the money. Do those interest you?
I mean, it could if you want to.
Not ringing endorsements here.
I mean,
what the hell?
I mean, stock's up $5. I'm not looking to chase it up 6.5% today.
I agree.
Right?
Jake, we're going to pass on this one. I'm sorry.
I hope you have it on.
He's a little scared.
I just don't chase.
I know.
Don't chase. Some others take my ball and jack and go somewhere else. APP.
You know me.
Is a total fraud. APP, this fraud stock, as my friend Dylan says, is worth about $177 billion. That would be the biggest fraud in U.S. history, even bigger than Bernie Madoff. Business can't justify this crazy price at all. What about selling the 600-630 call spread? It's up $11 this morning, February 11th. It has earnings.
I mean, it's come off about $200 from the highs. And these markets
from $750 to under $550, $510 or so, back to $555.
You got $3. Like I was looking at just doing a at the money put spread, and you're $4 at 11.
Yeah, you can't trade options in here.
It's unfortunately just not really that tradable.
Yeah, it's just not liquid enough. Unfortunately, you're 100% correct. Yeah. That takes us to the end of our What's Your Assumption? I don't think we did that great.
I think this was.
We had a bunch of them.
This was a typical Batista performance here of just very middle.
At market highs, we're 50%.
Very middle of the pack, very average. This was a sad one.
We're gonna go through life average, son. Good job.
I would say Tesla. We did the goofy EWZ double calendar. We have Intel. Meta we got long. SPX we have on already. The UUU we did. Roblox we have on. Microsoft we have on. OKLO we passed. APP we passed. So
markets aren't liquid enough.
So it's
that's on them.
Yeah, it's sort of like an 8 of 10.
Sort of
an 80%.
Sort of an 8 of 10.
Yeah, it was good, not great. Above average.
We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next?
We got TP in the house.
That's right. Man, Tasty Extra, my man. We'll be back in 90 seconds. It's Tasty Live.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs.
Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
I got a good feeling.
Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer.
I got a good feeling. I got a good feeling. I got a good feeling. I got a good feeling.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live, and enough out of you because we've got this, man, Mr. TP, Tasty Extra for January 28, 2026, TP.
Hey, Bad Nick, how you guys doing today?
Doing good, my old-time friend. How are you?
Oh, good. And are you in double digits temperature yet, or no? Is it like 2 degrees?
No, it's like 2. It's like 2 degrees.
Well, it
Maybe
depends.
Like
it depends. Are you a wind chill person? Do you consider that part of the temperature?
I don't know. I guess so. What? It seems like it's a little bit like cheating, though.
It's the age.
It's kind of like a trade. Well, you know, my net lick would be positive if I didn't include some of the losing rolls and yada yada. Wind chill, but yeah, I get it, Nick. I mean, when it's blowing cold air, yeah, it feels colder. I get that. But I typically like to stick with the straight numbers because, you know, Nicky, it's the wind isn't even everywhere.
Yeah, but in the place that you're at, if there's wind, you got to factor that in. I thought he would be alone on this hill, but my dad says the same thing. He's like, yeah, the wind chill, it doesn't count.
Well, see, no, because
I'm like, what do you mean?
Because I know exactly where you guys are. If you're standing on Fulton Avenue, okay, the wind's blasting out from the west or whatever it is. It's going to be dramatically colder than if you were on what's the road where Small Cheval is. You're hiding behind a building. So that's my whole point. Is it's very geographically dependent, Nick. And this is something. Look, your dad and I have been around for a while. We've been cold. We've been caught without, gloves and hats and stuff like that. We get it. So it's, you try to find the little nooks and crannies where you can hide from the wind, but it's still cold. So that's my whole point.
You guys just beat us down. Just beat us down. You tell us, not, nothing's ever.
Nick, if you're happy looking at the wind chill, use the wind chill.
All right.
I'm not passing judgment.
All right.
No kidding. Well, what do you got for us today?
So, what you guys will see if you, and you don't have to do this right now, you can leave that slide up there, but if you go to the Tasty Live website, look for the news and insights menu.
Yes.
You'll see my man Gus posted the cherry picks yesterday or this morning for us. So this is the cherry picks talking about currencies. I know you guys have been talking about currencies quite a bit over the past couple of days.
Yes.
Because they have been some of the bigger movers in the market right now. And if you look at that first slide, Nick, that is a picture of UUP. That is an ETF that's based on a dollar index. So, or it is a dollar index. So it's an ETF. You can buy it, sell it. It doesn't, I don't think it trades much. I don't trade UUP. I'm just using it as an indicator. The options aren't really that there's not much to sell in there. There's not much to work with in UUP, in my opinion. But UUP itself is a good barometer for what the dollar's doing. Now, ever since the dollar's been fairly weak over the past few weeks, but especially over the past few days, the whole Greenland thing, whatever that's gonna come to be, that's pushing the dollar down. You've got the tariff stuff pushing the dollar down. You've got the Fed uncertainty, like who's going to be the next Fed chair, or are they actually going to throw Jerome Powell in jail or something like that? That's pushing the dollar down. No, really, it's that people are getting spooked. But there are a couple of things very sort of under the radar that I think have been pushing it down for this latest run. Over the past, I think it was maybe last Friday or over the weekend or whenever, the New York Federal Bank, in other words, the New York Fed, you've got the regional federal banks. Well, the New York Fed was told, or at the bidding of the U.S. Treasury, to do a rate check, what's called a rate check by us insiders, to see what you could sell the dollar and buy the yen for. So it's not an order, it's not binding, it's not really anything. It's just the Treasury Department tipping its hand about what it might do. So Tony, you remember back in the floor, you might get RFQs, requests for quotes for stuff.
Sure.
And those are a little bit more binding, right? In other words, that actually, somebody's looking to do this trade. This isn't quite it. This is more like the Treasury leaning on the currency markets. The other point is, too, that I think a lot of people aren't necessarily talking about is going back to Economics 101, a cheaper dollar makes our products look more attractive to the rest of the world. Okay, so if we're leaning on the dollar, pushing it down over the next few months or whatever it is, that could maybe boost exports, maybe boost manufacturing, boost our economy a little bit, and that's going to help the administration in the 2026 midterms. So I don't discount that necessarily, because that's an important part of it, and they may be looking to goose the economy with a cheaper dollar. But what you're seeing is the UUP, which is the dollar index, is about the lowest it's been in almost 4 years. Back in, I think the last time it was down here was like in April or May of 2022. So it's been getting punished recently with all the stuff weighing on it. So if you go to the next slide, Nick, what you'll see is some of these other currencies. So basically, the dollar has been flat for most of 2025. Yeah, it's been up and down a little bit. And if you look at those lines, the euro has been the strongest, from a percent change from January 2025, a year ago, 12 months ago. The 6J, the yen has been the weakest of all. The Canadian dollar has been a little bit stronger than the yen, et cetera, et cetera. That's how those lines are lining up. But you saw this massive spike over the past few days where the percent changes have been have been much larger than they have been in a long time. You had the what do they call it? Back last April, the tariff apocalypse or whatever
Tariff
it was, the tariff
tantrum.
day or whatever they
The tantrum. Tariff tantrum.
Thank you. big moves around there. You saw the Aussie dollar get crushed during that, but but typically they've been pretty flat over the past year. Now you saw this huge spike up in the foreign currencies, and these are the majors. Why did I look at these? Because they have options on them. It's as simple as that. That's it. There are lots of other currencies you can trade. You can trade the Swiss franc, you're in Mexican dollar, you can do all this stuff, but they don't have options on them, or if they do have options, they're not particularly liquid. These 5 ones are the biggest with the most liquid options. For me, no matter what my opinion of a stock, future, index, ETF, whatever, it doesn't matter. If it's not liquid, I don't care. Don't tell me about some awesome opportunity if I can't trade it, and specifically the options.
I agree.
Agreed.
Yeah.
We trade a lot of FX sometimes,
yeah,
we can get a little bit better at that. But you're right, TP. I like the option side of it.
Yeah.
So the point is FX is a great market, and FX is huge. When you're talking about total liquidity around, global liquidity, of course, FX is enormous. All those dealers trading tens of billions of dollars of foreign currencies or currencies, I should say, to facilitate the transactions, for, buying airplanes and machines and grain and all that stuff. So it's a huge market. And I trade FX too, right? It's just some little subtle things about the overnight rolls could be a little bit confusing for newish traders. But if you're looking to trade currencies and you've never done it before, and you like a defined risk strategy, I would use the futures options. Okay, there are a couple of nuances about it, but they're not complicated. If you're trading 0DT SPX or some of the trades that you talk about, Nick, on with crab trades, diagonals, verticals, butterflies, rolling, no, seriously, if you're doing all that stuff, you can now stick your toes in. You should be confident enough to trade some futures options. Let's go to the next slide. These are the changes over the past month, and you saw them again fairly flat through December through mid-January, and then they started spiking up. That's what I wanted to point out. So if flip over to percent changes from DEES 2025.
And the euro volatility right now is one of the highest of the group. It's IV rank of about 47. Right now. So
they're all high. And if you go back down, so let's go to the next slide, the implied vols, and to your point, Nick. So the implied volatilities of these things are more commodity-like than stock-like, and that makes sense, right? So equities, typically you see when the market rallies or the stock price rallies, the volatility tends to go down. In commodities, that is usually not true. So grains, right, or oil, market goes up. It's fear. Where is the fear? And the fear in stocks is down. Stocks selling off. So when the stocks sell off, the volatility goes up. Fear in commodities typically is up, either shortages or disruptions of production, whatever it is. Volatility is to the upside, or risk is to the upside. Same thing with these currencies. The risk, the uncertainty is to the upside. So right now, like you were saying, Nick, the euro, which is the green line, has probably seen the biggest. In other words, it was relatively low. Has seen one of the biggest increases in its implied volatility over the past week. Yen is the highest. It's creeping up the most. Aussie dollars, that gold line, a little bit in the middle, green's the even, and we'll look at a trade in Canada just for our friends to the north. That's also creeping up. So what you're seeing is in these currency options, there's enough premium to make short option strategies attractive. Okay, if you're looking to get into this. Okay, the other big point, and we can take a look at the platform at some point if you want to pull it up. The skew is still pointed to the upside in these currencies. So one of the things that I saw were mention of the risk reversal. So risk reversal is buying the out of the money put, selling the out of the money call, or just comparing the out of the money put and out of the money call the prices. The risk reversals were the highest they've been in years, meaning the out of the money calls were higher priced than commensurate out of the money puts. So let's say you take the 30 delta call, 30 delta put. 30 delta call was trading well over the 30 delta put. I see the exact same thing in yen, Canadian dollar, euro, British pound, all that stuff. They're all pointing to the upside. So even though they've rallied up, unless you think something dramatic is going to change about these currencies in the next week, hey, I'd consider a bullish strategy in them. That's it. Do I know which way they're going? No, I don't. But I think there's enough bias in the geopolitical situation to keep these things from falling much further. Let's go to the next slide. Take a look at the yen. So I just have a bias towards long yen. And it took some profits on this latest rally.
It's where good traders
go to die. This is a death by paper cut.
I get it.
Yes.
I get it. But the point is, right now, just a 1 point or 1 point short put spread. That's all this is. So going out 38 days, right, or 37 days as we have now. The way I compare this is if I sell this spread for about what's the price? I can't see the price on that.
What are you looking at in March?
Yeah, the March, the 64-65 put spread.
If you're
trading for like 0033 or something like that.
Yeah, you're selling it for with the tick being what is it?
1,000 points.
Yeah, you're looking at $450. $450 if you sell it at what is that about 37.0? 370. Ticks, you're looking
exactly.
at around $460.
Yen's down a little bit this morning as opposed to when I printed this out. But the way I compare this, okay, is that if I have about it's $1,250 a point in the yen. So if I can collect a third of the width of the strikes, Tony just said it was about 450, 480, whatever it is.
Yeah.
That's close enough to a third for me.
Sure.
It's got about a 70% probability of expiring worthless. Okay, means its probability of making 50% is going to be around 75, 80%, and I'm making about $3.80 in theta. So if I were bullish, that's the type of trade I would put on. Okay, again, defined risk all the way with this stuff. I'm not looking there's nothing, I don't want to be selling naked premium in these currencies. It's too expensive. Okay, the margin requirements are too big for this. Let's go to the next one. And this again, Nick, to your point, the yen had a 47% IV rank. The Canadian dollar also has, at least yesterday, had a 43% IV rank. Again, similar types of trade. Similar type of trade. I'm selling a 1 point put spread. The 725, 735 is 0.725, 0.735. Buying the 725, selling the 735 put spread. Again, about $1,000 of. Now it's about $1,200, $1,250 between. $1,000, excuse me, $1,000 in the Canadian. So I'm taking about $300 of credit for that trade, 70% max profit, or 70% probability of profit, $300 max profit versus about $690 max risk. That's that third of the width of the strikes that I look for, making about $2 a theta per day. That's how I would trade a bullish trade in Canada if I were bullish. So that's what I got for you guys.
Good job.
I like it.
Good job out of you, my friend. Good job out of the market too, just holding steady up 10 and change. Even the S&P's expected move is around $26. So it hasn't contracted any since we put it on. We put it on with $28.
We did the SPX. You're talking
SPX, I'm sorry. But the expected move was around $28. It's $26. It lost that $2 between 8:30 and 9 o'clock. Now between 9 and 9:30 Central Standard Time. It's staying bid. You can see that reflected in /VX, basically unchanged here. Volatility definitely staying bid going into the number. I closed that SPX trade for 380. I had to move it a nickel. I might have been able to get filled at 375 when the even the S&Ps rallied up, but I don't think so. Possibly close it at 380. It's about as low as I've seen a trade. TP, good job out of you looking at 1/3 the width of the strikes and a lot of these currencies. I loved everything you said, except I like to always be long the yen. Other than that, I'm okay with everything you said, but you're allowed to have your own personal opinion, TP. I'm going to take a quick 90-second break. I'm going to come back. I think I got Q coming in the house from the Tasty Trade World headquarters.
No, only Glenn.
What's that?
We're going to have Glenn do his song and dance.
I think we might have. I think
we have
Quinn.
Q too?
Quinn. I think we only have Quinn. We're going to see who we only have right
That's
after
somebody.
this. We'll be back in 90 seconds. Tasty Live. Thanks, T.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Back, son, and before we get to our guest here, let's take a quick look at the market. Even the S&Ps are up $8.50. They've been holding steady right about here. This is about as low as they've been, not overnight session, but since we've been on the show. Volatility up 4 cents. That SPX strangle that we did, it looks
Iron
like the
Condor, yeah.
Iron Condor, sorry. Yeah. Synthetic strangle, Iron Condor.
Yeah.
You're right. It is definitely
Same
an
thing.
Iron
Same
Condor.
thing.
I should have said it. Trading around 370, 375. I closed it at 380. on that we put on around 445 or so. But really, the market here today is again all about the metals. Silver up 6.5%, a little over 6.5% after trading about $3,000 higher. Remember, even on the small future, it's $1,000 a point. You took a couple of bucks profit on your silver scalp from this morning. Gold, after being up 3.5%, where it is right now, hasn't really moved. So that gold silver ratio that we were looking at that was trading around 45.50 or so, 45.75 on the lows, is trading back at 46.5 or so. So that's rallied for the first time in some time. It was a big move. Maybe you've seen the low in this gold silver ratio for this short period of time. We'll certainly have to see it. It's certain the amount of futures that are trading in gold and silver are
unbelievable,
are exponential. That's where all the action is right now. Yeah. Even with Microsoft, Meta, Tesla, Fed interest rate, bonds having really no movement to them, 115.01 in the middle of their range, no volatility in them. Volatility staying bid a little bit here in the overall market. So maybe we get a little bit of two-sided action looming. What are you thinking?
I think we're going to continue to chop until Fed. I think that's it. Volatility expanding is a little bit interesting here. Mm-hmm. But I think it's going to be just a chop fest until then.
Did you do something?
I just added to silver. I did a put ratio because I've been
in SLV.
In SLV.
So you're adding to silver, but you're getting much smaller.
But I have the calls, so I've been selling calls too. Mm-hmm. Anybody that has been following my silver trades, I'm sorry, because I have about 1,000 things on. It's funny because, here's a little, I can show this on my platform.
IV rank of 119, they've never been higher. Yes. Yeah, please show it on your platform.
So I've been selling calls, which they're down a little bit. I've sold them at like $3-4 ish. They're around there, but they're at like 125, 135. I've been selling calls.
Yep.
I have sold a couple puts, but I'm doing these put ratio spreads on the downside as a way to be. It's not adding any additional risk to the position, but it gives me a little bit more juice to the downside. But I'm all over the place with my positions. I'm looking for a downside move here. This is where we're at.
Egregious.
This is my risk profile. We're a couple points above where I wanted it below 100. You give me SLV below 100, I'm a happy man. I'm a happy camper.
Yeah, that looks good. SLV 103. SLV traded up to 105, just under 105. The expected move for February is $21.
Yeah.
So your bias to the downside with that tenth, the way it looks, is a great looking trade if you get the directional bias that you need, which is downside. If we stay right here, you're going to be a loser on that trade.
Yeah, I need some.
I like it.
I need some downside.
You need a little downside, as I do. I think a lot of people at this point have traded both sides of the market, or at least tried to put a line in the sand or anything else like that. You definitely need some two-sided action. I don't know if we're gonna
a little hawkish Fed, a little snap back in the dollar. If you're
I might as well ask for everything. Why not?
If you're J Powell,
yes.
How do you not come up there with a big stick?
Because you've been getting slapped around in the
getting slapped around. You got
by Daddy.
Yeah, Daddy trying to nuke the dollar. You got Daddy talking about taking you away from your podium.
That's your rightful place on earth.
Big stick.
Okay. All right. Well, something I'm grateful for is this man. That's right. Tasty Trade World Headquarters, your friend of mine. Q, welcome to the show.
Thank you, fellas. How's it going?
It's been a couple of days. How you been?
Yeah, good.
I thought you froze or something like that. I thought you didn't.
What do you mean it's been a couple of days? I was here yesterday.
Yeah, what do you...
Feels like a couple of days. Feels like a couple of days then.
It's because he misses you so much.
Oh,
an hour is a day.
Yes, it goes by.
Thank you.
I forgot you were on yesterday.
Broken heart. You know?
Don't correct me.
That.
Okay?
I apologize. Yeah, it's been a couple of days. It's all right, though. I miss you guys.
Okay, good.
Miss you too.
Yeah.
Miss you too, bro.
But look at that.
You're right. You did your demo yesterday.
Yeah, really good demo talking about like the order chains feature, which helps you track your rolls and stuff like that. And we talk about like some of the concepts of rolling. You know, rolling's such a fascinating thing it can be, because like let's say like when you're rolling out in time, you can reduce risk and increase your credit. Of course, you're getting paid for that credit because you got to be in the trade longer.
Yeah.
Right. But if, you know, volatility is still high and that's the trade that you want to make as a premium seller, which most of our customers are, that's a completely fine thing to do. So just going over that, like conceptually, like, you know, really it's just like closing one position and opening another. Right.
It
But
is.
to be able to change that risk of the current position you have on to exactly how you want it is a really valuable tool to be able to use.
Yes. Do you use the tool that Nick just put up there a moment ago, where it
Analysis
kind
mode? Yeah.
No, I meant when you do your webinars. Do you use that? Because I think it's a phenomenal tool.
Yeah, love the analysis tool. Like whenever a customer is telling me their trade, especially if like, it's like a complex trade, in my head I'm like visualizing the analysis mode. If like it's not a position that's already on. You know, and so that's like when I grew up trading, that's like how I learned to trade, was through the analysis mode. So if you're having a tough time understanding the profit and loss graph, that's exactly what it'll show you. And we have a lot of videos on our YouTube about that as well now. And I think we have a demo coming up on that in the future, but like another live demo, because we always love doing those. But yeah, we have a lot of videos on how to use that tool. Very, very useful tool if you want to see and like just understand where your profits are coming from as the market moves and things like that.
Very good.
Beautiful.
Yeah.
And,
You're a fan of the feature now that you know about it.
He loves it. He loves it.
It took you about 5 years, but
it's a lot of things I like to get introduced to. But
Well, it's easy when you've been trading.
trading.
You know, it's easy when you've been trading for 40 years before using a platform. You know, it's easy, but
Yeah, he
you know,
does
to
it-
some of us that are
he's
learning
like-
for the first
But
time.
you're like a beautiful mind, you know?
Yeah,
Like you just like see the numbers floating in there.
It's like the Rain Man.
You know what though? Back in the day, so no longer. So that was my argument going back 10, 15, 20 years ago when I would go around country talking to people and they would come up with a spreadsheet and look at what they did. And I would say to them, you know what? If you can learn what a synthetic position is by looking at it, break it out and show what it is, you'll be a better trader by learning yourself.
Yeah.
And then we developed the Analyze tab, and other brokerage firms did too. And it kind of took everything that I was doing in my head or trying to teach people and put it to the computer, put it on something that everybody can see by just a click. And it was good, not great. It's gotten to the point now where it's phenomenal.
Yeah.
And it's gotten to the point now where it's to the penny. And I don't get to the penny. I look at a position and I say, your break even is somewhere around 95 on this position, but the computer will put it at 94.67.
Yeah.
You know what I mean? Like it's just so good now that it does take a lot of the guesswork or mental capacity out of it, which if you're using that to find new strategies to learn and new ways to enhance the position you have, then I'm all for it. If you're leaning on it to just be the end all for your trading, then I don't think that that's the right way, because the graph makes things, like I always say, I don't even look at my P&L per day. Like I hide my P&L and my deltas on the top of my page. I just want to focus on what I'm doing, not how I'm doing one way or the other. I know when I'm not doing good. I know when I'm doing well. It's pretty easy to see. I don't have to see the monetary number, but it affects me. And if you see this big tent where you make this giant amount of money at X number, but the probability of it getting there is so small, it doesn't matter that the picture looks so good. So I like to hear it now. So I like it. I like using it. I like that now you have all the power that I had with experience in my head. You have it there on the computer. They've done a great job with it. But take it with a grain of salt.
Yeah.
Don't get
I
too
think
hung
that's
up on
a really good point, because it's, once you get past one lots and doing a one lot strangle or one lot iron condor, and you're doing a whole bunch of stuff, like that silver position.
Yes.
You can look at all your strikes.
Yes.
And just by looking at it, you know where you want to be. Like I'm short puts and I've got, some butterflies and stuff around the 90 handle. I'm short calls at 125, 135. I want it somewhere a little bit lower from here. I mean, it doesn't have to be exactly.
My delta's negative. I want it lower.
That too. I mean, you can look at the numbers and just know where your spot is.
Sure.
When you take a bunch of positions, if you sell puts at the 100, the 105, the 110 strike, you know your break even is somewhere at 105.
Yeah, it's pretty easy to figure out.
Some will expire out of the money, some will be in the money, but that's like your spot where you're at. You can take them all and just kind of eyeball it. I think that's an important skill.
Yeah, and then it's also really interesting. So of course, like the prices are not like 100%. I mean, it uses the black shoals, but like the actual prices are the prices, right? But then also like for one of your trades, right? Like the ratio spread that you love to do, it's super useful to like see how that P&L like graph will shift as time goes on. Because at first it kind of just looks like a naked put, right?
Right.
But then the debit spread starts to kick in.
It is a synthetic naked put. That is the synthetic part of it. That the synthetic put is at your break even. That's exactly what it is. So it looks like it because it is.
Yeah. And then that debit spread starts to kick in, and you just like see how that moves, and it helps you understand it better conceptually, which is really nice.
Yep, most definitely.
We got the peeps saying that you always loved your curves. Curve mode.
Yeah, I've been a curve fan for a long time.
Curve fan for a long time.
Yes. They're evil. Never change in that chat. What do you got for us, my man? You got a list for us? Let's take a look at it.
Yes, sir, I do. Top 20 symbols going through the system and their IVR. At number 1, SLV 120. So that 120 means implied volatility is expanding throughout the day. That's why the IV ranks over 100.
Expanded and never been higher.
And never
by
been
that
higher.
measurement
Correct.
of the IVR.
And then also at number 2, GLD 118, 2 symbols over 100. And the top 2, not something we see very often at all. All right, let's get to the rest of the list. Micron 59, NVIDIA 18, Intel 32, United Health 18, Tesla 9, Amazon 36, Starbucks 25, Meta 35, Microsoft 42, Palantir 25, STX 70, Netflix 17, Oracle 60, IREN 64, SNDK 72, Nikki's favorite BE 61, AMD 40, and Apple 23.
A good little list there. It looks like you've got your usual suspects, and some of those usual suspects have earnings to them today, right? Like Microsoft, Meta, Tesla, obviously, IBM, LRCX, not in there, but certainly warrant some looks. As a matter of fact, you got a little bit of a big mixed bag of tricks in them right now. Microsoft, which was higher all the way up to 483 or so, is now down 80 or 90 cents. You got volatility, which just percolated a moment ago to 1880, which is up 20 cents. I say percolated because
it's back down now.
What's that? It's back down now. Yes.
That was it.
Back down to 1870. But you can see over the last couple of days, volatility definitely expanding here. Some of the other ones, Tesla, which was up good, is up $1.70. It's reduced its positive move by about half a percent, by half. We're chopping around here. Just to give you how much those iron condors move in SPX.
Oh, that one's probably even better now.
No, it's back up. It's got a little bit of long delta as it moves here. It's back up to 420.
Okay.
So,
I guess you got a little bit of a move in vol too, because we closed that out when vol was more like flat.
Yes.
It's a little
Yes.
bit down,
Yes.
Yeah.
Looking across the board here, you've got a mixed bag of tricks here. BE making a run for the rose up $9. I know you got a position in there too, but really kind of a mixed bag of tricks all along. How has the gold and silver phone calls been on the desk?
Do we have calls of people asking for physical delivery yet?
So recently, actually,
That's
so
a
not
great
gold and
question, by the
silver,
way.
but like natural gas, the contract just expired yesterday, or like was the last trade day, whatever. And so, like, someone just asked, like, hey, like, why'd you guys close out in my natural gas position? I'm like, oh, just so like 10,000 barrels of oil doesn't show up at your doorstep. That's all,
Or barrels of, I don't know, natural gas. You get a tank.
Or I guess
You get a
tank.
tanker.
Yeah. However that works, but. Yeah, no, not too many questions about physical delivery. We do not let you take physical delivery.
He's looking at that as a capitulation. He's trying to read between the lines. How do I get physical cheap?
I want my silver. bars.
I want my silver bars, and I want
Yeah,
them now.
I was talking to the head of futures today, Momo. He was telling me about like in 2020 when oil went negative. He was like, yeah, people were calling all the time saying they could take delivery and stuff like that. Like, well, like I'm sure you think you can take delivery, but the actual people who usually take delivery cannot right now, and that's why it's negative.
Yeah.
So maybe just swatch it. All right.
And I think there's a lot of regulations around that as well. I don't.
Yeah, there's also specific.
I don't think you
rules
could
about
just put
stuff like that.
barrel,
Yeah.
1,000 barrels of oil in
You can't
your
just
backyard.
you can't just do it in your backyard.
The HOA might have a problem with that. I mean, that's let alone the dog size of dogs. A 50-pound dog that's a problem. 1,000 barrels of oil in your backyard, I'm sure, would be an issue.
Yeah, I remember I was trading futures options for the first time in corn. And I was like, uh-oh, like I hope 5,000 bushels of corn don't show up at my doorstep,
Yeah, it's
it's funny. We talk about volatility /VX and stuff. An easy way to look when SPY is basically unchanged, it's up 40 cents. If you look at the 396 straddle, which would be the at the money straddle, the puts are in by a nickel and the calls are up 45 cents. Markets up 35 cents. The at the money calls are actually up more than the product itself, SPY. And if you go out here and take a look at these out of the money options, the out of the money options, the 30th delta options are up, around 20-ish cents. The 30th delta puts are also up to unchanged. So if you don't believe that volatility is higher, you can look at the option chain and take a look at it. It's really easy when it's basically unchanged. That's something to do sometimes when you're just kind of fumbling around the platform and looking for things to do. So IV rank low. In SPX around 18, but volatility expanding here, which you would expect. We'll see if we do another SPX trade after the meeting at 1 o'clock. We'll see what the market is doing. I have a feeling we're going to be, I think we're going to have some movement, some back and forth movement today. I got the ick yesterday. Maybe I was just a little bit of a day early. Thank you so much for your time, my friend. You have any parting words for us, Nikki, before we take a quick break here? That gold silver ratio back up to 46, almost 46.70. It's moved about $1 higher as you have silver.
I need more.
Silver up 6,000 change. You covered your silver scalp from today. Still got short delta in silver. Gold hasn't moved. It's still up 3.5%. We're going to take a quick 90-second break. We'll come back. Even the S&P's about to turn red.
Oh, no.
NASDAQ.
I'll buy them.
NASDAQ is your leader in the clubhouse.
Back. Okay, thank you.
They're back. They're up 25 cents. NASDAQ, the leader in the clubhouse, up almost a half a percentage point. That would be rounding up. Russell is the loser in the clubhouse, almost down half a percentage point. That would be rounding down. Dow is completely flat. Volatility up by 16 cents. Small-ish move, but still higher. Bonds holding flat, down 15 ticks. 115.02. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Thank you.
Live from the trade desk. It's always electric when the ladies are live.
Ew.
From the trading floor.
Peace.
Electric.
Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, Two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Eso no es nada, tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada, tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. eso no es nada. Tú y yo vamos a quiquear. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. We get caught up, we lose the time. We get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. Only spring and summer right through. All the way I told you. Can't get a better view. 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 Cruising upstate and cooling down, pulling over to fool around. It's high time to get out of town. Close our eyes and get lost in the sound, yeah. Hey, hey, hey.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette is Jenny Andrews. It's a wacky Wednesday right before the FOMC meeting, Jenny.
It's a wacky Wednesday, and I thought we were going to see someone fall right behind us. Sounded like that guy almost tripped on the stairs.
Oh, is it behind me or behind you?
Oh, he just came down. So we have the FOMC meeting. I thought it would be just kind of quiet.
In honor of Chris Nelia, can we call it the FOMC?
FOMC. We've got the FOMC meeting. Things are kind of quiet here. SPOOs are unchanged, up to. So I saw them as high as up 13.
Yeah. And I got to tell you, so my trade is not working. Sometimes there's losses. My trade is currently not working, the one I put on at 9, but I'm probably going to, like I said, my bar is low. I'm closing it after the show.
Yeah, when I said I saw them up to 13, that was at 9. About 9:05 when we were putting on our morning trade. Now we're only up 2. I don't know if we're going to follow our rule of if it doesn't work in an hour, close it. Which has been about an hour. So
no, I'm going to do it. It's been about an hour. I'm waiting until after our show.
And who knows what the market is going to do today after the FOMC meeting? Who knows?
I love that you just seamlessly say FOMC.
So it's Wednesday. We have a 0DT SPX study. We also have
from Jacob.
Yes, from Jacob.
Our resident genius.
We're also taking live tweets. Send us a tweet, include the hashtag LIZJNY, and we've got some.
There's an email that we're going to go through as well that we wanted to talk about today because the FOMC meeting we were talking about TLT zebras and we thought it was a good day, so we're going to go through that today too.
Yes, so we have a busy show today. We did a lot of earnings calendars yesterday. We didn't want to during last call. We didn't want to risk a lot of money. We did a handful of calendars and one long call.
And one long call.
And one long call.
And I was laughing at the chat the other day because they were saying, did she just call AT&T telephone? They're like, does she still have a fax machine? So yes.
Hey, on the trading
wasn't
floor,
telephone.
it was the telephone crowd. AT&T was called telephone. The symbol is T, so we called it telephone.
That is correct. That is correct. Okay. Do you want to manage those first? Let's do that. In order of importance, we're going to manage our earnings trades from yesterday. We have a
Perfect.
handful of earnings trades today. We saw our list from Bob on Fire. We are taking tweets, and we have a study. So
Let's
we've got
do it. Let's
we've
do
got
it.
a very, very, very jam-packed show.
Okay, got this pulled up. We have quite a few earnings trades from yesterday. I can pop out the side and see everything we did. If you take a look at this activity, all symbols, yesterday, we did a calendar. We didn't spend too much money on anything, but we did a calendar, PPG, ADP, telephone, we bought a long call, Starbucks calendar, Texas Instrument calendar. So five trades during last call, but nothing had too much risk.
And I've got them pulled up, so you jump in, and we'll go top down, okay?
Okay.
So I've got this
All
pulled
right,
up.
top down. Here
so
we
go
go.
PPG first.
Oh, then that's not.
That's the
when
top
you said top down, I thought you meant alphabetical.
No, because I'm not going to alphabetize these in my mind. I'm telling you top down over here. PPG.
Okay, got it. PPG. All right, PPG. Where is it? Here we go. We did a calendar in here, 111. Put calendar, paid 36 cents for it. It's really a scratch.
Yep.
So
close it.
Or do you think you? I'm going to put in a GTC to take it. I'm going to put in a GTC to take at least. We paid 36. I'm going to put it in here for 46. At least cover
10
our
cents.
cover our dollar in, zero
Okay,
out.
there you go.
$2 in, zero out, and put this GTC. We'll see what happens.
Okay.
Review and send.
That is ADP. Yeah, you know me.
But
Next
that was
up.
That was PPG.
Oh, PPG. You got filled.
I did. Did I put it in wrong?
Maybe. No. You got 10 cents, or you got 6 cents.
Are you? Maybe I put it in wrong.
No, you didn't, because I'm seeing it. We got out for 46 cents.
Yeah. So we paid 36 cents. We sold it for 46. We made $10 on our PPG calendar.
Exactly. Okay, but it wasn't. That's why we put these in. Okay. Now ADP.
ADP. We made $25.
That we closed.
Sure. Close that. $27.
Close it.
Paid $1 for it. I'm closing it for $1.27.
Yep.
Filled.
Look
at that.
Woo. Now the favorite, telephone.
Telephone, $76. Bought a call. We paid very little extrinsic value, about $30 extrinsic value. Telephone went up on earnings. We made $76.
Good job. Close that thing.
Close that. All right.
Starbucks. I love yelling symbols at you.
Here we go. Hang on. I want to see 22.5, 23.5, 24, $1.55.
She's doing the
$1.59
math.
is a little aggressive.
She's doing the math because it is 153 at 165, which is a wide market, but you can do the math on this because it's 22.5.
I'll probably have to take it down a couple ticks, but
You could take it down.
because you could see 22.5.
$70 is a lot on a calendar.
Yeah,
take
yeah.
it down.
I'll take it. I'll take it down. Take it down a couple ticks. Replace order.
Take it down a couple ticks.
156 is parity.
Okay.
There we go.
And filled.
So we made money on that. So far, check. Made money on all of them so far.
Check. PPG, ADP, telephone. Now Starbucks. This is your calendar. Thank goodness we didn't short it like I did.
What? Oh, hold on. I pulled up SPX.
I know.
Where's our Starbucks? Here we go. SBUX. We made $19.
Great.
It's not. I saw it up almost $10 early.
That's what you were saying. I didn't see that, but
Pre-market.
this is great. $19. We'll take it.
Okay, so close that. 54-cent credit. Wait, this market's wide. Let me see. We paid 35 cents. So if I sell it for 55 cents, it's $20. And again, these were all very baby earnings
55
trades.
cents. It's 170. It's 76 at 110.
No, 55 cents. We paid
Oh.
35 cents if we sell for 54 cents.
Got
we
it.
made
I was looking at
$20.
something else. It's hard to see those numbers.
The market's a little wide, but it's not far out of the money. It shouldn't be too bad. But so far, they were all little winners.
Hey, I like little winners. Little winners add up. Okay. Then
Yeah.
we're
Okay,
still
so
working
that's
Starbucks. We're not
All right.
filled yet in Starbucks. Then the next up is Texas Instruments.
Okay. Telephone's
Oh, did we close
gone.
that? Or was that a
No,
closer yet?
that's a loser. So
wah.
$26 loser, but that's okay. When you look at them at a whole net, we're up on our earnings.
Yeah.
Well, do we even close this? What did we pay? We paid $82. It's worth $56. The one night, yeah, because look, Texas Instruments is up $16. It's up 8.5%. So a big move in Texas Instruments. When you put on a calendar and have a big move, it's going to lose.
Well, that's why we always say it's kind of like selling the iron butterfly. The iron butterfly and calendars have a good relationship with one another.
Okay, so I will try to take that 58 cents back to mitigate our loss on that one.
Okay.
All right, having a little rally. Spruce up 5.
Ooh. Okay, so
we're working Starbucks.
Do you want to just penny those down?
Yeah, I do. All right, 50-cent credit on Starbucks, and you're pushing everything out.
I am now.
And I'm working Texas. I will penny these down, try to get out. And I hate giving up too much, but what are we going to do? What are we going to do? Okay, so that's it for the earnings trades. A couple of them are still working. I'll just let those work.
Okay, so we're only filled on 3. You're filled on Texas.
Well,
so
now I'm filled in Texas. So the only one I'm not filled on is Starbucks.
Just get out of it. That's the one we made the most on.
All right, out.
Filled. Good job.
Out,
Very proud of you.
Out, and out. And people laugh at my little calendars, but we out of all those earnings, we had one big move, Texas Instruments.
Yeah. And it didn't hurt us that bad. Okay, so all those are pushed out, and those were our earnings. We have a lot of earnings today. We've also got a lot of tweets. There's a lot of snow and dogs in our tweets, which are so cute, Fabio. We're going to get to that.
There are. All right. I will. I'll take a look. Because look at how cute Fabio's little dogs are playing in the snow in their coats. Have you been putting a coat and boots on Will Ferrell?
No.
I haven't either.
He doesn't go out for that long, though. Like, he goes out, he usually walks 3 miles a day, but we're not walking 3 miles a day.
No way. It's so
he does
cold
not want to go out, and I don't want to walk him either. So I feel bad, but he is not a snow dog, for sure.
Yeah, no, my dogs are out and in.
Yeah.
Out and in.
Yeah.
And it's dangerous out there. In the last couple days, we've seen, my neighbor saw a hawk swoop down and grab something, and my husband saw an owl swoop down.
Well, we have those coyotes in the back of our house, so we'll always. Now, I have a big fence, and he's on the top deck, but the coyotes, every time we open the door, they're looking at him. Like, and I think they could jump and jump and jump and get him.
Over the big fence.
Yeah, but I feel like he would give them a run for their money.
Yeah. Fabio, I will tell you, like, sometimes the traders, they get interested in something we're doing, and they come over to look. So your dogs brought some attention, because we just had some market makers come over right behind you to try to look and see what was going on.
And we've also, by our producer Steve, or one of our SEBO people, asked for more dogs in the snow.
More dogs in the snow. Everyone loves them. Everyone loves them. All right, Fabio's question. What do we think to be bullish in snow? With snow, IVR of 61, put credit spread, February 200, 190 before earnings, collecting $1.70.
I'll keep it up. Why don't you pop in the platform?
Yeah.
Okay, so he's in snow. Type in snow.
Now, snow has been
IVR 61. It's been beaten down. Oh, it's 217.
217. For newer viewers, you don't know, 217 is Liz upside down. Flip
a calculator
217 upside down, and it spells Liz.
Yes, so anything that's 217, I usually do a calendar. That being said, we're going to look at Fabio's trade right now.
But snow has been a wild ride. I mean, you might look at the recent chart and think, oh, it's beaten down. Not really. No, I've traded snow for a while, and 217 seems a little high to me, and this isn't easy. In my mind, this is not easy to trade.
I know, but let's pull up his trade and see what he was looking at. Okay, so he wants to be bullish snow credit spread at the Feb 20.
Okay.
To the 200, 190 before earnings. Collecting 170, you've got a 78% pop. Do you think the DTE is too close, or would you be more aggressive?
I am a little bit. I didn't have success in snow. So it's
I know you didn't.
So it scared me because it would move a lot. I'd sell puts in there, and we'd get big moves in snow. So I haven't had much success trading snow. So I don't really trade it anymore unless it gets to an extreme and these options look really juicy. But I don't know what to say. If you're really bullish, sure.
Sure, yeah. I mean, Fabio's been doing this for a long time. He knows what he's doing. So, yeah, I wanted to pull it up so everybody could see it. We like it. We love the puppies in the snow picture. And sure, if you want to be bullish snow, go for it.
Liz wants the 217 calendar and maybe an earnings setup calendar. Let's see. If we did the 51-day, 23-day.
You can't do that. You got to do.
Oh, there is no 217.
Yeah, with that, when it's hot, so high, it's got to be
weekly. They don't even have in the 30-day.
Do they have in the 23-day? No.
two.
Go to the 23 day.
23 day. There's a 217.
Yeah. So do the 23 day, 15
But
days.
that's all going to be over before earnings.
I want to see how much it is. It's going to be expensive because if you're buying it for $9.
Okay, so if you're buying the 217 here, and then where are we going to sell it? 9 day?
16 day or 9 day?
16 day. It's not expensive.
What you're saying is it's going to stay right here. I don't think that's going to
I
happen.
don't think it's going to stay right here, and it's not even an earnings setup calendar.
No.
It's just a calendar.
No, it was just fun to look
and
at.
62 rank, but it's not often we see stocks right at 217.
No. I look for them all the time.
Squeeze up too. Not much going on.
No, it's very quiet. And the traders yesterday were saying about how there's kind of a lull before the FOMC meeting today.
Yeah.
So, and that's really what we're seeing today.
So I'm going to
it's a lull except for the metals because can't stop, won't stop. Silver's up again today.
Silver, if you has had a wild ride today, and silver. So it's not.
We've seen it up as high as 104.
It was. It was, and we saw our silver trade here. We've got this, this strangle we're battling, short call added on a short put that we're battling. We saw it up higher, and we had a much more negative P&L earlier when we were coming in. Than there is right now.
So the rank yesterday was in 83.6, but I think it's been stuck there for a couple days. The fences are off. And this morning when it was 104, this is what I love about silver. This morning when I saw SLV, and I'm gonna be, I know Frank the Great uses SI when he talks about this. We're talking about SLV right now. When it was up at 104, the rank was in the 120s.
Right. It shot up. It really shot up. And you could see. I mean, look at the move. Here you could see 104.84, so almost 105.
Yeah.
But now it's settling back down.
Yeah.
Is silver going to settle back down? Yesterday at the end of the day, I thought, maybe it's starting to settle back down. Then this morning I was like, it's not settling back down.
No.
Now it looks like it's settling
and the rank
back down.
So when you implied volatility rank of over 119, remember the fences are off. So 100 isn't the highest and 0 isn't the lowest. You can get negatives and you can get above 100. This is saying it's priced to move. We don't know which direction, but it's priced to move.
It's priced to move. It's priced to move. So it's kind of a wild ride in silver today. And I don't know about gold. Let's take a look at GC. Was that moving?
It was up too.
It's up a lot. Look at gold.
Yeah.
So I think that pair is starting to come in line a little bit more.
It was. We saw that yesterday on Kai's thing that it has been so kind of blown out of the water.
Okay. All right. What else do we have going on? We have a lot. AV Games asked, what do we think of a Meta earnings play? There are a lot of earnings. He's looking at a double calendar.
If you go just underneath Fabio's, we can see Bob's. There we go.
So today, there's a lot. Microsoft, Meta, Tesla, LRCX, now, CLS, IBM, LVS,
MasterCard, Caterpillar, Royal Caribbean, Philip Morris, BX, and LMT.
So there are so many earnings today, but I would not put on an earnings trade until after the FOMC meeting and after the afternoon move in the market.
You're spot on accurate there because they're saying the market is going to move right now. Can we jump into the SPX and see what the expected move is for today?
Sure, let's do it. Okay, we've got expected move in the 0 day only plus or minus 26, which doesn't seem like a lot at all.
It doesn't. So you've got an implied volatility of 23 plus or minus 26. It doesn't seem like that big for a FOMC move.
No.
We've seen them a lot bigger.
I know. So you look at that. It's kind of crazy. You've got the 686, 6980, 6985 strangle or straddle, whatever, trading $29. That straddle's trading $29. 29 SPU points doesn't seem like much to me.
It doesn't. Not on a day like today.
No, but is the market right? Are we not going to move? Is the FOMC meeting going to happen and we're not really going to move?
Yeah, who knows? Only time will tell, Jenny Andrews. Only time will tell. Okay, but we're kind of going through that. The other thing that we wanted to look at now, I don't want to keep adjusting, but because we're talking about the FOMC meeting and we have the email asking about TLT, is now a good time to jump into our email?
Oh, sure. Go ahead. Go ahead and read it. I'm going to pull up TLT and we'll talk about the questions this viewer had. Questions about zebras, not just TLT, but zebra questions.
Yeah, but this was a TLT question, so it's good. And that's why it's kind of pertinent today, because the FOMC meeting, what you would look at is probably trading the bonds, right? Okay. So you mentioned in your show that zebras become more expensive when IVR is high, okay? I looked at putting on a call zebra in TLT. That means you're bullish TLT. expecting the zebra to be very cheap due to an absence of any IV. However, when I sell the 60 delta call and buy two 70 delta calls, the extrinsic value is not eliminated. To get positive theta, I have to go to buy two 100 calls. What am I doing wrong? Or is there something wrong with the mechanics? Okay, so let's take a look.
All right, so let's look at the mechanics of a zebra.
We'll break down two of them, right? Because I want to say that upon this, you might have gone too near term.
Well, and did he say sell 60 delta call? Because mechanics
70.
Are zebra
It's 70.
are...
No, he was right.
No,
sell 150 delta, buy 270.
Oh,
His
okay.
mechanics are correct.
Okay, so sell a 50 delta.
He was at the 60 strike.
60 strike?
This is an old email. So that's what I'm saying.
But it's not an old email.
The strike is the 65 call. So yes, that's what I'm saying.
But the email's not old. TLT hasn't been 60.
I read the email.
So, okay, let's just talk about mechanics of
because
saying
they're
a
going
zebra.
in, they have to buy the 65 call as the two they're buying. Just go through the mechanics of the zebra.
I think maybe it was flipped. Maybe so.
They were so deep in the money, they had to buy 100 deltas in order to wash extrinsic value.
Well, mechanics of a regular zebra are sell 150 delta, buy 270 deltas. So I'm going to buy 286 calls and sell.
You almost, I get what they're saying. You almost have to go to the 85.
So yeah, if I'm looking at this, am I washing extrinsic value? I'm getting $1.20 in extrinsic value on my short, and I'm paying 97 twice. So I have to move this. If I'm paying $2 extrinsic value, I have to move this further.
I mean, this is a moot point when you're looking at this because you're buying a 46 delta and you're selling it. You're selling a 46 delta and you're buying 277s. You kind of have to use some. I like this question because it makes sense. We never looked at the deltas, and sometimes I start with the deltas and then check the extrinsic value and adjust accordingly.
Right. So just to be aware of the extrinsic value, check it. When you're selling something, see how much you're selling. And then look at the option you're buying, see how much you're buying. You kind of have to check it, and it's good that he checked it and said, okay, that 70 delta really wasn't covering it. I had to go further down, and it could be product by product, and it could be different depending on put skew, call skew, whatever kind of. And if you're looking at deltas, if something has a really big call skew, you might be going further out of the money for that 50 delta call. I still keep it at the money.
Yeah, you do. Can you do me a favor? I think this might be the problem. When you're putting on a zebra, we prefer time. So it might be a problem if you're too near term. If you're in a nearer term cycle, you might have to go a little bit farther down.
Or even if he's really far out in time.
Or really far out in time.
And we're so used to them putting them on somewhere between 30, 45 days.
Yes. And so his first question was, we said that zebras are less expensive when the implied volatility is lower. And this is true. So this is a stock replacement. You can see that Jenny has constructed this zebra as a stock replacement using $490, where you will control 1-for-1 up move in TLT for the next 51 days. And that is versus if you were going to go buy that stock. How much is that?
So $490 for the zebra. If we bought the stock, if we bought 100 shares of TLT, that's going to be $4,377. So it's and here in this scenario, it's a tenth of the price of just buying the stock to control 100 shares of stock. It's a tenth of the price. He had a question about IVR.
The question was, the zebras become more expensive when the IVR is high. That's why he assumed TLT would be cheaper. He was just concerned about having to go so far in the money. Just wash extrinsic value and then look at the strikes when you look at it.
And we shouldn't say IVR because IVR is
relative
for its own product. But when zebras become very expensive, when you have products that have very, very high implied volatility. So, if you've got something with very, very high implied volatility, that zebra is going to be more money. Here, TLT has a 13% implied volatility, so the zebra was only $4.90.
10% of the stock price. So let's compare it 10% of the stock price. So and that's in a margin account. So it's actually only 5% of the cost if you're in an IRA, and 10% of it if you're in a margin account. Now let's compare it to silver.
Right. So silver that has a very high vol right now, silver's vol right now is 109. If I go to, or it's a 97 here in March. If I go do a zebra there, this is what I was saying about the call skew. If someone's just looking at deltas, the 50 delta call is the 111.
And so that's another thing. So Jenny and I, we did invent the zebra, and we love it. And it's approximate, right? Meaning it's a 50 delta, 70 delta, because people needed mechanics behind them. But the crux is you're selling the at the money and you're buying two to wash extrinsic value. That's really all we're trying to do.
So if I sell this at the money and I'm getting about getting about $15, I know I want to buy something in the money
For
where the
$7.
put is $7.50. So if I go down and find something where the put $7.50, it's a 72 delta. It's about that. It's about
that, yeah. But you're not. In this example, you're not selling the 50. You're selling the 57.
But in this example, it's $2,750 for the zebra.
Yeah.
So we're looking at $2,750 for the zebra, very high implied volatility, very expensive zebra. Versus like in TLT, and I know TLT is not quite as expensive as SLV, but not that much different.
But also, so I think you made a good point when you were saying we're conflating IVR. So IVR is high here, but the implied volatility, meaning that March 20th, 2026 implied volatility is 97.8 versus the TLT, the March 20th, 2026 was 13.
Right. So you've got a high implied volatility. What happens then? You have to make the zebra so much wider. Here I've got the 9104. You've got to make it wider to go down and buy that 70 delta because the expected move is much greater.
Much greater.
So it's costing more. And if you look at this, $2,700 for the zebra in SLV, and buying 100 shares of SLV is $2,800.
It's cash secured. No, it's not cash secured.
No, it's the same. It's the same.
Yeah.
The zebra is the same.
Yeah.
What?
That happens when they do higher implied margining.
No, but here's the super weird thing. Normally, margin is half the stock price. So
SLV's margins, silver margins has been crazy.
But it should be 50%. It should be $5,000. It should be $5,000 in buying power.
We have so many positions on in there. Did you see our buying power for the zebra was only $20?
Oh.
Yeah.
Because normally, like to buy 100 shares of this would be $5,000.
Yes.
You think all of our positions are
correct? Because if you put that zebra back in again, I know you can do it pretty quickly. Do the exact same zebra.
Sell a 50 delta
by 271. Yeah, you're good.
Where was I here?
Right. It doesn't matter. Just press 1. 2. There you go. Look at how much money it's only costing us $230.
Oh, yeah.
Because we have so many positions on an SLV.
Right.
That's the problem. So if you wanted to look at it in something, we don't have anything in GLD.
But $2,735 is the buy.
Yes.
Would be the buying
We
power
can let's look at GLD because I think GLD also has a high implied volatility, and we don't have anything in it. GLD or GDX. GDX might be easier.
Yeah, because it's $110.
There you go.
Okay, here we go. Nothing in GDX. This will make more sense. So this should be $5,000 to buy 100 shares of stock.
And it is.
$5,000 to buy 100 shares of stock.
There you go.
And the zebra here, sell the 50 delta.
Which, if you look at this, it's the same concept. The 113 is technically the 50 delta. But you're selling the most extrinsic value you can get.
We get a lot of emails asking why is the 50 delta so far out of the money in certain products?
That's call skew.
A really big call skew. But I still think of the at the monies as the 50 delta.
I do too.
Whereas SPOOs unchanged.
Yeah, they're unchanged.
So sell that and then find a put with half this amount. So about $5, little less than $5. So here, this 102 or 101, either one. But this is still going to be much more expensive than that TLT. You're looking at $1,900, buying power $1,900.
So it's still less than buying the stock. That's what we want to show. It's still less than buying the stock, but with the high implied volatility, so this is a 58 implied volatility, it is still more expensive relative than your TLTs with a lower implied volatility.
So, and it's shocking how expensive. I mean, think of what GDX zebras used to be, how cheap they used to be.
My goodness.
$2,000 for a zebra now.
Well, GDX is a $110 product. I loved it at 23. I loved it at 23. So that I'm glad we talked about that email. I want to make sure we got to that. When we talk about zebras, the mechanics are there, but the mechanics in my mind are not the deltas. They're the extrinsic value.
Extrinsic value.
Yeah.
Right.
We were forced to put the deltas around it.
Just to make it easier for some people who focus on deltas more, but it's extrinsic value. And honestly, it's not even theta, because sometimes you'll throw in a zebra here, let me throw one in where for sure I'm going to wash extrinsic value. So if I'm getting $9 and I'll pay this one $4.50, so I know I'm paying $4.50 twice and I'm getting almost $9. This theta should be 0 and it's showing a -7 theta.
Yeah, you got to move that bar a little bit for me though, just because I don't like when it goes there. There you go.
It's
still a negative theta, but I like when the expected move is where it's supposed to be.
When the green bar is there. Yeah. Because think about it. If you're watching extrinsic value at expiration, your break even should be where the stock is trading. So if I go to the curve view, if I go to the trade page, curve view, analysis, my break even should be where the stock is. And here's our break even, and here's the flag. That tells me I'm not giving up any extrinsic value. If we were, our break even would be beyond the flag.
Would be beyond the flag. That's correct. So that's exactly what it is, a stock replacement.
Yeah.
I understand it. I like when we get these emails to kind of, talk through certain scenarios and things of that nature. This is, it is good. I'm glad we got it. And it does get confusing if you're not using the right deltas or things of that nature. Right. When we set them up, we'll start with the deltas, but I don't even look at the deltas. You don't even need delta up. When we put a zebra on, we should take that off.
Take off the delta.
Take off the delta.
Just watch.
We're just gonna have volume on there.
We're changing the rules. I hope they can change our strategy series.
Yes, we're changing the rules.
Okay, so that's good. Now I'm gonna move on to, how about SPX study?
Look at that. We're in the SPX bit. We might as well do an SPX study.
Overnight moves as 0 DTE signals. Brace yourself, Liz.
Give me 2 seconds. I'm going to try to pull it up with you.
Okay. Overnight moves as 0 DTE signals. So this is a good one, talking about what the market's doing and how it opens in the morning, how that could affect your 0 DTE trade decisions.
Yes. I think it's overnight moves, not yes.
Oh, but I'm right. But I think from yesterday's close to today's open, if we woke up today and SPOOs are up 50, or if we woke up today and SPOOs are down.
Well, and my one good eye this morning when I was the first thing I do is look at my trading account to see where everything is. My one good eye looked at it because I put on that Punished Pixels trade yesterday, so it was in my account, and I had the E-mini S&Ps up there. I thought the SPOOs were down 145.
Because it was marking that, and it's just not used to having that right on top.
I was like, whoa. So I was like, okay, so yes, but.
All right, so here we go. Overnight moves and as 0 DT signals, 0 days to expiration options have surged in popularity. We know that. These guys know that. Everyone around here knows that.
You know what? And we're getting more and more and more, and I'm getting more and more questions everywhere I go about 0 DTE SPX options, because I feel like it's taken on a life of its own, and I still think it's in its infancy.
Well, look at this. Now representing over 40% of SPX option volume, giving traders access to exceptional intraday liquidity.
Yeah, it's fascinating to me, and that's why these guys are very active. Okay, with so much activity, traders are eager to find signals to gain context around their 0 DTE trades. Everybody wants context.
Everybody wants to tweak their trade, improve their trade, have better performance results. Everybody does.
They do.
Right? Overnight gaps capture international markets, news flow, and positioning changes that could signal favorable or unfavorable intraday conditions for option strategies.
Correct. Now, there's so much information in this. I don't want analysis paralysis.
Yeah.
And I do think it's good to kind of take everything that you're watching, or every research piece, and take it with a grain of salt, right?
And I don't think I'm going to be up at night watching the market all night, deciding
what am I going to do with my 0 DTE?
What am I doing with that put spread tomorrow?
Well, and that's just it. Is like if you keep your size in check, you're not tweaking it that much, right? Okay. So today we'll examine whether overnight SPX moves can improve strategy performance by filtering out disadvantageous trading days.
Okay.
I'm going to say something that I really don't know, and shame on me. So shame on me for this. SPX doesn't move overnight.
Well, the SPOOs do.
I know, but you can't you're going opening to closing on SPX.
I know, but he's just talking about a market move overnight.
I just felt like I should put that in there.
I think he's just talking about the move.
Yes. Because you can have an underwater close and an underwater open where the SPOOs are different than the SPX.
My interpretation is when we open in the morning, are we up 20? Are we unchanged? Are we down 50? Like, what's the morning? What are we doing in the morning?
Yes.
That's my overnight. My overnight move is from the close to the open.
Because you don't care what it did. You don't care if
I don't care what it did at 2 in the morning, 3 in the morning, 4 in the morning, because I'm asleep.
Okay, perfect. I just want to be crystal clear on this.
Here's the study. Let's see what Jacob does.
Nearly 3 years of data in 0 DT SPX options collected every 10 minutes.
Considered selling 0 DT premium at 9 a.m. plus or minus 5 minutes every day using iron condors.
And there's a lot of information, and he gives it to us differently. So you got short strikes at 40 or 20, which is great. And then you got $10, $20, or $30 wings.
Okay.
And then they closed everything at 20% of max profit.
Filtered results by the size and direction of the preceding overnight SPX move. So if he's saying overnight SPX move, that's from 3 p.m. close to the next day's open.
Okay, and then the large moves. Okay, large moves were greater than 0.5% up or down.
Okay.
Small moves were between 0.2 and 0.5, and less of a move is 0.2 up or down was deemed flat.
Okay.
Okay, got it?
Now we know the parameters.
Percentages. Now, so from that, like, just
So when it says large moves, it's greater than 0.5%.
Hold on. So, like, if you're looking at SPX right now, is 60.
Today would be a small move.
69.79. So, but you're looking at a very.
Today's nothing. Today would be flat. Today would be a flat
I just want to. I'm going to pull my.
But it's a different day because we have the FOMC today. So I think you look at that different with the SPX trade.
Can you go into your into the platform? I just want to show where was the close yesterday. What people can look at.
All we need to know is where did we open, and we opened up.
I just want to show people, like, where do we look at for that on the chart?
So yesterday we closed at 69.78, and today we opened at 70.02.
Okay, so 69.
7002.
69.08.
And today we opened at 70.02.
So that's a $94 move, and if I divide it by that, right?
69. Wait.
So this is a 0.01. So this is flat.
Yeah, we're flat.
We're flat. Yeah. I just want to say, but a 0.5 is going to be it's going to be a bigger move than you think, and that's the large move.
Yeah.
That's what I'm saying.
Yeah, I mean, if we're getting 0.5%, that's going to be at least 35 SPU points.
350.
350 SPU points. 350 SPU points.
Yeah.
30.
I just wanted to put it in context because when you put those in percentages, that doesn't. I was like, that doesn't seem like that much. That's a big move. When we're looking at this, that big move.
I mean, you're right. It's SPX almost 7,000.
Yeah, I just rounded
10%.
Mm-hmm.
So 0.5% is 350, which seems massive.
Okay, I just want to put it in perspective.
So when you're looking at Jacob's study, and we're seeing large moves were greater than 0.5%.
Yeah.
That's a big move.
Yes. And so then if I'm going to do between.
Yeah.
Okay, between two, so 7,000.
So a 2% move would be like 140 points.
That's correct. Okay.
So we know today and every day.
I thought it was that
every
today.
day this week was flat. Like we're just flat. So.
Yes. So just to kind of put it into perspective, and I'm glad he broke this out, but I wish it said that on there because it's gonna scare me less knowing that it's a massive move is the big one, right? Okay.
And know that most of the time we're flat.
Most of the time we're deemed flat, right? Okay.
Okay, so overnight moves, short to 40 delta, $10 wings.
And these are iron condors.
So those are tight. Those are tight. Short 40 delta on both sides, $10 wings. Win rate. So you're looking at large down overnight move, small down overnight move, flat overnight, which most of the time we're going to have flat.
Okay, and 40 delta is very, very close. If I look at it right now, you're literally $5 up, $5 down. $10 wide wing, you're collecting around $7. That's always going to be the case. You have a very low drawdown here.
So this flat overnight move performed.
Look at the count, 295. But we've been flat.
We're mostly flat. Now, the reason I think, this is just my own opinion, the reason I think the small up overnight move didn't perform well, because I think when we get those overnight moves and we open up, we keep going up and it blows through the calls, is my guess. My guess is then we keep going up and we blow through the calls versus the large up overnight move worked out because we're already up so high.
Yeah.
If you're already up 0.5%, you're already up so
then
high.
It stays,
but if we wake up and we're up 0.2%, like we could keep moving throughout the day and it blows through the calls.
Correct.
Yeah, that's my guess. But so if
now we're going, and with this he goes $10 wing, $20 wing, $30 wing. So there's going to be 6 charts.
Now $20 wing, which again, worst performers that small up overnight move.
Yeah.
Yeah. And I'd be curious to see if of that small up
but
overnight
it's not
move,
even that small. Small is considered 140
0.2% to 0.5%.
Yeah, it's going to be 140 points to 350. That's not a small overnight move.
No, because most of the time we're flat. You see, 295 days we were flat.
Yeah.
But you get a large move, 0.5% or more to the upside, and those worked out. You get a large move to the downside, those weren't that great.
They weren't. Let's see if you get wider in the wings, do the $30 wings. Once again, you're overnight flat. Well, it's just kind of like the market does what it did last night. If you're selling premium on both sides, so the flat move is going to give you a flat day.
It's interesting to me that large up overnight move works.
Yeah.
The best.
Yeah. I I don't know, because you only have 73 occurrences.
Yeah, that's true. Only 73
That's what I'm saying. So when you look at it from that perspective, you have to kind of, it's not like you're saying you're getting $84 a day. This only happened 73 times in 3 years.
But I will say, you get a big down move, maybe I'd stay away.
Don't touch it.
Yeah, down more than 0.5%, don't touch it. And usually we don't on those. I know we're getting bigger vol.
Well, on those days, I'm not selling. We're a full disclosure network here. I don't do the iron condors.
On those days.
I don't do the iron condors.
And I just do I've just been doing the put spread too. And my takeaway still with these small up overnight moves, in my own opinion, it's the calls that are
getting myrtleated here.
Yeah.
I agree with you. 149 times those calls got myrtleated.
Now, short 20 delta, so you're giving yourself a little more room. $10 wings.
So you're giving a little bit. So what is the short delta here? 20 delta? No, it's going to be much more on the open.
It's crazy how the big that large up overnight move gives you the most. Such a big, and here even a large down overnight move worked.
So this is
the large moves give you more.
This is $10 wings and a 20 delta.
Yeah.
So your credit right here is about right now it's $3.40. So it's between $3 and $4 is what you're going to get versus the 7s. So your drawdowns here are bigger.
And in all of these scenarios, it's taking profits at what, 25%?
25%. So your drawdowns here are bigger. That's what I was going to say. Is your average P&L should be less because your drawdowns are 2 times what they are in the other one. This flips your probabilities over.
Is it surprising to you that the best performers in both these scenarios are big down move, big up move?
Yeah, that is surprising. It's kind of shocking. I honestly, when I see this, I think I want my drawdowns to be less, and I'm only doing it when the market doesn't move.
When the market's has less than a 0.2% overnight
then
move,
140-point move, it's safe to do this.
It's safe to do this. And now the $20 wide wings, so you've got more risk, but you're collecting more on that spread. Here, you know what? This is the first case where everything's positive. This is the first case where that small overnight move.
But I don't. These are all.
Oh no, these are all positive here too. The 20 delta, and some people gravitate to the 20 delta. We know Jack Tucker does.
Yeah, people do like these, and then I think all these when you look at this, Jenny. I mean, there were some that were don't do this. I get that. There's some negative ones, but all these are pretty okay. So let's see what his takeaways are.
Okay. And then this is $30 wings. So then you're widening the wings, taking a little more risk, and then here you're...
Small moves, not good. Either side, up or down.
Yeah. But small, again...
Small is not small.
It's not that small.
Small is too big for me.
Most days, most of the time, we're flat.
Yeah, agreed. Okay,
what are we doing now? Spruce down 4.
Let's see the takeaways.
Okay, takeaways. Over the past few years, there hasn't been a bad time to sell Delta Neutral, 0DTE, SPX Premium, but that doesn't mean all days are created equal.
And then small overnight moves up 2.2 to 0.5% showed the only consistent underperformance, though narrower wings and further out of the money positions is still generally profited.
Okay. Large overnight moves greater than 0.5% were often followed by strong 0DTE profits, particularly for further out of the money strikes.
Okay, that's good. But flat overnight moves, greater up or down 0.2%, were followed by good consistent results across all mechanics considered, and thankfully represented the plurality of trading days. I love Jacob's
strike
verbiage.
Selection matters. Further out of the money trades outperformed after large gaps, while closer at the money worked better after mild overnight moves.
Yep, application is flexible. There you go. So you can skip unfavorable days, size up for promising conditions, or adjust strike selection based on the overnight moves.
Maybe if we get, and everyone could take what they want from this, but in my mind, if it's a flat day, I'm probably still sticking with my put spread. If we get a massive up move, like up more than half a percent, then I'm going to do both sides.
You do you. But I don't think that matters. This is SPX trading is a menu. That's your risk parameters. That's your risk profile.
Everyone can do what they want.
That's what you gleaned from this, and I don't think there's anything wrong. You can take any takeaways from it.
And the nice thing is, we don't even have to do any math. In the morning, when the market opens, I'm going to look, percent change. If this is less than 0.2, I'm good.
Yeah.
If it's 0.2 to 0.5, I'm waiting. I'm sitting out that day.
But that was what he was saying. It's
0.2 to 0.5.
It's 0.0. Yeah.
0.2 to 0.5
of a percent. Yeah.
Yeah.
Okay. Good.
And if it's 0.5 or greater, Load up.
I mean, that seems like a very large number.
I know.
That's why I was like, wait, when we were reading it, and I had to bust out my calculator, so I was like, hold on, wait a minute.
Oh man. All right. I'm gonna pop back in Twitter, make sure we got to everybody.
Yeah.
Oh, maybe see. I think you need to move your decimal over one position. 0.5 is 35 points.
It's 0.5%. 0.5 of 1%.
0.5%.
That's what I was saying. Is this that big?
Yeah. So then it's not as. So
7,000 times 0.005.
Yeah, 35.
Is a big move? Then that's kind of very nitpicky, because if it's up or down 35, I feel like that's a daily basis.
And Don Duke says SPX options move overnight. So thanks, Don Duke.
Your friend, Don Duke. I love it.
Okay, so yeah, 0.5%.
Like I said, shame on me. I don't look at SPX overnight. I only look at the SPOOs.
Let's see. Let me look again how Jacob worded this. Yeah, because he has the percent there. So the percent would mean, move it over 2 decimals.
So it's $35. That's not a move at all. So then
this is all.
Because then did we have a wild move last night?
Well, okay, here, look at this. SPX right now, percent change, 0.1%. Yes, and we're only down to 760 and we're 0.1%. So we're not that far from the 0.2.
No.
Florida 7's right.
Yeah, Florida 7's right. Per usual, Florida 7.
Oh, funny.
Because I was like, that is a big.
No, y'all. We have to look at it here.
Yeah, you have to look at it.
We're not that. We're 0.1 away from the 0.2.
Yeah.
But I don't know if you get that 0.2 to the 0.5. Are you surprised most of the days are below 0.2?
Yes. It threw it on its head.
Well, I'm glad I went to Twitter and checked this.
Well, because it doesn't matter what the overnight move is. To your point, it's morning to end.
All right, the beautiful Fozzie is coming in. Love to see her. Back into SLV. Sell the Feb 80 put. Sell the March 75 put. And the March 110, 112 call spread.
So she
a Jade Lizard
is-
of sorts.
Yes.
Collected 490. There's a lot of premium there. She's, I would say, neutral to bullish.
Here, let's pop in. Let's pull it up. I'll pull up her
Yeah, you
strikes.
read the strikes. No risk to the upside. Downside break even around 78.
Okay, ready? SLV, Feb 80s. Feb.
Now we have our position, but so it might mess with it. This is what we have going on right now.
We just have a strangle.
We have a strangle, and here's SLV right
Yeah, but
here.
we can I know.
Should we roll our put up again?
Maybe, but let's look at her thing first. We can take that off when we look at it in the curve view. So Feb cycle, sell the 80 put and the March 75 put.
So we're short the 80 put already.
Okay, put another one in.
I'm getting a phone call. Okay. Feb 80 put.
So she wants the 80 put and the March 75 put. So just go one strike up or one strike down or something. Go to Feb.
Okay, March 75 put. And I'll add on the Feb 80 put.
Yeah.
Even though we already have it.
And
Feb
then-
80 put.
Feb 80 put. Okay, and then you go into March and you buy the...
Oh, sell it,
and
right?
March, and the March 110, 112 call spread sell.
So she's getting
110, 112.
Oh, 45. So she's getting most of her credit from those puts. Most of the credit from the puts. And it's tough with really big call skew. It's hard to get much from the call spread. But she is getting, 50 cents or something from that call spread. So she's collecting 488. No risk to the upside.
Yeah, she says 490, no risk to the upside, break even around 78. I don't mind it. If I wasn't in, I don't mind it.
No, to the downside. Now her risk is getting long 200 shares of SLV because she has a put in Feb and a put in March.
Yeah, that's a Jade Lizard.
But it's a Jade Lizard, but you have
and you can't
an extra put.
You can't use our buying power on here just because I don't know.
No, we've got other trades on.
Things. Can you go to the curve view for this?
But it's like no, because we have other trades.
Yeah, you're crossing cycles.
Yeah. And we're crossing cycles, and then one of our old puts is the same strike as this put. But there's a lot of premium there. 120 rank, there's a lot of premium there, which made me question to Liz, should we roll our put up again?
Are you feeling okay? I'm okay rolling puts up, but I'm bullish metals.
So we took in, what did we take in? $2. I mean, these puts aren't moving. That's the problem. They're like nothing's moving. So if we roll it up, are we even going to get anything? If we go from the 80 to the 85, we'll get $1.11.
It's $1.11. It's not bad. I mean, 85, if you look at the chart, Jenny, I'm fine with this.
I know.
I'm okay with this. If you're okay putting puts on, that's fine. I just don't want you to be like, when silver comes down, because you keep tin cupping short silver. Tin cupping, ladies and gentlemen, is now. How about now? Now? How about now? And then yesterday at last call, she's like, I just can't stop myself.
Okay, so I will say, let's talk about the Bad Trader Tour. So Liz and I went on the Bad Trader Tour, and on the Bad Trader Tour, I talked about some bad trades and what we learned from. And my worst trade was DocuSign, where it kept falling, and I kept adding to it. That was probably one of my worst trades. So what I learned...
And people make bad trades all the time. Like, this happens.
Yeah. So what I learned was, when you hit your size, don't keep adding to it. Now, silver has got me mad, and I have a loss in silver bigger than what I wanted. So I keep trying to say, I'm going to try to make my money back. I'm trying to make my money back, which is costing me more money.
Yes.
So at what point do I cry uncle and just say, I'm going to take this loss in silver before it gets too far out of hand?
I don't know. So trading is a tricky mental game, correct? So
yes.
I mean, and this is true of anybody. I'm not saying Jenny's the only one in this situation. God knows I've been there, and God knows I tin cup things too. We're all guilty of the same thing, and there are going to be losses in trading accounts. And sometimes those are bigger than a breadbasket, and sometimes they're hard to stomach. It's just like right now, I've got a stupid little SPX put spread on, and all I keep doing is looking where the spoons are.
Yeah, but you've got that one bear trade too. So like that could help.
I know that, but all I'm saying is there are losses in trades, and there are ones that hurt worse than others. So it is what it is, and you just have to come up with how you're going to manage it. And I don't think you're at your pain point yet. I really don't think you're at your pain point yet, because I've seen you, and everybody's is different.
Well, and I will say,
everybody's is different.
Like you hear us say this at Tasty Trade all the time. Risk is managed at order entry. So if you don't want undefined risk, define your risk. Risk is managed at order entry. Also, it's tough. Like, we have this naked call in SLV. We never thought it'd be blowing through 100.
You never do. You know what does Tony Batista always say? The best laid plans of mice and men. You never think so. It's kind of like you sell a short put. You're like, I don't mind owning into this. You don't want it when it's there.
Right. You don't want it when it's there. And so, did we think SLV would get over 100? Do we want that short call now? No. Is it okay sometimes to take a loss?
Sure.
And I think that's a hard pill to swallow for some people. And for me, it's much easier to take a loss when it's less of a loss, to say like, oh yeah, I'll take this loss because I know I can make that back quickly somewhere else. It doesn't have to be in the same product. And TP will say that. Like, the money doesn't care what symbol it's coming from. Like, your money doesn't care if it's coming from SLV or SPX or Oklo. I saw we just had a tweet about Oklo. It doesn't matter where it's coming from. You don't have to make that money back in that same product.
You don't. You definitely don't have to make your money back in that same product. But yeah.
So I mean, that brings the question of like, our SLV. There was so much extrinsic value in that 100. At what point are we going to say we're going to throw in the towel in there or change it?
Yeah, I mean, at some point we have to. Now, we talked about this 2 days ago, too, with SLV, because the good news, and I'm not trying to put a silver lining on it, is the way that product is structured from an implied volatility standpoint, it's as if we have a naked put in a normal product. I know that sounds crazy, but you notice the IVR is going up, which means there's a lot more defense. If you wanted to, you can put it into a straddle. So, hold on. Jenny, we don't have time for anything else because we are almost out of time. So I'm going to play a rapid fire game with you. Stay in the platform.
Okay. All right, I'm in the platform. Rapid fire.
Rapid fire. We are going to go to Bob's list, and I'm just going to say, you tell me if we have any positions in any of these, okay? Because we're almost out of time.
Okay.
Microsoft.
Yes, we have a
put
spread.
Put spread.
Put spread. 23 days. We've had this on for 29 days, and it is not a winner. Even with Microsoft's recent rally, this is not a winner.
Okay. But we're going to leave that. That's our earnings trade. Do we have anything on in Meta?
Meta, no.
Okay. Tesla?
No.
LRCX?
No.
Now? Or do they mean to say snow? Okay. CLS?
No, most of these we don't have.
Okay. IBM?
Nope.
We're just rapid fire, and then this is the end of our show because we're getting the hook right now. LVS?
Nope.
MasterCard?
Nope.
Caterpillar?
No.
Philip Morris?
No, I think we're
EX?
good, Liz. I don't
LT.
think we have to worry about it. The only thing we have on right now that we've had on for a long time is that Microsoft put spread. We have a GTC to take 50% out of it. We'll just leave it.
And I'm not placing any earnings trades until after the FOMC.
No, I'm not placing any until after the FOMC. That Microsoft trade isn't our earnings trade. It's just been with us for a long time.
Yep. Good rapid fire. You played the game very, very well. We are out of time for today because we have to clear. There's lots of guests that are in town from.
There's a lot going on. A lot going on at the studio. So everybody, thank you so much for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal and, of course, Glenn Freiberger for this edition of Tasty FX / Option Trade Concepts Live / what's happening after the close with these earnings reports / whatever else.
/ so much fun.
Yeah.
How about that?
Yeah.
How about a great time?
Yeah.
Yeah. Keep it going. Let you add more.
I could keep going.
/ cherries.
There you go.
We're officially.
He did cherries behind you.
Yeah, exactly. We're officially in the quiet window right now. It feels like we're in the quiet window.
I mean, the market is flat today, but it doesn't really surprise me considering we have some big name tech stocks reporting after the close today in Microsoft, Meta, and then tomorrow you've got some more before the open and after the close. So really, this is the kickoff of some of these big tech stocks. See what's what here. We put on positions in Microsoft and Meta yesterday.
Yes, we did.
But time will tell. But really, the one thing we do need to talk about, which we will talk about, is why my account is down so much in Tasty FX from being long the U.S. dollar.
For just being a patriot.
Yeah.
Why is that so punished?
Yeah. And it's sickening because it's the dollar franc position that I could have closed for a tiny little win.
Yeah.
And now I'm just getting eviscerated.
Yeah, a complete reclassification of that market. A huge trend down when, in most scenarios, a pretty low volatile pair, only coming alive on specific risk-off scenarios. But the Sell America trade has been one of those scenarios. You nailed it in terms of build up to a ton of earnings for major equity indices. From an FX standpoint, same kind of waiting period for this afternoon's FOMC decision. Always excited to see our Lord and Savior Jerome Powell take the mic in his purple Go Cats tie, but not expecting too much from him today. A rate hold on the docket and no major data points or projections, what have you. Some of the spicier guesses from them that they release, quarterly. And so not a ton of expected action from that, but he does certainly, from the meeting itself, but from Powell's commentary, that meets us in an interesting place where he certainly could get asked about a lot, whether he chooses to indulge in specific takes or more so declines to comment and just sticks to scripted, very cool responses. We'll see, but he's had some pressure on him lately in the form of the DOJ investigation, and compared to a lot of his rhetoric, a fairly defensive response to that. So we'll see what kind of J Powell we're getting today. And he's close to the end of his term, so maybe he just starts loosening the tie a little more.
Let it fly.
Little spicy Powell.
Who knows?
Loosen the tie, let it fly.
Everyone's getting spicy these days. It's even funnier because under the current administration and geopolitical developments happening on a whim, you do check your quickest news sources more often. On the TastyFX native platform, we have a live Twitter feed in the platform that I keep up and handy, and even those, it's a curated curated list of like First Squawk, Financial Juice, and whatnot. But even their tone is getting a little more wild. They're tweeting about Nicki Minaj and if she'll make an appearance with Jerome Powell. It's like, guys, what are we doing here?
But it's not far off. Like I just told you guys, she just showed up at something. I don't even know what the heck it is, but wow. Before I make that conversation go far, more interesting than even the FOMC, the dollar. The dollar's at a 4-year low. Like, what is the deal? What's really the deal with the dollar here? It's been getting smoked, and it's been a volatile time period in the dollar over the last couple of years.
100%. If you will indulge me, I'll take you through a quick walkthrough of what's come across my desk and interpreting this dollar story over the recent few days, past weeks even.
Cool.
But you're absolutely right. The headline, dollar breaking multi-year support levels across the board on Tuesday. Yesterday, we had, spin the wheel for major currency pairs. We had Euro-dollar above 120 for the first time since 2021. British pound similarly above 138. US dollar Japanese yen down 4% since Friday. Dollar Swiss franc approaching levels we haven't seen since 2011. And the Australian dollar above 70 cents for the first time since 2023. So across the board, remarkable US dollar weakness, and a few catalysts over the past few days that really sent this into the stratosphere. The headline from a lot of major news outlets was its 4-day decline, the biggest since April, the tariff announcement of last year. And so Tuesday's catalyst yesterday, we met, we'll get into the week before, but when we woke up in the U.S., we're already meeting a U.S. dollar that had weakened gradually throughout the European session. And then right after U.S. market open, we got a consumer confidence number that printed at its lowest since 2014. A seemingly mid-tier data point, but enough for market participants to latch onto and continue this kind of sell America trades, reduce our risk in U.S.-based assets such as the U.S. dollar. And that pressured the dollar throughout the morning. That pushed Euro-dollar to 119, which we hadn't seen since 2021, I believe. And then Trump got on the horn in the afternoon, speaking to reporters, and he was asked outright about the dollar's decline, and he dismissed it almost altogether, saying he thinks it's great. He wanted the dollar to be free, seek its own level, calling that the fair thing to do. even suggested he could move it up and down like a yo-yo. We'll get back to that in a second because it gets a little funnier. But markets instantly latched onto that, and we hit all those highs or lows for the dollar that I just mentioned, those multi-year extremes. And this comes on the heel of why, you ask yourself, why did we latch onto this so much? And it comes on the heels of last Friday, an interesting wrinkle in the US dollar Japanese yen intervention story, where we've been at those weak yen levels for months now, it seems. And on Friday, the New York Fed got on the phone and started pinging other banks asking for a rate check. What would you quote this yen at? And the interpretation there was, the U.S. doesn't normally do that. If they do, it's usually communicated that it's on behalf of Japan, helping them intervene into these markets directly, a Japan-only liquidity injection to buy back the yen. Without that kind of caveat, markets interpreted as, whoa, this could be a coordinated intervention of buying yen, not only Japan's finance ministry, but the Fed and the Treasury also stepping in. And that caused a nearly 2% move in to the downside of the dollar yen, as you're seeing that huge red candle there, as kind of a self-fulfilling prophecy. Didn't actually do anything, but much like, walking up to the mound to relieve your starting pitcher, doesn't mean you're going to take them out, but it's certainly the first step, and not only affecting that market, but started to get the storyline in participants' heads across the board for this dollar narrative that, maybe the Treasury, the Fed, reigniting the claims of this administration might favor a weaker dollar. So that was already in the back of everyone's head from Friday. That's how we stumbled into this week. And so when the president got out there and pretty much outright said, we don't care for a stronger dollar, we are more than tolerant of a weaker dollar even from here, that caused the absolute, elasticity we've seen in these dollar markets that we haven't seen for months, even coming up on a year since we've seen that kind of volatility. And the funniest part about the yo-yo comment was sitting here on Wednesday, when we're looking at dollar charts, we're seeing a pretty significant uptick back in the US dollar, not nearly to the degree of the shakeout, but still pretty sizable across the board, 0.5% here and there. That dollar yen that we're showing, almost 0.75%. And that comes on a yo-yo-like walkback from Treasury Secretary Bessent this morning on CNBC, when it was very apparent, trying to calm things down, but worked enough, reaffirming that the U.S. has always had a strong dollar policy, and they're just trying to set the right fundamentals for that story first. And if they have sound policies, then the money will flow in. So a pretty interesting there, and explicitly denied intervention speculation. And so that's where you get back to that dollar yen market of, if we shook out almost 4% here over these few days on specifically a majority of that on intervention speculation, just how much would you give back if this is denied? So a real game of confidence right now in these dollar markets, trying to speculate on what administrations are going to do. Perhaps that sets the board for, if you believe there won't be any immediate intervention, maybe this dollar yen has more correction in store. But the tough thing that we've seen from the past year of dollar price action is once we get people hedging outside of the U.S. on that selling U.S. assets trade, it seems to be a lot harder to get back into it as we, regardless of this recent move, we're still sitting down 10% from a year prior against a ton of these major currencies. So a ton of back and forth, perhaps a tension in the administration or you could see right through it and say, well, Trump, said one thing, and this is just kind of an attempt to publicly walk it back. So regardless of, your directionality, perhaps a lot more information now from not necessarily a fundamental macro pure number backdrop, but in terms of the key players, getting a little more information on how people are treating the longer term view of these currencies has made it interesting, particularly, the bull and bear case. I mean, you have a short-term bull case in the form of, if this walk back, you believe this walk back is the true policy, he's the one in charge of a lot of these, the Treasury, perhaps some more movement back from some pretty elastic markets over the past few days. So if you're agile enough to try and play both sides, perhaps some bull cases there, but adding to the medium term bear case for the US dollar with, you could see it similar to a lot of these other like Asian countries, like the yen, don't necessarily mind a weaker currency, but do mind the pace at which we get there. So if this walk back is just saying, hold your horses for now, we can get there. We have no problems getting to an even weaker dollar, but not so fast. Makes for some interesting trading opportunities if you have the conviction directionally to parse through all this. But a lot going on, a lot of flows in and out of these FX markets, a lot on the table in the form of not only the policy announcement today, the rate decision, but if the government will shut down over the weekend. Also something to a near-term catalyst to consider heavily, because we get a dollar that performed historically worse on average during the shutdown. But we've seen that this most recent example doesn't necessarily mean it'll happen right away. Regardless, we'll get a new spending amendment agreement. We'll come to some consensus there, and that'll be adjudicated independently by these dollar participants. So, ton going on.
So you're saying I shouldn't be getting long the dollar right now? That's what you're telling me. I'm just messing with you. I'm just. It's fascinating to watch this move more recently. I mean, and there's a lot at play, as you just laid out so eloquently. I mean, there's a lot at play. There's all this. And nobody really knows. Like, there's all this talk about, like, are they really actually trying to weaken the dollar? Or some people really believe, like, that's what the government is trying to do for various different reasons. The one thing you can notice is that if they're going to weaken the dollar, I feel like that's good for these companies that still have a lot of large businesses overseas, like the Nikes and the Apples of the world. Something to keep an eye on when all these earnings start coming out, right? I mean, Apple's one where earnings have been kind of like blah more recently, but if this is going to be the new normal, something to think about.
Yeah, you're absolutely right, and you can pick and choose a lot from these. Besant saying, if we are shrinking the trade deficit, all else equal, that should lead to more dollar strength over time. Of course, that just one piece of the puzzle in economic theory, but it is an interesting exercise of not only who believes what, but what actually will help or hurt the country's economic prospects. But yeah, I mean, I can't help but come back to not only looking at the administration's tolerance for a weaker or stronger dollar, but global market participants already, I think before this whole year, going on a year of the current administration, I think there was a lot more, a lot higher perception of how, I guess a lower perception of how willing everyone would be to leave U.S. dollar denominated assets, and that's been tested. So even though I'm sure by whatever metrics, the U.S. dollar is still very safely the world's reserve currency, that whole narrative tested a lot with 10% plus moves to the U.S. dollar's downside. So a lot of wiggle room, whether you're trading this within a very short time frame, or building a portfolio over time, reducing exposure, gaining exposure. A lot to consider, I'm sure. Our good friends Chris and Ilya are building some longer term plays off of this development.
Yeah.
Different from where they were this summer.
Ilya in the house.
Ilya in the house
this week. He's
Stoked
sitting
to
right
see him.
there.
Great guy.
Right on the other side of that wall. Yeah, it's been wild to see the dollar just implode here. But question from the YouTube chat: do you see anything specifically with the dollar CAD, or is it just in line with everything else where anything long dollar is going to be weak?
Yeah, no, that is coming into this week was an outlier. I talked about how Friday we got more widespread dollar weakness as we landed on Monday. The outlier over the weekend, Trump threatening 100% tariffs on Canada specifically. So we do know that Canada continues to be kind of unfortunately an outlier target.
Just catching strays.
Exactly. so there's still some idiosyncratic risk from U.S. policy towards Canada specifically. The dollar selling train taking over now this week, but continues to be sensitive, but not necessarily as big of a liquidity pool to receive outflows from the U.S., if that makes any sense. But the other thing more broadly that if you will deem this 4-day stretch in exercise is just seeing which of the dollar pairs are more elastic in this environment. I mean, we saw bigger percentage moves in dollar Swiss franc. Yesterday was down almost 2% on its own. Of course, highly correlated to the euro, but for active traders, knowing the difference between magnitude of elasticity between those two currencies, I think is really interesting. Australia's got enough of their own, story going on before this kind of U.S. dollar story took over. That currency's been building a lot of strength off its own fundamentals, which has been good to know. I mean, their inflation is rising, perceived sustainably well, and employment in the same kind of good news camp, enough to keep those rates higher. So if you are tracking some fundamental analysis, it's important to note where it's more of a story and where it's just perceived risk. So gold also helping Australia as of late.
Are there, if not to put you on the spot, but are there any times that you know about across time where we had such dollar weakness and we still lowered rates?
I can't say I know, except that in theory, it should be independent, right? And if we've had an independent Fed thus far, I'd assume that doesn't go into the calculus as much.
No, okay.
But we have seen also over history a lot more regions sticking to what the Fed's policy or rate schedule is. And so it gets, if that part's less interesting, then the prevailing dollar weakness is more interesting from an exchange rate perspective. Now we're starting to see more policy divergence, which makes that the more interesting driver. But I did do before, before today, when Secretary Besant alleviated concerns that the U.S. would directly intervene. The last time that there was kind of a coordinated intervention in this dollar-yen market was 1998. I looked back. TastyFX charts go back to 1998.
Coordinated intervention for central banks?
Yeah.
It was probably because of long-term capital management. That was a firm.
That was around that time, yep.
Yeah. Long-term capital management is a great story. You should check it out. But it was this firm where these guys,
John Merriweather?
Huh?
John Merriweather?
Yeah, among other people, just really smart people in the industry. They should make a movie out of that thing, actually. But
I think he was a wildcat.
It was. I think they were getting long Russian dollars or dollars, and and they just completely devalued it, and so it just completely blew up the firm, and it was so big that there had to be a coordinated effort.
Because it was their strategy was some sort of basis arbitrage, so you had to lever up a huge percentage to be able to make the profits anywhere near substantial.
Yeah.
But yeah, back in 1998, if you're looking at this U.S. dollar Japanese yen exchange rate, that over the course of 3 months took us from highs down 21%. So, perhaps a one-off historic example, but does put an important lens or context around a 4% move in this market, that if you do get a substantial liquidity injection or change in perception, 4% might not be the extent of it. So an interesting case to watch. But you're right, I would watch a movie on that.
Yeah, they should make one. Sure.
Who did the book? Was that Michael Lewis or no?
I'm not sure, actually. I just know the story. I don't know if there's a book or not. I mean, I'm sure there's bunches of books on it.
When Genius Failed.
Yeah, that's it. Yeah. That's him, right?
Yeah, Roger Lowenstein.
Oh, never mind. It wasn't Michael Lewis. But yeah, When Genius Failed. But the story is fascinating. For those who don't feel like reading the book, there's a Wikipedia on it. It's and again, the players are involved. I feel like, why do I feel like, I feel like two of the dudes who were in it won the Nobel Prize for like other stuff.
It was Black or Scholes.
Yes, that's what I was about to say. I thought it was options guys.
Yeah.
Yeah, it's super
It was one of them.
interesting. Read up on
I
it.
think it was Scholes.
Read up on it.
But yeah, we are at contextually historic levels here, given the dollar yen is right back where it sold off from in 1990, close to it.
Yeah, so I mean, from your portfolio, I think an important look at currency markets is although over the long term do tend to be mean reverting, trends can take hold, and in a leveraged product can absolutely have a magnified effect on your P&L. For active contrarian traders, taking profits might still be a much smaller ask if we are in trending markets, as opposed to range bound, not as much risk reward for calling the top or the bottom. But it is nice to see, regardless, a little more volatility in these markets, more price points to try and get in and out for those scalpers engaging in some of these markets.
Yeah, and a big reminder that even the smallest positions can grow teeth. This portfolio was pretty much flat like 3 days ago, and now we are taking big heat on this dollar franc position, the euro franc, the Aussie dollar, the Aussie euro, the euro dollar. Every single one of these positions is down pretty big, and these are really small positions, all things considered. So just another reminder that size kills, and you got to stay small regardless of your assumption, because you have that. You always have that risk of this outlier move happening, and then the outlier move gaining momentum, and then fear coming in, and then funds getting blown out. Like there's always something. So
yeah,
gotta stay small.
And interesting that you had kind of you have both a short euro dollar position and a long dollar franc position, and picked a side on euro franc as well. And that could have gone either way. No, but we are, like I just mentioned, saw the magnitude play out, more demand going to the franc than the euro in recent trades. So Yeah, we'll see if that sustains. You start to get into interesting territory with such a strong Swiss franc as well, because the Swiss National Bank, not historically a huge lever of global monetary policy as much as the European Central Bank, but now we start to get into these levels, kind of the inverse of what the Bank of Japan is doing, but kind of a step back moment of, whoa, our currency is now the strongest it's been in 15 years across the board. Does the central bank have any role, or should it take any action in that? They've said no for now, but it continues to evolve into what I think is an interesting story.
Yeah, and I think 2026 is shaping up to be another 2025 in terms of projected rate cuts being pretty high, and now looking out, we're not going to cut rates today from a probability standpoint. March, same story. April, same story. June, you do have a slight possibility that we get a 25 basis point cut, but if you go from June to December, there's a strong possibility that we get 1 or 2 cuts this year. We're like, at the end of last year, it was like 5 or 6.
Right.
So
circle back in
again.
June.
Yeah.
Kick the can down the road.
Yep. Kick the can. Fun game. Unless we were talking about...
unless you're the can.
Yeah.
I don't think I've actually ever played it.
Oh, it's great. Ghost in the Graveyard, Kick the Can.
Ghost in the
These
Graveyard.
youngins will never know.
Yeah, Ghost in the Graveyard.
Well, what's Ghost in the Graveyard?
He is those youngins that you're talking
It was a
about.
game that required you to put the
Nice.
iPad down and go outside. and
Oh, no,
touch
pass.
Yeah.
I'm out. Is there a downloadable version? I'm sure there is.
There probably is. Kick the can for the iPad.
Yeah, exactly. That's what's going
Like
to
those
That's what
early,
my kid's going to play.
Like those early beer apps where you just pay $2 to have a simulated beer on your iPhone. You saw that?
No, I haven't
It's like 2007 or something where they're like,
I
we can do cool stuff with this. And it's like, if I tilt it, it looks like I'm drinking it.
I did see something that IKEA is paying people like $16 an hour to work in their digital stores in it must be like Roblox or some Minecraft, something like that.
It's a ride.
Wait, really?
Yeah.
Wow.
Yeah. So
I gotta.
There will be signs if
if you start bringing in a second laptop.
Yeah. So sorry.
Those will be on aisle 4.
Yeah.
Would you like me to walk you there?
Yeah, exactly. Yep. Yeah, crazy moves in the dollar. I'm just sticking with my positions because now that the dollar is going to 0, I need to just wait and see what happens here. But yeah, taking some heat. First time really that I can remember taking some big heat in this portfolio.
But not close to margin call. So good
No.
job out of you.
Thank you.
Staying small.
Appreciate it. Yeah. That's the goal.
Not easy.
It's always the goal. Withstand variance, and things might be okay. We'll see. Well, thank you, Glenn.
Thank you guys. This
Always
is
a pleasure.
Best part of my day.
Yeah. What do we have for lunch today?
Lumalnatis. But 2026, new year, new me. I'm going sweet green.
Nice.
You want sweet green?
And I love it.
Oh, at least if you get a kale Caesar or a Harvest Bowl, those are legit. Those are my favorite.
Yeah, those are pretty good. The barbecue chicken one, also pretty good.
You know what I really like? What did we have yesterday? Frenzy, right?
Mhm.
Frenzy. Those little salads that they make. Those
Yeah,
are
like
really good.
chicken pesto bowls.
Yeah, man, with a little pepperoni and oh man, and chicken.
Put some guac in there and smash that
Smash
lid
it
on there.
Yeah, those are good.
Well, enjoy your non-pizza.
Thank you.
Hope you have a great rest of your day.
All right, you too. I'll be tracking what you guys do for earnings.
Yeah.
Cool.
Meta and Microsoft, we're in already.
Yeah.
All right.
So just tail us on the follow page. Maybe.
Sounds good.
Or do the opposite. What happens if you do that?
I'm not gonna tell you if I do that. It's good to know.
If you want to follow Glenn on Twitter, he's at Glenn Freibarger with an A. Go check out his page. He's posting stuff periodically. Tasty FX too.
What, no, I really got it. Why do you say Glenn Freibarger with an A?
Because the spelling is with an A.
It's not people assume burger.
Yeah.
I guess.
Oh, gotcha. Okay.
Like Yeah, B-E-R-G-E-R.
As a-
B-A-R-G-E-R.
I mean, you say it so right, so it sounds like there's an A in there, but
I just got to make sure
guess
that people
you gotta
know.
Make sure.
It's, as long as no one's typing in Glan.
Glenn, we'll get an email. I'm sure we'll get an email.
Seriously, Glenn, don't even go there with misspelled names, okay? You don't want to go there. Trust me.
Okay, Jamal.
Yeah, you don't want to even go there. And that's not even half of it.
Oh, man.
All right. See you guys.
Later.
man.
E-minis, not doing much. NASDAQ, not doing much. Dow, Russell, not doing much. Bitcoin, flat. Everything's flat. Everyone's waiting for the Fed decision and apparently these earnings after the close.
You know the one
today.
thing that is moving? VIX 1D. I wish we could trade this thing. Like on days, just for days like this. They should make it tradable just for days like this. It was $9 yesterday, I feel. I remember looking at it yesterday.
Yeah, it is creeping up. Likely because we have some binary events after the close. Also, we have a binary event in an hour and a half here. And yeah, someone in the YouTube chat was asking, do you think the expected move is going to stay the same until the press conference or will it deflate before 2 p.m.? It will likely stay the same until the announcement is made. I didn't look at the one-day expected move in SPX, but
I feel like it was around the same.
yeah,
I could change that.
it's at 26 points now. I assume it was like 35 points at the start of the day. So it's not going to collapse at really much more than this until after the announcement is made. Then you'll see the collapse. And then, yeah, you still have some implied volatility in SPX, also in NDX. If we look at tomorrow and Friday, you still have some elevated implied volatility in the 28%, 25% range. And then next week, it's in the low 20s. So that tells you that the NASDAQ is pricing in some volatility with some of these earnings reports coming out. So yeah, lots of premium being held on to, at least for now. But interesting to see that both Meta and Microsoft are down before the earnings announcements, while the NASDAQ is technically green. So potentially ominous. We have the double calendar spread in Meta, small trade. It's up 70 cents right now. If we can close it at 70 cents. I'm not sure how these markets are looking, but yeah, it's going to be an interesting trade for Meta. And then Microsoft, we're playing it to the upside with 490, 510, 530 call crab trade. Long March, short Feb. But yeah, if you have any other trade ideas, you can throw them in the YouTube chat. We're streaming live there. I've got the Refer a Friend program pinned to the top of the chat, so check that out.
I put on a put spread in /6A. As far as this whole, I've been ever since yesterday. Saw the moves in the dollar more recently, and I'm like, I'm kind of interested in trying to get long a little bit here, and just speaking to the fellas, right? Speaking to Chris, speaking to Ilya, asking them what vehicle do you like the most of trying to get long the dollar? They gave kind of similar answers. They say euro, which I've done before. I've done a put spread in the euro, but this time I just went with the Aussie immediately. And maybe if that doesn't work out, maybe eventually get a put spread in the euro as well. Euro was 120. So yeah, 1.2 yesterday, 120 yesterday. But yeah, looking at ways to start to get long the dollar. Now, again, like we just talked about, even with the Tasty FX, these are not easy trades. I mean, when you're talking currencies, it can still go the same way for a while. So you don't want to just jump in with both feet. Try to be, on the smaller end. I like the idea of just going with a smaller put spread. Even something like this you have here. I did decide to do 68 cents to 70 cents, 68 cents put spread. I'm just greedy like that at times. $700 to potentially make $1,200, but I think this is going to be, dare I say, probably one of the most interesting trades of the year. What's going on with the dollar throughout the year? I mean, again, it's affecting a lot of things already. It's obviously part of the reason why we've seen the huge move in gold and silver as well. But I mean, this is just fascinating because, again, not only does it affect those assets, obviously it affects our everyday. Realistically, it affects companies and their profit potential overseas and here, and so many different things.
Yeah, and you're getting big recent level extremes here in 6A and 6E. So yeah, to be long the dollar with these products, you're shorting them with a long put spread ultimately. But yeah, you can get decent risk reward for sure. Putting up a couple $100 to find risk to make $2,200 here in this example, long the 7, short the 6-7 in the 37 day. So yeah, if you do get a reversal down to where we launched from, you're looking good from a risk reward perspective. So
I did 70 cents, 68 cents in 65 days. I always err on the caution of currency trades given more time because, man, you just don't know. Maybe it's just a sort of, I don't know. I just remember when I first started paying attention to currencies and just watching how something can go in the same way for a while before it eventually changes. And so we'll see. But that's just the beginning of one trade. I suspect I'm going to put on more. I will eventually put one on. And I expect to lose on this trade fully for the next 20, 30 days, honestly. And when that happens, before that happens, maybe within 15 days, I'll probably put a put spread on in the euro a little further out because it's difficult. I mean, I just recently had a long call spread in the yen for this intervention. I had it on for like 3 months, dude, and it just never came. And I got so annoyed that I closed out on Thursday night, boom. And it's just like that.
Yeah.
You do have to be patient. I did get frustrated, but I mostly was just like, I've had this on for a while. I need to close out some stuff that just isn't working. It's kind of how it happens.
yeah, and that is the nice thing about Tasty FX is you can get super small and granular, and then that way you can remove the time factor as long as you can hold the position. Like I'm feeling pain for sure right now, but these positions, I can hold these positions as long as it doesn't go nuts. Then I'll be okay in the long run. And you can pick your spots and just get into smaller positions and wait until you're right.
And that's the key. You either got to be super small or you got to be risk defined.
Yeah.
And even within doing those, you get annoyed at times. Like I said, I was risk defined in the 6J, but I was just like, I'm tired of this thing.
Yeah.
But risk defined or small for sure.
I do not blame you one bit. Okay. Let's see what we got here in the YouTube world.
All is back in the metals. I'm losing slightly. I'm losing 50 cents on my Strangle and SLV.
Wow. Silver, who would have thought? Well, there's some people that thought. And they're thriving. But yeah, silver's crazy. Everything's crazy. Platinum. Coming off highs. Gold reaching new highs. 5,300.
Yeah, I was wondering. I mean, yesterday was a fascinating day because it was the first day where, if you did that spread, if you're interested in doing that spread, long gold, short silver, it actually really worked yesterday. There was like a 4% difference between the two. Not so much today. I thought it was the beginning of something. I feel like that could have been the beginning of the changing of the guard a little bit. We'll see if that holds. Today it's not. But.
Yeah, I mean, it's wild to see the continued ramp higher in silver and gold and platinum. It's just like, I've never seen anything like this before. So this is new territory, and it is wild for sure. And silver's implied volatility continues to rise as it rises. Same with gold. So this is another example of, sometimes or most times when you have equity markets, if the markets are going down, volatility is increasing. But sometimes when you get these huge moves to the upside in any product, you can see the market rise and implied volatility rise because it goes from this low volatility product to now this super high volatility product with tons of realized volatility and implied volatility. So it's almost like the structure of the product itself, the options market, the fabric of the options market changes in real time.
Yep.
And that's what we're seeing in gold and silver. Like these implied volatility levels, like the IV rank in gold futures is 123, which means the current implied volatility in gold is setting a new 52-week record. Same with silver, 124 IV rank, same story. The new current implied volatility in this futures market is setting a new record in the last year. So again, the landscape has changed and you have to adjust accordingly.
Yes, you do.
Let's see. What do we got? Do you ever look at which stock sectors have been strong say, for the last few weeks and just trade in those sectors like materials, industrials, energy, for example. Yeah, I mean, we've done that a few times, and you've seen over the last 6 months, I want to say, you've seen a lot more sector rotation and sector-specific moves, especially when it comes to energy, your chip stocks, like you name it. You've seen macro moves in those sectors like MU, NVIDIA, and then you've got silver and gold, and then you've got natural gas and oil. Like you're seeing a lot of things moving in tandem. So yeah, if you focus on those sectors that are moving, especially if implied volatility is expanding into them, you can find some nice trading opportunities. Apple. What do we think about a diagonal in Apple? Long the 240 in July, short the Feb 270. 240 in July, 270 in Feb. Yeah, you could do something like this. I mean, it's basically a poor man's covered call type feel where you're inventorying delta for 170 days and you're reducing basis for the Feb cycle, but you're eliminating risk to the upside because you're paying $2,700 for a 30-point wide spread. So I like that. And yeah, if you get a move to 270 from earnings, you could always buy back Feb and you could sell out March or something later and just give yourself more upside room. But yeah, I like it as a trade, especially if you want to hold that long option for a long period of time if Apple ends up selling off. Plenty of time on your side, but it is an expensive trade.
Indeed.
Why are double calendars not recommended for a long-term trade?
Who says they're not recommended?
Yeah, I mean, you can do whatever you want at the end of the day. But, I mean, for me, like if it's a longer-term trade, I'm just picking a direction. I'd rather pick a direction and lean in that direction because double calendars, one of the sides will lose. So the exception is like this meta trade. Both of these calendars were 50 cents. So when they're this cheap, it doesn't matter if one side loses because if you get a move to 700 or if you get a move to 640 after earnings, the gains on the one side that's winning will offset your 60-cent loss on the other side. But if both of these were $1,000 or $500, now that's a very different story because your $500 loss is going to eat away at your profit potential on the other side. So I think that's just something to consider. If you wanted to do a double calendar in something like SPY or the Qs, you totally could. We can just look at the difference here. So like 670, 730, we'll call it. If we sell the same options on the upside and downside, 730 is clearly not the strike. I would choose the upside here. But yeah, $600 in debit, but you really need SPY to go to 730 or go to 670 for you to offset the loss on the other side. Because when you look at the cost of these, $700 to the downside, $200 to the upside, and then you're reducing basis by about $400, $350. You really need the move to the strike. You can't really have too much chop because you're just going to lose value on the long, and your shorts are going to offset some of that. But you want the big move, so it's tougher. Where if you just do the upside or just do the downside, you can get a one-day move closer to the strike and you can close it for a profit. Where if you have both sides, you really need the move really to the strike to offset your loss on the other side. Let's see. What else we got here?
Thinking about doing some type of kind of spread out the butterfly, like call Condor in the 0 day.
In SPX?
Yeah, in SPX.
0 day?
Yeah, something like, maybe both upside and downside. They're kind of cheap. Maybe like for example, the 7,000, 70-15, short the 70-15, short the 70-25, long the 70-40. Something along those lines. I also looked at the downside 69.50 and then short 69.35, short 69.25, and long the 69.10. Those are all pretty cheap, huh?
Yeah. $1.
It's just a question of if we're going to move. I don't know.
Yeah. So if we just look at wow, look at all my SPX mountains. So we just isolate this trade and we look at theoretical P&L just for today. This is what you're looking at. So you pay $1 for this thing with no change in implied volatility, and these are all going to go to zero at the close. But if you do get a sell-off, if the market reacts negatively to whatever's said at 1 o'clock, you can make $150 to the upside, or sorry, to the profit side if this market goes down, and then same thing to the upside. It would be about $1.50. You can make $1.50, $200 if you get that move. Expiration is a different story, but if you do this and you get that range in between here, the closer you get to 3 o'clock, the more you can make. The max profit here is $1,300. So if you were to hold this for a couple of hours, you get to 2 o'clock, and we're in between these strikes, you could be looking at a $700 profit, something like that. So I do like the risk reward. And this one I think is interesting. You could do both of these. You could do the 0-day for $1.60 to the downside. You could do the same strikes to the upside, and you're banking on a move in between one of the spreads at 2 o'clock or somewhere near expiration, and you can make a couple $100. But the same story applies. Like if you have it one side, you're paying $1.60. If you have both sides, you're paying $300 and change. Now you need to offset that loss on the other side with a move in between the range on the other side. So I like it either way. It's definitely a nice cheap shot given the low implied volatility we're seeing from this announcement.
Mm-hmm. Yeah, I might just do the downside one. I don't know. It seemed to go down.
Well, you could do the downside condor, and then you could do an upside calendar, like a Friday, Monday calendar.
True. Yeah.
To play for
That's what I was trying to think too, because I'm trying to think whether to put. I don't think I'm going to put them both in the same expiration. Maybe one tomorrow, because that's usually, if anything happens, it's usually what happens, right? There is a move on the one day, and then the next day is a different move.
Yeah, and you have earnings
and/or Friday.
Microsoft Meta earnings.
Yeah.
Yeah. Either way, I like it considering SPX IV hasn't moved really all that much. We've been talking for an hour, and the implied volatility, the expected move is basically the same in the 0-day, and that's going to change. It's going to collapse, of course,
Actually,
after.
I'm going to do. Is that right? Wow, it is. Is that really cheaper tomorrow than it is for today? It's actually
Probably.
cheaper. Yeah, it's cheaper tomorrow. I'm going to do that. Just in case and I'm going to do it to the downside, just in case these basically upside plays that we have in Meta and Microsoft don't work out.
I like it.
Bam, $1.30 filled.
Yeah. Yeah, and this one, because you have one more day, if the market rallies after the announcement today, this spread won't really move all that much, where the 0-day will lose value. So you got that extra kicker. A couple more here. What do we got? IBM earnings trade.
It has moved recently on earnings. That's today too? Oh, after the close, huh?
IBM. Yeah, this thing's been flying around. This is the most volatile I've seen this stock, that's for sure.
Yeah.
17-point implied move, 18-point implied move, 2 days to go, $300 price point. So not too crazy of an implied volatility relative to notional. We say this all the time, but most of these stocks that are announcing land between 5 and 10% of the stock price in terms of the implied move in the weekly cycle. So anytime you see 10% or higher, that's going to be one of the higher earnings implied volatilities of the cycle. This one sitting at, let's say, like 6%. So yeah, nothing too crazy. but still not super low. We've seen lower ones. We've seen 3%, 4%. So kind of right in the middle of that range there. And yeah, March, 28 point implied move, 2 days, 18 point implied move. So if you're trying to get directional, you can definitely reduce cost basis here. But if you give us a trade idea, we can look at it. I don't have any lean in either direction for this one. Do you?
I'm trying to price up crab trades, actually. I was looking to see if it makes sense.
March, long March or fab?
Long fab, short the 2 day. Well, you know, the short, the other parts of the trade in 2 day.
Yeah. So yeah, crab trade to the upside, pretty cheap.
Yeah, it is actually.
So yeah, this is a 10-point wide crab trade. So we're looking at a 300, 310, 320. 310 is right at the implied move in the 2 day, which is typically where we sell the options. And then you define the risk 10 points out. But this is $4 for a 10-point wide crab. So if we look at the Theo and we push this to Friday and we crush implied volatility in Feb, let's bring this all the way down to 30%. If we get a 12% collapse, bringing us down to 30% in Feb, which is totally possible considering all these back months are around 34%. Totally possible to see. And if we do that, push to Friday, collapse Feb IV 12%, we're looking at a double. Pay $400, you can make $300-ish. Best case scenarios, you get the upside move and you don't get as much of a vol collapse. You can see if I only price in a 6% vol collapse or 7%, now we're looking at a $500 profit if we were to hold on to some premium there.
I did a $15 wide. I did long the Fab 295, short the Jan 30 310s, and long the Jan 30 325. I did that for 565.
There you go. Yeah, another cheap one relative to width. So as you can see, we just adjusted these strikes and you have a lot more space to be profitable here. This Theo P&L, again, is pushed to Friday and then crushed implied volatility, 6%. You can mess around with this and based on what you expect to happen. But just looking at the back months here, if we look at IBM, you can see Feb is at 42%, March is at 37%, and then all these back months kind of flatten out around 33, 34%. So if we assume after earnings, these 33, 34% are going to drop to 30, 31, 32. That's where Feb is going to go. So I think a conservative collapse is about 10%, bringing 42 down to 32. And if we do that, which we already have, killed that 10%, you're looking at tomorrow a $500 winner if you get any upside move here above 295, between 295 and 310. So I dig it.
Come on.
Love it. That's it. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. And Glenn is at Glenn Freibarger. Follow TastyFX as well. Hopefully the US dollar recovers. We would welcome that with open arms.
Sure.
Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll see you tomorrow live from the SIBO floor. Have a great rest of your trading day. Peace.
See you.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's going on, everybody, and welcome back to Risk and Reward. We got an interesting day going today. Some things are flying, some things are dying. VIX just slightly elevated, and I'm joined as always by my wonderful co-host Errol. Errol, what's going on? How you feeling?
Flying and dying. I like it. Feeling good, feeling great. Got a lot of volatility in the markets. Metals putting in an absolute number. It's another interesting one. Waiting for FOMC later today. It's been exciting. We also got some big earnings after the close, so just kind of been on the sidelines waiting for these binary events. It'll be exciting.
Yeah, FOMC at 1 o'clock. We are strongly pricing in no change, but we'll see what happens there. Imagine he comes out and raises them. Imagine what that could do to everything.
Yeah.
But yeah, Bitcoin rallying a little bit. Silver opened higher, but has pretty much just held those levels. It actually makes me cautiously optimistic about my trades that I put on yesterday. We'll get into that here in a little bit. My Nancy Pelosi trade continues to print. She's so good.
Was that AB?
Yeah, AB. Continues to work higher. Options premiums just becoming more and more elevated. And I have naked calls, so good place to be for me.
Nice.
And then, crypto rallying a little bit as well. Got some slight moves going on there. So
nice.
Quite a day. Where should we start?
Let's see. What are you looking at right now, Kimberly? Are you looking at Bitcoin right now? Are you looking at gold, silver? I don't know. Where do you want to start? What's been sticking out top of mind?
I suppose let's rip off the Band-Aid with the metals. Let's have our obligatory 5 minutes of metals conversation before we get into anything else. So we can jump over. What do you want to do? Your pop?
Yeah, we can jump over to the Tasty Trade platform and we can check out some of these metals. We'll go ahead and start with silver because it's looking like silver was gaining a lot more tenacity again, especially gold ripping to another all-time high. So,
yeah, when silver opened higher today, I was immediately like, "Oh my gosh, here we go again!" Like, we're gonna rip straight to 115, and this is gonna be insanity. But we really have just kind of held these levels where we opened. And gold, interestingly, is actually the leader of the metals pack today. I don't know that I've been able to say that in quite a while, but gold up a little over 4%, silver at just about 1.5%. So gold finally starting to catch a little bit of steam. Well. Finally starting to catch a little bit of steam. What a statement out of me. No, gold finally outpacing silver, which is a rare occurrence in this recent environment. But yeah, silver opened higher, pretty much, unched on the day up. We were up something like 1.45% on the open, and it's something like 1.55 right now. So we've just taken a slight little move up, but it's mainly just been range bound, at least intraday. and seems to me like it might be running out of steam. With the higher open, that's indicating to me that we were trying to do this same thing again, where everybody jumps in and wants to buy the dip. If you can even call it a dip in silver, if we get $1 lower, people want to proclaim that as a dip. But the steam just doesn't seem to be there to push this too much higher. So as far as my bearish silver convictions, I'm feeling pretty good. It seems like we might be slowing down here.
Yeah, I mean, we're up, 209 points on the day on the gold futures right now. Something that kind of stands out right off of the bat is the fact that today has traded about almost double the amount of volume the last 2 days have traded. And the previous 2 days traded about double the volume the last few days prior to that was trading. So this volume's increasing as we skyrocket towards these highs. I think the last couple of days we were trading around 175,000 volume, 188,000 volume the last 2 days. And then today, we've already traded 320,000, a little bit over that, 324, 25, give or take. So the level of volume, the level of contracts that are traded on these days is quite interesting because they quite blaringly exceed the previous days.
Yeah, I saw that yesterday. A wonderful stat provided by Chris Vecchio, who will be on next, was that SLV and ZSL, which is the 2x inverse silver that I outlined yesterday, made up 16% of New York Stock Exchange volume yesterday. Just those two stocks, which is pretty incredible. I mean, you'd be hard pressed to find a situation where two stocks are making up that much of the volume.
Let alone
in
silver.
general. And yes, let alone
silver.
metals. Yeah, or I keep
not
saying
NVIDIA.
Yeah.
MSTR. Yeah, not one of those big boys. It's a commodity.
It's a commodity and a traditionally
hot commodity.
Yeah. Absolutely. And
hot commodity.
One that's traditionally considered to be sort of a cooler, slower grower, but that has not been the case whatsoever in the last 3 months.
Yeah, most definitely. Definitely parabolic type action. It's looking like we're getting on gold. Take a quick peek at silver. I know you were touching on silver.
Yeah, and then in other news, we saw NASDAQ has approved midweek options expirations, Monday and Wednesday option expirations on a few new assets. Pulling up this list here, real professional of me. I don't have this on hand. I know it's iBit is among the pack as well as NVIDIA. Yeah, here we go. NVIDIA, Tesla, Apple, Microsoft, Google, Meta, Amazon. So the Mag 7 plus Broadcom, which I love to see. I've been petitioning for Broadcom to be added to the Mag 7 this whole time. So happy to see Broadcom being thrown into the mix along with the entire Mag 7. And then also iBit are now approved for Monday and Wednesday options expirations. More opportunity to get 0 DTE exposure on those things if that's your fancy. So yeah, a little bit of interesting news happening there as well.
Yeah, maybe we get more volume, a little bit more volatility on some of those contracts. Maybe they will serve some more of the shorter term traders. Right. Maybe there's a lot more shorter term traders on something like Apple, NVIDIA, and some of those other names that I didn't even recognize. So to that crowd, they're probably loving it. I mean, who doesn't want more options? I mean, you just got more of an ability to be more flexible.
Yeah, more angles of attack, more,
exactly.
and even if you're not a proponent of 0 DTEs, and that's not a regular, weapon in your arsenal, it is still nice to be able to have midweek options to choose your specific timeframes and get even a little bit more granular with your timeframes. If you want something that is, if you're thinking something could take a move over the next 30 days, you want to get something that's 30 DTE, but you wind up it's midweek or early in the week, and you're split between a 27 and a 34 DTE contract. That can be a little bit frustrating if you're a perfectionist like myself. So being able to be more exact with your timeframes and express your convictions that way is nice as well. Kimberly calling MGC to 6,200, the top price target in this list here. Whole slew of very precise price targets. I just keep crossing off the numbers as they hit overnight. Yeah, no kidding. I mean, it's absurd this run that we've been on. And if there is another $900 in the tank here, that would be pretty incredible. Although I suppose that doesn't have to happen in a month. The way that this run up has been, it could we could slow down a little bit and still achieve all of those things over a 6-month period. But with the run that we've been on, who knows? It could happen tomorrow.
Yeah, I kind of wish gold was performing like silver, kind of in a sense of where its highs is kind of at. Like it's kind of nice that gold is at its highs right now, and then just looking at silver, it gives you a little something to work off. Like if you wanted to get short right now on silver. Something that I would probably do is risk somewhere near these highs. And it's like silver's just way too large of a product. I can't do that on gold because gold looks a little bit different. Gold is actually at its highs. So there's really no swing high to be able to risk off of, to be able to kind of visually gauge that risk on a trade. So just eyeing that. So it's kind of a funny trade because I wish it was gold.
Yeah, clearly we should have just been buying this whole time instead of looking for ranges and value areas and whatnot. All we had to do was 3 months ago, just close our eyes and buy silver. Why didn't we do it? I don't know.
You could have.
I was too scared. Yeah. I was scared when SLV was at 65. I mean, it's insane. It's just gone. It's just flown. Yeah, it'll happen by March 16th ish. All right. Kimberly giving us a deadline there. I'll stretch that a little bit. End of March, we're looking for gold to 6,200. That's where we're at.
Yeah.
Now, I don't think that's unreasonable. As insane as that is to say, I mean, that would be another, 15% on top of where we're at right now. And I don't think that that's unreasonable at all.
Yeah, completely agreed. No, with that being said, we'll circle back around to the platform here in a moment. Or what else do we want to look at the platform before we head to the trading view platform?
How about Starbucks?
Yeah.
Let's get a look at some Starbucks earnings yesterday. Issued a very positive forward guidance despite an EPS miss, and obviously opened way higher there. It's since tracked back down a little bit, but I was very pleased to see this over 100 this morning, even though we haven't held on to those gains. I've been deeply long Starbucks for a long time, waiting for this. I figured that there would have to be something like this sometime. I'm willing to put my faith in Brian Niccol and everything that he's done with this company. We finally got the big parabolic move, although we've given 67% of it back by this point. But even if we can hold this 97 level, I would be very pleased. I have an upside 2x1 on Starbucks, so there is an undefined risk element to that. I mean, it is still. Well, no, it's upside short put vertical, so the short put is actually totally undefined risk. So yeah, with 2x1, I was very pleased to see this flying, because if things start to go south, it could hurt me dearly. This used to be a 3x2, but when we weren't getting the enough momentum, I decided to cut it down into a 2x1.
Nice, a lot of volatility there.
What's going on, Media? What's going on, Edward? But yeah, that pretty much round things out for me, and then. Zillow logging another good day. I've been talking about Z a lot recently. Putting in. I was gonna say, your perspective's messing me up here.
I know. 15 seconds in 1 minute.
Oh yeah, what the heck? I guess I'm just getting weird. Oh yeah, I totally lied. I'm just getting weird premium squeeze on my options. I'm just deciding these things on a whim right now based on the performance of my
based on vibes.
And then Oklo is continuing to move as well. So happy to be long here.
Nice. Yeah, Oklo's putting in a nice move to the upside today, almost 7 points.
Yeah, we'll see. We've really tested that 115 level a couple of times, and I don't know that we could necessarily get through that, but I just need it over 100. So if we can, as we take strides towards that, I'm a happy camper.
Not too far-fetched. I mean, just a few weeks ago, we were over 100, so maybe it'll be there here soon. A lot of IV in there, a lot of volatility, a lot of volume.
That's pretty much where I'm at. You got stuff to show us in TradingView?
Awesome. Yeah, if we can jump over to the TradingView. We really didn't do too much today. I think we were kind of just sitting on the brakes for the most part, just waiting for the FOMC announcement later today. So that'll be really fun for us to keep an eye on here in about 50 minutes, and we'll see what volatility we get. But I mean, the market's just been absolutely blasting off to the upside, right? So near all-time highs, there's really no established levels of value to really be able to trade off of. So the only level that we had really gotten for today, and it was really nothing with even very much conviction as to why we used one contract, but I know we spoke on the initial balance before, and then the initial balance is just going to be that volume range that the market puts in the first 30 minutes of market open. Some people like to use the first 30 minutes. Some people use the whole first hour of market open, but that's just going to show us where most of the volume is kind of accumulating, and then we're going to use that volume profile to kind of just snag that initial balance. So it's usually at 9 o'clock Eastern, 9 o'clock Central, 30 minutes after market open for Central Time. So just doing that, we got a lot of rejection off the value area low. So we took a short here, risking some of these swing highs. And again, as you can see, just kind of paper handing some of these moves to the downside. We caught another, 36 points on it. And then it reversed a little bit. But that's kind of what it's kind of been, is just trying to identify the directional bias. And then once you can find that directional bias, it'll be a little bit easier to figure out where you might want to get in or out. Because like we've understood before, whenever we're trading with an imbalance, the market has a tendency to be a little bit more directional. So even if we were to miss, let's see if we can get our little tool out, little drawing tool. There it is. Like even if we were to miss, some of these early short entries, you still have the opportunity to potentially get short at these areas if you still have that directional bias. It's just you have to understand you have the potential to get prematurely stopped out of your position without the market proving your trade thesis wrong. So that's kind of the thought process when wanting to get into these trades and kind of chasing the move to the downside. But either way, just being patient prior to FOMC, not wanting to be a little, too aggressive or too greedy. But no, with that being said, this was pretty much just the directional move that we had gotten. And it's just been a challenge this week being patient for all the other binary events that we're going to get.
Yeah, with no change, fully priced in for FOMC. Obviously, anything outside of that would be cataclysmic. But even beyond that, everybody is more eager to hear, any little hints or bits of information that we can get on how many rate cuts might be planned for this year, if any, or just what the broader sentiment is, how we're doing on the dual mandate, and that certainly does have the propensity to move the market today. So. I've also just kind of been sitting on the sidelines and waiting for that catalyst. I'm hoping it is good things, but it definitely remains to be seen.
No, most definitely. I'm excited though. I'm excited for the volatility. Near the highs, we're just shy of the all-time highs on NASDAQ. So, with it sitting there and then considering the bigger earnings that we have after the bell, who knows? Maybe the market wants to poke the all-time highs. I'm not going to try and step in front of the train, but definitely more volatility to be seen here.
Yeah, it's interesting. Split between what we're seeing in the broader market and what's going on with the metals and things. We did log new all-time highs off open today at SPX, and did we? I suppose we did open just over 7,000 today. Do I have this right?
Yeah, let's log back into SPX. Let's see.
Yeah, it looks that way. I believe we touched 7,002 before immediately giving that back. So. The 7,000 level psychological resistance seems to be panning out, or perhaps we'll just go clean over it tomorrow and it'll just be a blip on the radar. But it feels like a long time coming, especially with how quickly we raced through 6,000 earlier this year.
No, 100%. It's so funny how we just barely poked 7,000 and then just completely reversed from there.
Yes, and I should say back through 6,000, I suppose.
Back through 6,000.
Talking post-Liberation Day, sub 5,000, and then pretty much straight up through 6,500 without ever taking a breath. And now we're finally starting to chill out a little bit. Market seems to be content sitting on its hands today, essentially untouched.
Yeah, it does. We'll see how the market responds around these levels. We'll pay attention to see how the market responds around this previous day's balance. This was really where we were looking to try and hold our directional move to the downside today. Like this really would have been where this is the area we would have tried to reach. Obviously, it was a little bit difficult to do that on the execution part today. But I don't know, again, just sitting right shy before FOMC and, Trump speaking, it's always difficult to do anything. But I know definitely keep an eye on how price responds here. Maybe we get something in the last couple hours. But with that being said, let's check out crypto. Let's see how Bitcoin has been doing, how it's been holding up.
Yeah, a little subtle rally going on in Bitcoin today, but obviously nothing too pronounced. Just logging some slightly higher highs than yesterday, but just really can't seem to get the juice out of this that I would like. I'm looking for over 100,000. I'm looking for 120,000. We haven't been close to those metrics at all. I believe I did get. Do I recall correctly that I got even longer some Bitcoin while we were on air earlier this week? Yes, I picked up some June 17th, 2027 long IBIT. So we have that in the tank. So well timed in the micro on that. Those contracts are green, but would like to get a lot more out of this.
Yeah, it looks like we potentially have some more room to run, and if we look at it from a value perspective, it's looking like we're kind of rotating to the other side of value. So maybe we still have a little bit more room to run and maybe a little bit more room to run near 93,200. The point of control on this one is sitting at 90,766. We saw a couple times the market tried to come up here and trade at these levels. We got rejected one time, but we're approaching those levels again. Those adds to the long was really nice. It was near that value area low while prices were a little bit cheaper, depending on the range we were trading in as well.
Media says, I think copper is too big. I think all the metals are too big, to be quite frank. But I don't know. That's an interesting observation because copper is one that we've talked about at length, and it has absolutely, had this parabolic run up alongside its contemporaries. But at the same time, we're not even at. Today, we're not even eclipsing the mid-July highs that we saw in copper before the huge sell-off at the very end of July. And big correction downwards. So copper is sort of a late bloomer in that regard, and that it started so far behind the pack that I don't know how concerned about it I am relative to everything else. I don't know. Honestly, maybe platinum is sort of the one to me that feels like it could be overextended. I say this as I am deeply short silver. Of course, I feel like they're all overextended, but at the same time, I've been wrong many times before. Yeah,
I'll see.
This thing forms a new level of value every day. it's incredible.
You talking about silver?
Yeah.
Or, copper, cobalt, wheat.
Yeah,
All the
wheat,
above.
hay.
Yeah, wheat, hay.
Yeah, anyone know how we can get long hay? That's what Errol and I were discussing as soon as we got off air yesterday. That was whoever suggested we get long lead in the chat. That led us down a rabbit hole of what you could feasibly get long.
No, it did. I'm going to quickly check out some of the platinum futures as well. I know platinum was going on a major run. They're the long-lost cousin. They're the row of the Greeks that completely get ignored, but definitely been putting in some numbers.
Well put.
I'm curious to see what some of the volume that's been trading on platinum as well. Definitely not as high as something like gold and silver. Those have been the talk of the town. But especially some of these products, the point multiplier isn't as large, so they get forgotten about. They're very liquid products at the same time.
Yeah, it always starts to enter my mind when we talk about these things. The fact that the physical bullion buyers are not willing to pay anywhere near these spot prices. I mean, we're talking 30 and 40% chops if you're actually trying to sell physical silver right now.
Right.
I don't know whether to attribute that to greed, perhaps, and people not wanting to get overexposed, or if it's just that these people actually are the professionals of the industry and really believe that these prices can't hold and they don't want to get stuck holding the bag.
Mm-hmm.
So yeah, there's some intel to be gleaned on both sides of that, but it does give me a little bit more confidence in silver as it flips red. Well, not on the day, but on from open.
Yeah. We got a nice little handy dandy emoji over here. I forgot we were even playing around in the platinum futures. I like that one though. That's definitely like my reaction every day to seeing these silver markets open up higher.
It is.
I think it's kind of just like, at this point.
Yeah, it's just constant upside. It's incredible.
Yeah.
But yeah, outside of that, you don't really. I mean, Mag 7 is not a lot of action today. You and I are both getting killed on Netflix. Do you still have that long Netflix on?
What am I doing in Netflix? Oh yeah, I didn't even know I was getting killed in Netflix. I sold the 90 puts. We collected that for about $1.64. So that one's a defined risk.
Yeah,
it's kind of just been baking in there for a minute now.
Yeah, I sold the 91 on that, so we're similarly aligned. But I am 9 DTE. I was trying to isolate a potential positive earnings move last week. That has pretty much completely fallen apart. Is there even enough left on here to justify taking this off? Yeah.
How much time? I got a little bit of time. So since I'm kind of in that position, time is just at this point on my side. So I'm gonna just sit in it.
Yeah, I have 9 days.
Give it some time.
I'm gonna cut this in half if I can get a fill. These are
if you can cut it in half, that's actually solid. I might not even be able to cut it in half, but we still have 30 days. We'll see.
Yeah, they were very cheap contracts due to how short dated they were. So I did have 4 of them. So
that's pretty good.
I'll cut that down to 2 and 2, and see if we can't come racing back. It was pretty much a 1-to-1 risk profile. So
that's nice.
Should we get some crazy run out of Netflix and that gets back over 91, I would just break even at this point.
Yeah.
Because down. It's funny. The human mind is a funny thing because when I'm down 75, 80% on something, I'm like, okay, yeah. I mean, this is cooked. It's time to cut losses. You lose in this business. You just gotta duck and move. It's not about how hard you can hit. It's about how hard you can get hit and get back up. When something's down 90%, I'm like, screw it. let's leave this thing on and see what happens.
That's valid though.
It's a lottery ticket at this point.
I mean, 90%. I mean, I'm in the same boat.
It's like how much can you reclaim? This isn't even cutting losses at this point. It might as well be a total loss. So let's just leave it on. Yeah. So.
I like that. That's hilarious.
A responsible trader would cut their losses down 20 or 30%.
That's just the psychology of humans, though, right? Like Bitcoin at 20,000, Bitcoin at 120. I'll take it. Takers.
Yeah, absolutely.
Yeah, silver's still too big for me. Yeah, silver is still too big for 99.9% of the population. If we're keeping it a buck, you media, that's a massive product. I would say even the minis on NASDAQ is a large product for, I would say, most individuals, and that's nowhere near as large as something like the silver futures. So if you're just slinging the silver futures, you're probably just doing it for fun at that point if you're able to get in out of that product because it's no joke. It's a big boy. It's a big boy.
Brett says you missed a trade on CL, crude oil mentioned.
Oh, right. Crude oil. We have not been given any love to oil or any energy for the most part.
Yeah, pretty much never. Yeah. CLIC logged a very good day yesterday. I'm actually not all too sure. I didn't wind up even catching what Trump said in that speech. Did he say something Venezuela, something barrels or something like that? Because that could maybe explain this. But yeah, love some light sweet crude, because the taste.
Nice and sweet. Yeah, no, not some light sweet crude oil. These barrels have been beaten down as of late. Zooming out to a higher time frame, but yeah,
I'll tell you what's been beaten down is the freaking U.S. dollar. We are at crazy levels on that.
Yeah.
Is there have a good what is it? UUP?
Let's go U.S. dollar. But no, I mean,
I forget. TradingView has see these things. Yeah, there you go. U.S. dollar, very poor. Compare it to the Forex of your choice, it is down. And I, being long U.S. dollar against the Mexican peso, am down along with it. Not a fun time.
Have you watched the world changing order? Is that what the title is called by Ray Dalio? It's a book and a YouTube video.
No,
it's actually really. So I saw someone mention it in the chat. I don't know if anybody else. I don't know if that's what you were referring to, but the changing world order. It's really interesting. It just has a lot to do with like the different types of world powers, how a lot of conflict happens, and then just how a specific dollar, like how the U.S. currency is dominating power right now, and kind of just how those regime shifts happen. Really interesting. I thought you made a reference towards that for a quick moment. That's why I had to see.
Oh no, yeah.
But someone mentioned it, but we're trading the U.S. dollar. It'll be interesting to see.
Similar
it's really
lines of
right
thought,
now.
I suppose.
Yeah, but no, it's super interesting. Shout out to Ray Dalio.
That Iraq.
Iraq.
Well put, Viggy. Saying like Iraq oil is.
That's what I was thinking. Like,
I believe
that's what I was.
I believe the implication there.
Because I saw Los Sweet.
Oh yeah, LOL, sweet oil. So sweet oil.
Sweet oil. Sweet.
I know it's because of the smell, guys. Don't drink oil. All right. We're not allowed to say we give advice on these things, but I'll give some advice right now. Don't drink crude oil. It's bad for you. As sweet as it may taste.
No, we'll see how this market responds. I know we just got a couple minutes left. So really just want to see how the market responds at these levels. Again, trading near the highs is just not the most favorable conditions. So we're going to try and be as patient as possible. If anybody else is scalping, maybe just size down. Maybe we get an increase in VIX, but we would need a down move for that. I don't know what's going to happen with FOMC. But we'll sit on our hands and we'll trade whatever the market gives us. We'll be ready for it and we'll be prepared.
Yeah, and thank you HKMB for the synopsis. He said something Iran, something Armada. I see. I didn't. I was thinking Venezuela because it's fresh on my mind. But if you say something Iran, obviously that usually works out good for oil as well. Yeah. Especially if we're talking about something Armada in tandem with that. We gotta plant our flag in that oil, people. It's important.
No, yeah, it was Dalio that wrote that. He has a book, and then he also has a YouTube video that is like maybe 30, 40 minutes long. Highly recommend to check it out.
Only sweet milk, right, Gus? Kimberly, yes, that is very sharp. You know me all too well. I love me some chocolate milk. Regular milk too. All right, if it comes from the cow, I'm all about it. Beef too, actually. Lump it all in. Cows, favorite agricultural animal. You heard it here first. I drink olive oil in the mornings. Yeah, that's fine. That's fine. I'm suggesting crude oil is bad for you to drink. Soybean oil, considerably worse to drink. E-media. Oil goes good with Tide Pods from Mike. You guys kill me.
Does oil and Tide Pods mix? I don't know.
Oh, that's true.
Come find out on the next show.
How do those separate? Yeah.
Come find out on the next show live. We'll be back.
I gotta start doing more science experiments. We gotta start doing show and tell.
Come on, gotta scratch that itch. Lastly, I seen an adult show and tell posted on Twitter. It was like adults literally doing show and tell. So with that being said, we're never too old for show and tell. We can always do it. It's always interesting.
We should pitch that in the office. It'd be such good content. Everybody brings something in for show and tell.
Absolutely.
Yeah, I had a great time at show and tell in kindergarten.
Yeah.
I got stories, but we'll get into those later. We're pretty much out of time right now. You have any closing remarks?
Nope, that'll be it from me on my end.
All right, that's going to be everything that we have for today. Fed coming on in 34 minutes, so stay tuned. We will have Futures Power Hour running straight through that to give you the sit rep. Thank you so much, everybody, for watching. We dearly appreciate you taking the time and never take it for granted. Errol and I'll be right back here, same time, same place tomorrow, 12 o'clock noon Central Standard Time. We'll see you guys next time.
Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of choices, you'll get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick.
Retweet.
Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds.
You're so totally boring.
My card's on the table, hash mark. Facebook is disabled.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
back. It's still Wednesday, January 28th, 2026. We're here for Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, happy Fed Day. Good to have you join us.
Happy Fed Day. Here we go. Did you have your
Fed
coffee?
I'm having my third cup of coffee right here.
Right, you are. This is going to be this is going to be one of those. This might be a 3 coffee meeting.
I don't know if I need it, but maybe I do, because this isn't exactly a live meeting today, Ilya. In Fed parlance, when we say it's a live meeting, it means a meeting in which we could see either a hike or a cut, with the market's priced pretty closely for a potential hike or cut. Maybe it's this meeting, maybe it's not, and they kick it out to the next one. Maybe they do it and then they tell us no more efforts are coming. That's not really the ball game we're playing here today. I'm looking at the CME Fed Watch tool, Ilya, and we can go right to the slides there, Paul. I'm seeing a market that's pricing in nothing.
That's right.
0.55% chance for today. So if we don't get a dovish tone, don't be surprised. Likewise, the next meeting, 16%. The meeting after that, barely 30.5%. And those odds for a June cut have been receding from the upper 90s now into 78.6%. So Ilya, what's the buzzword today? If we were to look at a bingo card here and put together a Powell bingo board, what are the words? What are the phrases? What does the market need to hear from Powell to keep calm and carry on with this recent equity market rally?
I think there's 2 things here. I mean, obviously, between the last meeting and this one, the Fed chair had to record a proof of life video where he went out there and said everything there was to say about White House pressure to cut rates, something he didn't address as directly before. But of course, when you threaten the Fed chair with a federal indictment, you're going to get a different set of words. So there's going to be a ton of questions about this in the press conference. We'll see how candid Powell is. Before, he would say very little, firmly, but very little. And we'll see if he says more now. He's going to try, I think, to say less. He's going to try to say something along the lines of, my name is my name and I've said what I've said. Let's move on to policy. I think that the buzzword for the other part, which is the actual policy forecasting part, might be data dependent. And that is one word, it's hyphenated. And I think that's going to be the key. Because if we're data dependent, then the markets are over extrapolating rate cuts. And I don't think stocks are going to like that. Because if you look at the data isn't bad. There is every reason to think there's every reason to think the U.S. economy is doing fine, and this jump in crude oil prices gives an even more inflationary story than you would already have with an economy that's relatively strong. And so if the word of the day is data dependent, then the markets have one more rate cut baked in for this year than the Fed is likely to give them. And that's going to look like an unfavorable sort of thing for stock markets. They want those cuts. If, on the other hand, the Fed comes out and says, yeah, there's lots of this and that out there, we're very attentive to the risks, if we have to cut because inflation isn't quite there, but there's a market stability question, okay, I think markets are going to be a little bit more friendly there. But I doubt that's where Powell wants to go, especially with the pressure from the White House and with his very combative pushback, I would say rightfully so. The Fed is going to be very, very focused on crossing all the T's, dotting all the I's, and following the data to the decimal point. This is a very important moment for Fed credibility. They can't be as loose as they might have been around sentiment in previous times. They have to really get it down here.
You make an interesting point about how the Fed is going to discuss things. We heard the news this morning that Powell and the Fed thus far have not responded to the Department of Justice's or Justice Department's subpoena requests. That's from CNBC. Mm-hmm. So it seems like we know what Steve Leisman, slip of the tongue there. Steve Leisman's going to be talking about. But it seems like that's going to be a large focus of today's decision because from the market pricing, from what's expected around the corner, you're probably going to see them talk a little bit better about growth, maybe a little bit better about the labor market, given how it hasn't evolved so negatively.
That's right.
It hasn't been good, but it hasn't been as bad as people feared. A neutral hold, slightly dovish hold, but outside of the questions about the Fed's independence, I think we'd say this would be a pretty boring meeting and not really a live meeting whatsoever, because even if we have a bevy of data that comes out over the next few weeks, and granted, we don't have a February Fed meeting, we have one in the middle of March, Ilya, you would still probably make the point that we're not looking at the March meeting being that significant either. So Powell's probably going to have to surprise us. Maybe we walk away from today where nothing really happens as a result of the Fed, and it's more about those tech earnings after hours, which with both of those events around the horizon, we see that the market's not really committal here. S&P did make an advanced 7,000 and did technically touch a new high ever so briefly before pulling back in over the past few hours. High overnight, Ilya, was 70.43, so we're 40 points off the high, more than 0.5% off the high here. NASDAQ is still your leader, up by nearly 0.3%, but like so many of these other charts, a lot of what happened overnight seems to have been reeled in. It doesn't really matter where you look. It doesn't matter what asset you're looking at. It could be crude oil, it could be stocks, it could even be something like gold or silver. The market's fading and kind of resetting here before we get to a Fed, which, talking about resetting and not really doing much of anything, 700,000 contracts traded in ES right now. This is a dry day so far. We're going to have to wait for Powell and Co. in 20 minutes.
The grass is growing, the paint is drying. Not surprisingly, the markets don't want to jump ahead of this. The key thing for me, and I would suspect for markets, is less about what we're going to do in March or not in March, and more about the aggregates. Because the Fed and the markets actually agree that there's 2 cuts that need doing between now and the end of 2027. The Fed just has them spaced out. They have 1 cut in the summary of economic projections for this year, 1 for next year. The markets want them all this year. And very clearly, the markets do not care about the economic data. They know that the third quarter GDP number was good. They know the expectation for the fourth quarter numbers are good despite the government shutdown. They've seen the same PMI numbers that everybody has seen. And frankly, even just looking at the consumer confidence numbers yesterday, the headline was consumer confidence drops to the lowest level since 2014. Worse than COVID. Okay. But then you dig under the surface and you go, wait, but over the next 6 months, the same people that were polled for this same survey, their number 1 expenditure that they expect to spend on over the next 6 months is takeout food, restaurants, and bars. So how low is consumer confidence really? And then you go, well, how can both of these things be true? How can consumers, which are the biggest part of the economy, 68% of GDP is consumption. How can they both have the lowest sentiment in 12 years and also be out there at restaurants and bars and buying takeout food? This doesn't add up. And then you look at the cohorts. The weakest sentiment is among millennials and Gen X. The best sentiment, relatively speaking, is Gen Z. Why? Well, one theory you could put out there is we are watching the breakdown of the very norms in the social zeitgeist, in policy, in politics, that make millennials and Gen X have the best disposable income of any of these generational cohorts. Gen Z, the one with the least disposable income, just don't feel the same way about this breakdown. They don't have as much of an attachment to those norms. So sentiment may well be weak for societal zeitgeist reasons and not actually weak on economic and financial situation grounds. And for the Fed, it's those grounds that matter.
It feels like we're having the vibe session conversation all over again.
Yes.
When macro data was good at the top level, but the economy still felt sluggish to the average person.
Yes.
I would point out that when we get to the midpoint of last year, and we don't have the fully fleshed out data yet, I have to check it for Q3. But as of Q2 last year, the top 10% of income earners in the US, those making more than $251,000 a year, were responsible for 49.2% of total consumer spending. So the bottom 90% of income earners spend basically or do half the consumption for the economy. So like, why is the economy holding up at the top level? Because stocks are doing well, financial assets are doing well, real estate's doing well for some of the top income holders. And so they're able to continue to power the economy forward because they're responsible for half the spending, and everyone else, what's the expression from that Greek poem? The weak suffer as they must.
Mm-hmm.
It's like it's the K-shaped economy.
Yes.
And so like the Fed is almost trapped.
Yes.
The Fed is almost trapped and can't. And this is where you start to have this conversation like, okay, maybe Trump and co are right about needing cuts, because you strip away the top 10% of income earners and the bottom 90% of the economy is struggling.
Yeah.
More than you would get, than I think the broader top level picture gives credit to it.
Well, and this is the thing. When you look at the hard data, as the Fed looks at it from a bird's eye view, economy-wide level, it's very difficult to make the case for cuts. You already have a situation where the economy is growing strong, consumption is strong, the service sector certainly. You have tailwinds from both the one big beautiful bill fiscal effort and from the rate cuts in late 2024, as well as the rate cuts last year, because of course it can take 12 to 18 months for cuts to work their way into the economy. So those 100 basis points in cuts in late 2024, they're just showing up now. And then we got 75 basis points from late last year to boot, as well as fiscal stimulus, as well as high oil prices because of what we're doing on the high seas in Venezuela and what the popular uprising is doing in Iran. We're capturing oil tankers from the Russian shadow fleet. We've decapitated Venezuela, and Iran might fall off the board as far as illicit supply, either because there's a revolution or because we just stopped the tankers from moving that oil. If the estimates cited by The Economist are correct, that's a fifth of global supply. Now, who in the world is big enough to buy that much illicit oil? Only really China. And so then that huge demand, the world's number one importer, is going to have to reshuffle their supply mix. They're going to have to tap more Saudi oil, more Gulf oil elsewhere, more from Iraq, more from Brazil. And that's going to mean higher oil prices. And we see that on display for a few weeks now. There's been a major breakout of the down move from the Iran-Israel shootout highs mid last year. You put all that together, you're not in an environment where you can be sanguine about inflation. And if the labor market is not becoming any worse than it already is, and by all accounts, it's certainly not collapsing, nothing is getting unglued, it's a little softer, and the Fed has already acted to the tune of 75 basis points to push back on that. And yet, expectations for a cut in June have solidified. The next cut is now in December and fairly convincingly baked there, 70% chance or so. So when you look at this, you go, okay, the markets want their two cuts, but they obviously don't want them for economic reasons. They want cheap money because policy is volatile and they want a backstop. They want a cheap money hedge.
With that pricing, by the way, it's interesting. We mentioned it briefly yesterday on air about how while we're still talking about cuts this year, if the economy is holding up at this top line level and it persists at this pace where inflation isn't getting to 2%, unemployment is below 4.5%, and GDP is somewhere between 2.7 and 5.4%.
Yeah.
That's a world where you have to start thinking about a hike at some point next year. Obviously, it's a long way away. Today, I think for the first time that I've seen, at least, December 2027 is favoring a hike.
That's right.
52.5% versus 47.5%.
It's narrow, but it's there.
It's narrow, but it's there. And yes, the market wants cuts. We're not going to get as many cuts as maybe the Trump administration, Trump himself has been pushing for. But these would be us not getting cuts for possibly good reasons, because we don't see a labor market fall apart and growth doesn't collapse. And yeah, the inflation sticking above 2% isn't great, but all things considered, the Fed would rather deal with slightly higher inflation for which it can use regularly scheduled programming monetary policy tools to address, rather than a complete collapse in the labor market, and even GDP, which necessitates much lower rates and maybe even taking QE out of the toolbox again down the line. They don't want to see the housing market fall apart, right? Which a labor market collapse could precipitate. So I think they'd rather, all things equal, they'd rather deal with an inflation that's like 2.5%, 3% than an unemployment rate that's at 6% and GDP that's cratering.
That's
so
right.
If they're backing away from cuts, it's not exactly for the worst reason in the world. Maybe it means sector rotation, Ilya, where the sectors that really could use the cuts more aren't going to get them, and there's a bit of a letdown there. You could make that argument for what's been happening with the financials recently.
Certainly.
Whereas it's become clear in recent weeks that we're not getting those cuts. If it's the big banks, if it's the regionals, they have sagged back. The small caps this week have trailed their mega cap counterparts. And while the NASDAQ is positive, it's not because of strong sector distribution. We only have 8 of the 25 sector ETFs here trading positive. And there are some very good ones that we like to see lead the way, like telecom is surging up nearly 3% to a new all-time high. Semiconductors are surging up over 2.2% to another all-time high. I'm usually a big fan of that kind of stuff, but RSP, the equal-weighted S&P is lower again. QQEW, the equal-weighted NASDAQ is lower again. This could be a muddled situation where the market is upset broadly that we're not getting cuts, but people don't want to remove their exposure to equities because of this consistent growth and margin expansion. And so, the big cap tech names are having their day in the sun. And if the earnings don't drive us nuts this afternoon, you're getting at least an open airway for the NASDAQ, an attempt to make a shot at highs, which the S&P and the Russell have already been doing.
We'll have to see. I mean, if we look at the third quarter earnings set, it pointedly got ignored, and the market's focused on what the Fed said, because the Fed came out. Powell came out in full feisty form in the late October meeting and said, "You all are over extrapolating rate cuts." And I know I come out here every time and I say, "We're data dependent. We're data dependent." And then he leaned into the microphone and said, "I am saying more than that now." Did you hear me? More. Stop it. It's not a foregone conclusion that we're going to cut at the next meeting. Knock it off. And that's what the markets cared about. And the tech earnings were swimmingly strong last go around. And they, again, were clustered around the Fed meeting, and everybody ignored them. Now, it's important to remember also, you got to give these things 24 to 48 hours to settle. Whatever reaction we get from the Fed, even by the close today, may not be the reaction that you find tomorrow.
Yeah, you're going to probably have to wait this out. The true reaction is usually always the next day. People get excited or disappointed in what the Fed says. Everyone goes home, sleeps on it. And then, we see how the chips really fall. And you saw this in October, right?
Very much so, yeah.
Stutter stepped the first day, and then the next day the sell-off really took place. If I'm the Fed and I'm wanting to be optimistic here, I'm looking at growth. I'm looking at some of these inflation readings that they have in their own dashboards. Mm-hmm. You really need a 0.17% month over month rate to get to your 2% annualized per year. If it's 0.16, you're undershooting. If it's 0.18, you're a little bit over. 0.17 is pretty much Goldilocks. CPI right now for January is tracking at 0.13% month over month. Core CPI 0.22, PCE 0.18, core PCE 0.23. So it's a touch warm. But again, the trade-off the Fed is making, would they tolerate inflation that's like closer to 2.5% rather than 2 if it means you're getting 5% growth and an unemployment rate below 4.5%? Yes, but they would probably want to talk about hiking rates. So I don't know if we're there yet, Ilya, for the Fed to remove its easing bias.
Probably not. And my God, would that get a response from the White House?
That would
start to look like, I mean, that would start to look like the Fed is playing politics the other way. And they don't want to do that. They want to look data dependent. They want to look credible as apolitical stewards of the economy that's playing to their mandate. The Fed does not want to rock the boat here. They don't want to look vindictive. They don't want to look like they got these indictments, or maybe these indictments, but certainly these subpoenas, and then say, oh yeah, you want to pressure us to cut? We're not going to cut. We're not going to cut at all. Make our day. They don't want to do that. They don't want to look overly combative, nor defensive, nor weak.
Okay, but my point is, though, if Trump wasn't putting this pressure, let's just say he Bessent, Lutnick, whoever, never said a single thing from January 20th last year until now about the Fed at all.
We'd probably be looking at neutral.
That's kind of my point.
No, you're right.
Right, like the Fed is only thinking about inflation over 2, growth 2.5 to 5, and unemployment rate below 4.5%. Like that is an environment where the Fed would be like the economy is running hot, and they don't want it to overheat, so they be thinking about raising rates a little bit here.
Yeah, I mean, they would be. I would suspect that if the Fed, in a normal world, where the Trump administration is doing all the same things to drive up oil prices, all the same things with tariffs to drive up goods inflation, but just not talking about the Fed and saying all the same things that the president has now said about the dollar, that is, it's finding its own level. Yeah, let the Fed find their own level also, and they would probably be looking at this and going, yeah, we're not going to forecast cuts. We're also not going to forecast hikes. We're just going to sit and take it meeting by meeting. But the general consensus would be that if, and they've said this, if tariffs are indeed a one-time price adjustment, and sometime in April, May, that price adjustment has run its course because the year-on-year calculations for CPI no longer base from a pre-tariff period. And so that influence on the tariffs in a year of the tariffs in a year-on-year sort of way in inflation, that goes away. Well, Powell has said that takes us basically to 2%, only a hair higher. And as long as services inflation continues the steady cool down that we've seen over the past year plus, that gets the Fed comfortably to its target. The problem is that we don't live in that world. And so the Fed now has to walk on eggshells and make sure that they are so carefully data dependent that their credibility doesn't get shot as a consequence of this back and forth. So you could very easily envision a Fed that says, okay, well, oil is up. That might be inflationary. The economy is relatively firm. That could be inflationary. But the tariffs are probably a one-off. Goods inflation has been leveling off, if not going down. Okay, we do our short-term liquidity provision to make sure that that overnight markets don't get overly squeezed, and we'll see you in May. And then we'll tell you what our bias is. The real meeting would be in June with a new summary of economic projections where the rest of the year would look clearer. But we don't live in that idealized world.
No. And so the Fed can lay out its plans, but as we know, a lot can change over the course of 6 months. I'm sure the Fed had.
Look at how much has changed over the course of the past 6 weeks. Forget months.
Past 6 days.
Yeah.
So this Fed meeting is, at least the policy team is doing at the top of the hour. Powell's press conference is at 2:30 Eastern, 1:30 Central Time. You're going to want to tune into that live. I'm assuming the Q&A is going to be livelier than whatever the
Yes.
statement reads out as, Ilya. We're going to just turn our attention to the bond market here. We're going to bounce back and forth as the meeting comes out to look at the response, or in my view, what's probably lack thereof initially until we get to the Q&A.
Yeah, I think that's going to be where the action is. I think you're absolutely right there. The statement will be what it is. Stephen Mirren will dissent because he's going to want to cut and cut and cut until the end of time. We know that. It's not going to surprise anybody.
No.
It'd be interesting if somebody dissents in favor of a hike. Austin Goolsbee, I'm looking at you. That would be interesting. I doubt that's the way it goes. We probably just get the one dissent and everybody else circles the wagons around Powell and says, listen, we're going to be maximum vague here. And then when Powell comes out, that's the action.
Yeah, that'll be funny. It's like Mirren calls for 100 basis points of cuts, but two people call for 25 basis points worth of hikes. So net, there was no change in the average person didn't want to change, but there we have it. Ilya, bonds here going into this decision, volatility up again a little bit, 15 IVR, not huge, but a little bit more weakness as we back away from the midpoint of the recent trading range, September lows, highs that we have in October. 114.28 ticks. We do see here notes a little bit softer as well, backing off of the 112 figure. Hey, maybe we can finally get away from 112. I'm looking for the Fed decision as it's due to be out here. I'm updating their website, but it hasn't been posted yet. Oh, and now it has been posted. There you go. Oh,
here we go.
It's okay. Economic activity expanding at a solid pace. Job gains remain low. Unemployment rate has shown signs of stabilization. Inflation remains elevated. Balance of risks, monitoring the implications. This is as neutral can be. In assessing the appropriate stance in monetary policy, the committee will continue to monitor the implications of coming information for the economic outlook. The committee's going to be prepared to adjust the stance of monetary policy as appropriate if risk emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. Ilya, that's...
And Mirren dissented. Of course he did. Oh, Chris Waller dissented as well. I guess he's still angling for that Fed job, maybe. They preferred to lower by only 25 basis points. Look at you, Stephen Mirren. Only 0.25%. Interesting. Somebody's been looking at the price of oil.
Someone's looking at the price of oil. You mentioned Christopher Waller being one of the Fed governors who dissented for a 25 basis point rate cut. Polymarket has him at a 13% chance of being the next Fed chair. Rick Ryder's still your number one guy.
Might be 15 after today.
After this decision, the market had a little bit of a bounce. It's more or less exactly where it was beforehand in the S&P, in the NASDAQ, in the Dow Jones. The policy decision itself comes in as no surprise. We're looking at 0.5% chance of any decision one way or the other, at least towards a cut, for example. So 99.5% chance of a hold. That press conference coming up at the bottom of the hour will be the most important thing here.
There is a neutral thing here, though, that is more neutral than the last several statements. There is less of a dovish bias here. And the statement just physically is much shorter. So the Fed is saying something very narrow, as we were saying just before it came out. They're aiming for maximum vagueness on purpose. One might say, if you and I were sitting there on the committee, what would we be doing in this environment? We'd be aiming for maximum vagueness, because you'd want to retain all the flexibility you could in an environment like this.
The statement tracker from the Wall Street Journal shows minimum changes, talking about slight shifts at the margins that are a little bit more hawkish. The committee's attentive to risk to both sides of its dual mandate and judges that downside risk to employment rose in recent months. They're no longer saying that the risks to employment have risen. Okay, that's, again, if you think the risks are rising to employment, you're implying that you think looser policy is needed, rate cuts are possible.
Yeah.
They're taking that off. They're showing signs of stabilization, right?
And inflation remains somewhat elevated.
Exactly. This is not screaming that the next cut's coming anytime soon. So I think the market, we say it has it priced right in terms of not expecting a cut in March or in April. If things continue along their current path, then they're probably not going to cut in either of those meetings. And then June very much is drawn into question. I wonder, though, Ilya, because while stocks are pulling back a little bit here, S&P now a little bit deeper red, we do see that bonds are remaining soft at the long end of the curve because, hey, better growth, higher inflation, that's where it's reflected here. And if they're not going to be addressing it vis-a-vis rate hikes, then there's more room for those growth and inflation expectations to build. So I'm not too hot on bonds right now. Yesterday I did something
I'm still short.
neutral. Yeah, I have the reverse iron fly in ZN, which it's actually working out a little bit better today. I'm glad that I held on to it because it's now no longer at max loss. There's that. On the ZB side of things, the long call spread that was put on when it crossed 116 is going to be jettisoned for a loss. The ZB Iron Condor. This is what I did yesterday. And I think that even coming out of this Fed meeting, it's still probably the right thing to do. 58 days to expiration, the 111, 112 put spread on the downside, the 119, 120 call spread on the upside, effectively saying we're not going to break the September low or the October high during this particular trading window. I don't know if that's, it feels right still, but directionally, this is looking like a negative momentum chart because we have a pretty clear down channel here. And the past few days carried us back into the 50-day, back into the 1 month where we summarily found resistance and have started to turn lower again. So bonds here.
Yeah, here's an interesting tidbit for you. And I can't believe somebody like a Scott Bessent won't go explain this to the president. The Fed just opted for maximum vagueness. Why? Because on top of all of the complications in the economic environment being created by tariffs and the situation in oil and this and this and that, there's also the pressure politically. Let's say Powell comes out in the press conference and his motto is the same. Vague, 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 don't commit, don't commit. You get any questions about the proof of life video, you flip it back on the reporters and say, hey, I said what I said. Just like when they asked him before, oh, do you think the president has a right to fire you? And he said, against the law. Then they asked him again, he goes, against the law. Next question. You get that and you get more uncertainty. Well, what happens when the markets perceive more uncertainty? They put more risk premium into treasury yields. Rates are going to go higher. And that's not because the Fed's signaling hikes or not signaling cuts or this or that. Nothing to do with that. It's because the Fed isn't signaling anything this way or that. And so the market just becomes more uncertain. So more term premium goes into rates. Rates go up. Somebody really ought to explain to the president that all of the pressure is doing the exact opposite thing from what he wants.
It probably is. I still want someone to explain to me, and I know a number of people in the chat have agreed with this point about bonds, but bonds were up 1.4% last year in a year where oil was down nearly 20%. That's usually not how those things work out. Unless there's a major countervailing factor, and we know what that.
We know what that is. The risk is clearly on display. The term premium in the 10-year is at the highest in 12 years. Gee, I wonder what the bond markets are so concerned about.
Well, as it were, the entire curve is getting weaker here, and we're staying weaker after the Fed decision. I see if it's in the belly near ZF, for example, the low that we had in December. We tried to rally back into it the past few days. We've been rebuffed. We could say the same thing here, for example, over in ZN. We rally back into, try to get through our 1 week moving average near recent lows. We're rebuffed. ZB, same story, Ilya. Bonds are not that interesting right now, broadly speaking. The most interesting part of the market remains the metals, the precious metals, where Ilya, last night on Overtime, you and I were discussing a potential breakout here in silver prices. I am happy to report that I was able to get back into this market. So I'm looking for a move back up to 117, 118. There is some stalling up here, and we
Yes.
can't dismiss the fact that that's several candles in a row here on our 4-hour time from really over the past 24 hours, where advances through 115 have been pushed back fairly aggressively. But the volatility continues to pop, right? And the silver vol going up to news cycle hot 123 IVR right now. That to me substantiates the fact that this thing remains in the bullish throes. So it's another 5.8% gain today. We have our gold chart likewise here, holding on to some of its gains after the Fed. We did pop into the 5360 area not too long ago. Within the past hour, we have pulled back some, but I mean, Ilya, these charts, they just continue to trade in very technically clean manners. Triangles and uptrends yielding to new highs, wash, rinse, repeat, digest, volatility stays firm, continue to go up and up and up. I saw that Citigroup went out a $150 price target for silver yesterday. Does that intrigue you?
A little bit. I mean, when you look at, let's say we look at a 4-hour chart of SI futures here, it does look like something might be getting afoot. So we've got a little bit of a level of former resistance become support at 112.40, let's say. Something like this. And it does look like we've just punched under that. And now we're retesting a little, but it does look like we're moving through those levels. So a little bit weaker into the Fed press conference. Maybe this is nothing, but I'm okay for right now to sit in my out of the money short call vertical. It's a complete flyer, a madman's delight, as we like to call it, on overtime. Tune in for overtime, by the way. Just a few hours hence, we'll be breaking down what Powell says in the press conference. Plug. But it could be that, you know what, there's just a speculative flush here. And if the Fed doesn't commit and yields go up, does that change the precious metals story? Not one bit. But could it give you a little bit of a shaking of the apple cart? Absolutely. There's a lot of speculative interest built here. I think for the metals to go down in any kind of a really meaningful way where I wouldn't be looking at that downswing as a reason to be long at a better level would be if we went full risk aversion. Correlation 1 risk aversion, where everything becomes correlated and all the money goes into dollars because people are just cashing out. And that's the cash of choice in those kinds of environments. So could that happen? Obviously, and of course. So it's something I'm watching, but until you get something like that, the story seems straightforward. So I'm long gold. I'm a little bit hedged with this short call vertical in silver. It's way out of the money. It's got tons of time on it. I did it at 53 DTE 2 days ago, so there's still plenty of time here, which of course dilutes the exposure to underlying delta. So as I look at all of this, if it breaks, I'm going to be out quick and I'm going to be flipping long in a hurry. But for now, I'm okay straddling both sides of the market here a little bit, even though I am very much biased long. I am much more long gold than I am short silver.
Gold here, 53.24. Fed is not really staying in the way of a rally. It's up nearly 4% now. Silver, likewise, after the Fed announcement there initially, Ilya, we talk about this being a really volatile market. I should say ahead of the Fed announcement, about 15 minutes ahead of time. We hit a low of 110.40. Silver's already back up to 112.84. Gold, 53.25. So the march ever higher continues. I did bring
we're looking at an almost 4% day here in gold futures, which is magnificent.
Great. It's wonderful. I mean, not so wonderful. I made the decision yesterday to stick with the current GCJ5 call spread as opposed to putting a new one on during Futures Power Hour. And had I done that, I'd be making a lot more money today because of the sensitivity of how quickly those out of the money options have moved into the money.
I'm straight up long the 1 ounce gold futures. I'm not even looking at options here. I'm just long those 1 ounce gold futures. I'm trading them like a currency, in and out.
I'm curious, does the IVR here, and I'm looking at GLD.IVR on the platform, if we go to a weekly chart, it's a 134. Rare's been the occasion that we see gold volatility this high for this long. Okay. You have to go back to 2020 when you see it in like what, the 163 area. What does that say to you about building an exposure here? You know, if I want to be bullish, is short put spread the way to do it? Because yes, even if the market pulls back, it's probably going to pull back with a fairly large volatility contraction. And so I might be able to make money short put spread even if this thing declines. Or do you keep chasing this to the upside with either direct exposure like you're doing through the 10Z contract? I know GC may be large for a number of folks. So maybe it's MGC, maybe it's just GLD. But what does this volatility profile tell you about how you want to structure your exposure if you're not already in the market?
I think you have to be careful about selling vol here because this is a very directional market and you might be better off just trading the underlying futures. Obviously, the GC contract is huge. The MGC contract is still too big for my taste. The 1 ounce contract seems to be sized just right. The margins are relatively low, and you can go in and out. It's liquid. The spreads are relatively tight. So I think when you look at the spread, for example, between the GCJ contract, the next one after this G contract expires in just a day or two, if you look at the spread between that and spot, it's really out there and it's been trending. Those things have come apart increasingly. And that's not what you want to see. That tells you that either there's cost of carry that's blowing out or there's some sort of a supply disruption that's bothering markets. And that speaks to what we're seeing here in vol. So this is not clean by any stretch of the imagination. Obviously, if you just look at the price chart, you can see lots of fervor in this market. So to me, it feels like you don't really want to be exposed to the underlying volatility as its own variable, which is what would happen were you to be doing this in options. So better to be nimble, have a proxy for the actual underlying through the futures. Keep it small by making use of the 1 ounce contract. Be nimble. Futures also obviously move after hours, which is incredibly important when you're in this kind of a market and things can happen overnight. So that to me seems like the most straightforward way. If you're going to participate, don't get fancy. Be simple, be nimble.
If only to emphasize how aggressive this rally's begun. When we have the move off the late November lows, which even on our 4-hour time frame, we really can't capture them going back to the 21st. The rally that got us from 50 to 75 in the span of what, 6 weeks? That's an incredibly aggressive rally. But then it got even more aggressive the past few weeks, where we go from 73 up to 95 in what, a week and a half? And that doesn't even capture how this thing has accelerated again here in recent days, particularly starting with what happened last Wednesday moving forward. So, Ilya, the triangles into triangles into triangles, they continue to work. We're back to 113.30.25. It's jumping around 5, 10, 15 cent increments right now. Silver with its high volatility coiling into a triangle here. We've seen that movie before, and it typically yields a bullish outcome. So, I mean, I'm going to be sticking long silver. I know you and I find ourselves on different sides of that trade. I like gold with you. You're in the 10Z. I'm still in the double call spreads here. Yeah. The one that we put on in December when gold was at $4,400 an ounce. Still has 89 days to go. So that 5,000, 5,100 call spread, it did tick into about half, 50% max profit today, but we're playing for the winners here. We hold on to our winners and then we let them run. So it's just a function of just hopefully the market doesn't fall apart and we can continue to milk that.
Just look at this volatility and then consider GC futures got as far away as $72 away from spot. And then the next day got as far away as $100 from spot in the opposite direction. So, these are wild swings. From contango to backwardation to the tune of almost $100 in either direction on back-to-back days. That is not what you would expect to see in a liquid market like this. So the amount of speculative fervor here is clearly significant.
The one thing that I think is probably worth paying most attention to, if you look at the 1-year silver swap minus the 1-year treasury rate, the market should be in contango normally.
Yes.
Look through history.
Yes.
It's been below zero for several weeks now, really going back into June. June was the last time that it was close to flat. And because there's just so much demand right now. People are willing to buy the silver now. Like, we'll take the silver now at any price. Just give it to us.
Yeah.
Is what the market's saying. I know that there are some people out there like, oh, Shanghai silver is trading at 137. You're misquoting it. It includes the value-added tax. Silver in Shanghai is really going more for like 116. So the spread is $1 or $2 versus the actual spot price in the US. If it costs me $137 to buy it, I don't really care that it costs 116 without the VAT. I can't own that silver unless I pay the VAT. So it's going to cost me 137.
And
so
the markets aren't stupid. They know the VAT's there. They're pricing things accordingly.
We are about 10 minutes away from Powell's press conference here, so we have a little bit more ground to cover. Energy and the Armada, as President Trump tweeted out today, which was, that's not supposed to happen. As President Trump tweeted out today, we see that the USS Abraham Lincoln is now in the Iranian theater, which we've been watching here over the past week and a half as it sailed west through Malaysia. Not the only reason why we want it to be long crude, but certainly a good reason, as the market has shown a tendency to push oil prices higher and expand volatility during these episodes. Ilya, it feels like that there has to be some sort of U.S. action, though. Earlier today, when Iran put out a headline that they were willing to negotiate with the U.S., oil prices did pull back in for, how convenient. Oil prices did pull back in for a little bit there. So I forget what analyst I heard today on Bloomberg. It was either, I think it was someone from Goldman or JP Morgan, but they were making a very good point, which was, if now that the Armada is here in the Middle East, if there isn't a strike, oil probably has to give up a few bucks.
Yeah.
So watching the news flow around oil, more important than anything Fed related today, obviously more important than anything earnings related.
Yeah.
I would point out once again, as I said last week, if you look through the Trump administration's history of actions, they typically do military actions over the weekends so that we have time to digest before the markets reopen on Sundays. So it's now Wednesday. The Armada's in the Gulf. It feels like if we don't get a strike this coming weekend, Ilya, Sunday, this could be a little bit of a tougher market for oil. I'm playing it long, but I'm aware of the risks.
That should be the title of our next album, The Armada's in the Gulf. When you look at what crude oil has done here, just from the lows back in mid-December, we're up something to the tune of, about 8.5% or so? And we've broken the down move since those Iran-Israel missile shootout highs over the summer. So it's important to note here, and we said this as it was going on. We had a big rally, let's call it January 14th, January 13th. because there was the expectation that the U.S. might become involved in Iran directly. And then when the president talked down that possibility, we sold off for one day. We said at the time, this is not the summer. You get this one sell-off because we're not getting involved directly at that moment. But crude oil has broken a major trend. And what it's doing not for episodic reasons. It's doing it for structural reasons. We just discussed them. The disruption of supply to China is not a shootout that happens one time and stops. It's something that is a structural change in expectations for a supply glut this year, which were very broad-based expectations. Everybody and their mother, all the alphabet vowel acronyms out there, EIA, IEA, whatever they're called, all of them had a supply glut in their forecasts for this year, and all of them are being shown wrong by these U.S. actions. So the break here seems to be structural, not episodic. If we don't get involved directly, you probably get another sell-off not dissimilar from what we saw on the 14th, 15th. Does that change the trend? In my mind, no.
With oil's rally, at some point, this is going to be a good fade, in my view.
At some point, sure.
Then probably want to buy that dip again.
We might have, yes. So that's exactly right. If there is a pullback here, I'm going to use it as an opportunity to buy more. I've got tons of time on these positions, well over 70 days still in my oil call verticals. I will make the position bigger if there is a pullback that keeps the trend intact. And for me, the line in the sand for the trend is somewhere around 58.5, maybe $59 on WTI. You have that gray line right there. That's where I'm long. It's where I added when we pulled back last time. I'll be adding some more if that's where we go again. But we could look at the highs from back on, let's call it January the 14th, the closing high around $62. We might struggle to even get under that.
As we rally up here, one of the reasons why you want to have enough duration is if you look at a 54 IVR, 55 IVR in oil, you may say to yourself, as long as I can have enough time to ride this out, volatility is inevitably going to collapse.
Yeah.
The Armada is not going to remain in the Gulf indefinitely, and the market's will quickly then benchmark the new risk and then move on. It's not there for me. I'd have to tinker with some of the pricing, but 67% probability of profit, right on the outside of the expected move for what it's worth, which would take you below the lows that we had here in December and through the highs that we had last June. But doing a short iron condor on either side of those highs and lows, you could start to tinker with looking at maybe something in that risking three to make one.
Mm-hmm.
And then it becomes somewhat appealing. But just have to give yourself the time because you don't want to be in a short iron condor position only for then the market to have this event occur over the weekend and then time runs out, but you were ultimately correct because the geopolitical premium disappears at some point. Ilya, we have 2.5 minutes until Powell starts speaking. We do have Dr. Jim coming up next, but with video on demand with his options crash course. So we're going to run this right down to Powell starting to speak. Our US dollar here today is bouncing back a little bit. Besant came out and tried to push back and refuted some of the coordinated intervention comments that have been making their way through the market from various people.
What? Intervening?
Don't know the guy. I would also point out with the euro, ECB officials have opined today that they are not pleased with the rapid pace of currency appreciation because it could impede their inflation goals, and going from 116 to 120 is not something that you just ignore. Yes. I know it's the euro futures, but I do want to take a quick look at the spot price because the spot price is holding up a little bit better than the futures are right now.
Yeah.
The Fed, Powell may help reframe this a little bit here.
Yes.
because if it looks like the Fed isn't going to give us the rate cuts that we the collective market wants, then there might be an opportunity for the dollar to rally back a little bit. There's really two ways to approach this, Ilya. If this is a sideways range and breaking back into the range, you typically consider it for a move to the other side. But because of what's driving the dollar right now, I would look at a bounce into like 97.75 in DXY. So I suppose the equivalent would be more like 118.40 or so, the recent swing highs, and see if I could reestablish a long euro position, a short dollar position, instead of necessarily trying to call a bottom here.
Take a look at the pound, because that one looks even juicier to me. Now, I'm already in this position. I'm already long, but we just broke above the July highs here. You could get a pullback. Right now, we're sort of retesting that around 137.50. If you got a pullback to like 136.50, maybe even back to 135.50, that's going to be a buy that I'm going to use to add into my exposure.
Yeah, I'm very much with you there. If we got to move into, say, like the former high from January 6th, 135.66, our 1 month is at 135.20, so a little bit of convergence down there with our 50 pulling up would really reinforce that as a, again, place to buy a dip. So Powell today, he may spark a dollar rebound. I don't know if I'm a believer given what's driving the dollar lower. Here tomorrow, Ilya, it is a quieter morning. We have initial jobless claims, which have been persisting near cycle lows, and that's one of the reasons why the Fed's probably going to be more optimistic. Outside of that, not much to discuss, except for the fact that I'll see you in studio.
Yes, sir.
But you and I are done here for now. It's Wednesday, so I'm going to take us out today on Last Call with Nick. I'll be with you on overtime. So we'll wrap up this Fed day and get into the tech earnings later on. Until then, though, good luck trading. Again, brief break. Dr. J's Up Options Crash Course next here on Tasty Live.
Godspeed, everybody.
This is Jimmy. He's 55 years old, married with 3 kids and 3 grandkids, and he's been investing ever since he graduated from Central Michigan University, Fire Up Chips, over 30 years ago. And given how strong the market has been these past 3 decades, he's done really well for himself. In fact, his retirement portfolio just crossed over the $1 million mark. But he's stuck, earning the same old 7 to 10% annual gains from the market each year, and he's at the mercy of market volatility. With hopefully only 5 more years to work before he retires, Jimmy wants more control. He wants to take hold of his future and his returns. Well, my name is Jim Schultz. I'm a finance PhD, and I've devoted my entire professional career to understanding the markets, starting as a professor in academia, where I taught undergraduate and MBA classes, and also did my academic research solely focused on the markets. I've since been a practitioner in the markets, actively trading since 2007. For the purposes of this video, I'm going to be Jimmy. So I've had a great run in the market over these few decades, but now I want to really unlock the full potential of my portfolio. While the 10% average annual return that the market has given me has been great, I'm intrigued at the prospect of producing portfolio returns that are even higher than that. I've heard with enough skill and ability, it might be doable. And maybe even more importantly than boosting my returns, I'm very interested in reducing my overall portfolio risk. Being that I'm closer to the end of my career than the beginning, I want to be better prepared to handle extremely volatile conditions or big market meltdowns, like we had during the internet bubble in 2002, the financial crisis in 2008, the COVID crash in 2020, or even the trade wars and tariffs that we're experiencing right now in 2025. Well, whatever the reason might be for you or Jimmy, if anything about his story resonates with you, then you are in the right place. I'm going to show you how to begin to make the transition from a purely passive approach with your portfolio to a much more active approach that steps into the world of derivatives. And we're going to break it down into 5 simple steps as I take Jimmy through a first-hand example. And we start with step 1. Taking inventory of where you're at. I've taken the passive approach and it's worked out great, but it's important to remember that those 10% average annual returns are exactly that, an average. While the market does go up most of the time, it can also go down, and sometimes seemingly out of nowhere, just like we've seen to start 2025. Well, that is what I'm trying to avoid. Until now, I have been simply buying and holding, absorbing whatever blows might come my way. But I am tired of this lack of control. I want to be more involved. I don't want to be so reliant on market direction for not only generating returns, but mitigating risk. Now, you may be just like Jimmy. You don't want to stand passively by, needing the market to move higher to hit your return projections. All the while, the performance of your nest egg seems to be directly tied to the next Trump tweet. You want to take control and add a brand new strategic component to your portfolio. Well, once you fully immerse yourself into the world of derivatives, all those things can happen. But before we dig into the real details, we have to progress to the next step in the journey, where we are now going to tap into all the tools that were available to you as a passive investor who was reliant on the market moving higher. Specifically, let's talk about the power of dividends and dollar cost averaging. Step 2, the tools you need. Now I'm ready for action. I'm going to ditch the purely passive approach, but to be fair, I have done really well as a passive investor over the last 30 years using the 3 Ds, direction, dividends, and dollar cost averaging. So naturally, there is still a part of me that really likes all these strategies. The thought of abandoning those long bias strategies completely has me feeling a little bit uneasy. Well, here's the great news. Continuing to collect your dividend payments or improve your basis through dollar cost averaging are both still very much in play. You're going to see that there will still be a home for you to carry some share positions in your favorite stocks. And even in the options portion of your portfolio where you might not own any direct shares, any dividends that the company might pay automatically get factored into the option pricing. For example, if instead of buying stock in Apple, you decide to use a short put position, which is a classic option strategy, you are still going to collect any upcoming dividends that Apple might pay with that short put strategy. This happens because you're able to sell the put for a higher price based on the simple fact that the extrinsic value moves higher due to the dividend itself. But all of that is way beyond where we want to go here today. Not to mention, we've already done a video that covers all of that in depth, and you can watch it right here. But what about dollar cost averaging? Well, I learned early on that it was a great long-term strategy to add to my investments in individual stocks or broad-based indexes when the price of those stocks or indexes was falling. If the company was solid or the overall economy would be strong again, then I knew there was a really high probability that the stock prices would recover. Well, with derivatives, high probability trades are at the core of what we do, and here is the best part. It happens right at trade entry. You don't need to wait for the stock to drop or things to go south. You start improving your basis right from the very start. Now, I'm very happy to hear that both the returns from dividends and the spirit of dollar cost averaging can be alive and well with the option strategies inside my portfolio. But now, I'm even more intrigued to hear about how I can actually make money without needing the market to go higher and without being so reliant on market direction. That sounds crazy to me. Well, both you and Jimmy are in luck because that is exactly where we're headed next. Step 3, trading time and volatility. Now, I have to be honest, this completely blows my mind. I was under the impression that to make money investing in the stock market, you buy stocks and you need a move higher in the stock to make money. Well, it turns out that's not necessarily true. It's important to understand that in the world of options, any position you might have can and will make money from 3 different parts: direction, time, and volatility. So let's start with direction. Now, working through all the inner workings of calls and puts and option pricing is way beyond our focus here, and we can't get into it in this very video. So I would encourage you to watch this video right here. For the sake of Jimmy's goal, we want a broad overview, and it works like this. There are option strategies where if I'm bullish, I benefit from the stock price going up, and I'm hurt by the stock price going down. So very similar to being long stock. There are also option strategies where if I'm bearish, I benefit from the stock price going down and I'm hurt by the stock price going up. So very similar to being short stock. But here is where things get interesting. With options, if I'm bullish, I can set up a strategy that benefits from the stock going up, but can also make money if the stock goes nowhere, and even possibly make money if the stock goes down a little. And similarly, if I'm bearish, I can set up a strategy that benefits from the stock going down, but can also make money if the stock goes nowhere, and even possibly make money even if the stock goes up a little. And the reason we can do that is because with options, we're not only trading direction, we're also trading time and volatility. You see, with options, there are various components to an option's price. The underlying stock price of the stock the option is on is a component. The risk-free interest rate in the economy is a component. Even the dividend that the company might pay is a component, just like we saw in the last section. But one of the largest components to an option's price is the time that is left on the option contract. Every option contract expires on a specific date. So some contracts might expire in 7 days, some might expire in 45 days, and some might expire in 360 days. Simply put, the more time the option contract has, the higher its price. As time passes, the number of days left in the contract decreases, and so that time value follows suit and also decreases. Here's the best part. You can play any directional bias you want, but you can also play time along with that same strategy. More specifically, you can benefit from the simple passage of time. As the days go by and the time value dissipates from that option's price, it helps the P&L on your position. Now, for our strategy examples coming up, we're going to focus exclusively on time, but it's important that you're made aware that you can also trade another non-directional metric, volatility. Now, volatility does share a reliable relationship with direction, but we'll leave that discussion for a future time. For us, we want to understand that much like time value is added to an option's price, a volatility premium is also added to an option's price. And also very similar to time, more volatility means higher option prices, and lower volatility means lower option prices. This will come as no surprise, but this video right here explains volatility in great depth. But for our purposes, here is what we need. Market volatility moves up, it moves down, it moves all over, just like everything else in the market. But generally speaking, on average, volatility is in a state of contraction, so it's moving lower. And just like we did with time, we can set up option strategies to take advantage of that natural volatility contraction. But now you've got to be wondering, all right, I see how time can help me, but I still can't for the life of me understand how I can make money without being directionally right or even being directionally wrong. Well, that's where we're going next. Step 4, strategic breakdown. So let's unpack 3 different strategies, starting with a covered call. I'm used to owning stock, and one of my favorites over the years has certainly been Apple. Well, the beautiful thing about a covered call is that it starts the same way that all of my positions have started, with long stock. The difference is, on top of that stock, we're going to add an option component, specifically a short call. This is what is called a covered call strategy. Let's suppose I own some Apple that I bought earlier this year for $180 per share. Today is April 9th, and right now in the option market, I can sell the 200 strike call in the May cycle that is 37 days away for $2.50, which is $2.50 per share or $250 for the whole contract, because option contracts are always in 100 share allotments. Now, a key part to understanding how a covered call works, or really any short premium strategy, is this. If the stock price is above the strike price on a call, the call is in the money, meaning it has value. But if it's below the strike price on a call, the call is out of the money, meaning it is worthless. If the stock price is below the strike price on a put, the put is in the money, meaning it has value. But if it's above the strike price on a put, the put is out of the money, meaning it's worthless. And when you sell options, you always want the options to be out of the money. That is because that allows you to keep what you sold it for. So back to my covered call. Let's explore 4 simple scenarios by May expiration. Apple goes to 160, Apple goes to 200, Apple goes to 220, and Apple stays right at 180. If Apple falls to 160, then I'll lose $20 per share on my stock, but my short call will expire out of the money, so it will be worthless, which means I'll get to keep the $2.50 I sold it for. So my net P&L is improved to only losing $17.50, which is good. If Apple rises to 200, then I make $20 per share on my stock, and my short call expires exactly at the money, which is the same as out of the money at expiration, which also makes it worthless. Again, this means I'll get to keep the $2.50 that I sold it for, so my net P&L is improved again up to $22.50. Also good. If Apple rises all the way to 220, I make $40 per share on my stock, but now my short call slows me down because it is in the money. I do get to keep the $2.50 I sold it for, but now the short call loses the difference between the 200 strike price and the 220 stock price. So again, my net P&L is plus $22.50, which is good, but not as good as it would have been if I just held the long stock only. But lastly, what happens if Apple stays at 180? It moves around, up and down, sideways, whatever, but at May expiration, it's right back to 180. Well, I don't make or lose anything on the stock, but again, my short call expires worthless, so I get to keep the $2.50 per share. So in other words, I generated a positive P&L on my position without needing the stock to go anywhere. And that, my friends, is the power of options. Not to mention, I also improved my net P&L in 2 of the 3 other scenarios too. Okay, so next up, the vertical spread. And specifically here, we're going to talk about a short vertical spread using put options. So this would be a short put spread. Let's use Tesla as our example. Here, I won't have the familiarity of long stock to lean on, as my position will be solely options. But I'm bullish on Tesla, so I want to set up a short put strategy in the May cycle with 37 days to expiration. To do that with Tesla at $250 per share, let's say I set up a 225 220 short put spread that I'm able to sell for $2 in the May cycle. Now, an important aspect of short vertical spreads like the one I have here is that my maximum gain is always whatever I sold the vertical for, so $2, and my maximum loss is always the difference between the width of the vertical and what I sold it for. So $5 width minus $2 credit, or a $3 max loss. So let's work through 4 different stock price scenarios. Tesla rises to 300, Tesla stays at 250, Tesla goes down to 230, and Tesla goes down to 200. First, Tesla rises to 300. In this scenario, this short put spread expires out of the money, so it's worthless, which means I keep what I sold it for, and my P&L is plus $2. Next, Tesla stays at 250. In this scenario, again, the short put spread expires out of the money, so it's worthless again. I keep the premium, and my P&L is plus $2. Next, Tesla falls to 230, so it went down when I wanted it to go up. But here's the crazy thing. Again, the short put spread is still out of the money, so it's worthless. I keep the premium, and my P&L is plus $2, even though I was wrong about the direction of the stock. And lastly, Tesla falls to 200. In this scenario, the short put spread is fully in the money, so this trade would be a loser, where I would lose the most I can possibly lose for a P&L of minus $3. Now, as you can see, I'm not hitting home runs when the stock moves in my favor in this Tesla example. Not at all. But it's pretty crazy that I'm able to make money when I'm wrong on the stock price direction completely. Well, that is exactly what we meant earlier when we said you're able to benefit from the passage of time. When you sell out of the money options, if they stay out of the money, then you are able to allow that time value to drive your ultimate P&L. So now, the third and final strategy, the short strangle. Here, let's say I want to do an option strategy in Starbucks. And for this one, I don't think Starbucks is going to move much between now and May expiration in 37 days. So I want to set up a strategy that is a pure time play. It could be a volatility play too, as we alluded to earlier, but for these examples, again, we're just focused on time. So with Starbucks at $95 per share, let's say I sell an 80-110 strangle. So an 80 put and a 110 call in the May cycle with 37 days to go for a $4 credit. As long as Starbucks stays between 80 and 100 at May expiration, both options will expire worthless, and I'll keep my $4. So that means it could go up to 105, it could go down to 82, and it could do everything in between. It won't matter to me, and it won't matter to the position. As the time value comes out of the option by expiration, I will make the $4 profit from time alone. But here's the catch. Anything above 110 or anything below 80, that's where my risk is. And even more specifically, I have an unlimited amount of risk on both sides. Now that right there, you might be thinking, man, I am out. I am not interested. No thanks. Well, that makes sense, because you're just getting started. I just wanted to take the opportunity right here, right now, to introduce you to the short strangle, because it continues to be one of the most popular and effective strategies that experienced traders use every single day. And you yourself are probably striving to become an experienced trader one day. For now, though, there's no rush. This is not a competition. Start with covered calls and then move into vertical spreads. There will be plenty of time for other strategies like short strangles sometime down the road. I promise you, covered calls and vertical spreads alone are going to keep you plenty busy. All right, so next up is the final step of this whole crash course, where we are going to work out some different ways that you can break down your total portfolio and show both you and Jimmy how you can split up your assets between a passive approach and an active approach. Step 5, portfolio allocation. So now I'm beginning to equip myself with more skills to attack the market from a variety of angles. I can trade time, and I can trade volatility in addition to direction. But to do that, we have to figure out how are we going to split up our assets. More specifically, what chunk, what percentage of our assets are we going to keep doing what we've always done, and what percentage of our assets are we going to devote to this brand new derivative strategy? This is a really important question to answer, and here's the most important thing to keep in mind. You don't have to go all in with 100% of your assets into an active approach in the derivatives market. Definitely not when you're just getting started. It's understandable that shifting away from a passive, long only bias in the market that has done you so well for so many years is going to take some time. But practically speaking, what might some asset breakdowns look like? Well, if you remember, my retirement portfolio just crossed the $1 million mark. And in addition to that, I also have a $100,000 brokerage account that I might use to play a hunch from time to time. So in my situation, the starting point here is easy. While I'm certainly intrigued at the prospect of not having to be passively long all the time, I'm still confident that the upward trajectory of the market will continue to some degree or another. So I'm going to start with my $1 million retirement portfolio, still doing what I've always been doing, long some market indexes and some of my favorite stocks, but I'm now going to devote my $100,000 brokerage account to a more actively managed approach that focuses on derivatives, just as we've been talking about today. So that means that $100,000 of the $1.1 million total, or about 9% of my assets, will be actively traded, and 91% of my assets will continue to be passively invested. This is a great start. And over time, as I gain more experience and my skills improve, I suspect that that ratio is going to shift in favor of more assets being actively traded. But maybe you have a $500,000 retirement portfolio and a $200,000 brokerage account, and you want to devote more assets to the active approach now. Again, I think splitting up the approach to whatever is in your retirement accounts to passive and whatever is in your brokerage accounts to active makes a lot of sense. So here you would be about 29% active and 71% passive, so still the bulk of your assets passively invested, but a much bigger chunk devoted to the active approach. Or maybe you have a $200,000 retirement portfolio and a $40,000 brokerage account. Again, with the natural split of retirement assets into passive investments and brokerage accounts into active trading, you're looking at about 17% active and 83% passive. Of course, You don't have to do it this way. You don't have to use your retirement accounts for passive funds and your brokerage accounts for active funds. You can certainly do it a different way. You could even mix it up if you want to. But when you start to learn about things that we were not able to cover in this course, with buying powers and margins and things of that nature, it does make sense to begin with passive funds in the retirement accounts and active funds in the brokerage accounts. There are many, many, many ways to split this up. But whatever you decide, here are some important things to remember. First, by keeping some amount of your assets in passively invested positions, you'll maintain the familiarity of what you've been doing your entire investing career. So playing the natural market drift higher, collecting dividends, dollar cost averaging, all that stuff. Second, remember the strategy I suggest you start with for even your active stuff is the covered call, which we introduced just a little bit ago in this very crash course. So even within the active portion of your portfolio, you'll have that same familiarity of long stock. From there, you can grow into vertical spreads, possibly even short strangles down the road, and many, many other strategies. But lastly, again, do not forget, this is not a race. This is not a competition. The market will always be here. So don't go fast just for the sake of going fast. And don't dive into the deep end before you've even dipped a toe into the water. You're going to mess up and you're going to make mistakes. So ease into the active approach little by little and only do it as you are ready. And I'm here to help you as much as I possibly can. So please, you can always email me. I'm jschultz@tastylive.com, or we can connect on X @jschultzf3. But now, where do you go from here? Well, given the nature of this crash course, there were so many things that we were not able to unpack, that we were not able to dive deeper into. And so, if you want to use this crash course as a catalyst to improve your skills and improve your abilities, then I would strongly encourage you now to dig into the live show on the Tasty Live Network, dig into the archives, and maybe possibly even check out some of the other crash courses that are already available on the network and on the YouTube channel, such as the one that dives deeper into what it means to begin to trade options, and it happens to be starting right now. Starbucks, Amazon, Apple, Netflix, Tesla, and Circle. 6 of the most popular stocks in the market today. 6 stocks that are probably in many of your portfolios right now. Some old and some new. But what if you had to find the best stock to trade to fit a $30,000 account today? How would you do that? Well, I'm Dr. Jim, and after having traded for nearly 20 years now and having been on the Tasty Network for the last 10, we've created a 5-step checklist that's going to help us walk through exactly how to find your next trade. As we work through each step on the checklist, we're going to use market metrics, strategic choices to help us narrow down the list. And one by one, we're going to eliminate a ticker from the list until we're left with one ticker, one strategy, and we execute the trade. So let's get started with step number 1, liquidity. So the first step in finding a new trade and a new trade's journey is without question liquidity. You need to make sure that you are trading a very, very liquid stock, because I can say from personal experience, there is nothing worse than getting exactly what you wanted. You get the move that you want, the perfect position is on, the strategy checks out, and then the next thing you know, you can't get out. You can't get out for a good price because you're trapped in a very, very low liquidity stock. You're stuck. So in this situation where the liquidity in the stock is really, really poor, you essentially have 2 choices. You either A, stay in the position a bit longer and wait for the price that you've been targeting all along, or B, you get out at a worse price essentially and take a fill on a price that isn't necessarily near the mid price or the mark price at that time. Neither one of these options is good for you. So to avoid essentially any and all problems associated with liquidity, you want to do 2 things, both of which are pretty simple. Number 1, check the liquidity star ranking in the Tasty Trade platform. And then number 2, cross-reference that with the bid-ask spread differential that's in the market at that time. Doing these 2 things will keep you on the right side of liquidity pretty much every single time. So let's dive in. All right, so we already have our list of 6 stocks, so we're going to work mostly from that list. But if you didn't have a list already, just go into Tasty Trade, click on the watch lists. You can use Tom's watch list, or you can use the Tasty default watch list as a great starting point. Okay, but with our stocks, I want to begin by checking the liquidity star ranking for each one. So here's Starbucks. Let's go over to the overview tab, and then you can see the liquidity star ranking, 4 stars. So Starbucks looks good. Here's Apple. We go to the overview again right here. You can see also 4 stars in the liquidity ranking. So Apple is good. Tesla, overview, liquidity ranking, also 4 stars. So Tesla is good. Netflix, overview, liquidity ranking, only 2 stars. Okay, so a big question mark by Netflix. Amazon, overview, liquidity ranking, 4 stars. So Amazon is good. And lastly, Circle, overview, liquidity, only 3 stars. So it appears it's going to be between Circle and Netflix for which one gets the chopping block. Now, again, to cross-reference the liquidity, now we're going to turn to the bid-ask spread differentials. So with Circle still loaded up, let's open up the October cycle with 44 days to go, because that's closest to that 45 marker where we like to enter our positions. And let's just simply look at the at-the-money strike. You've got Circle at 120. Let's look at the 120 strike. You can see that the bid-ask spread differentials are about 60 to 70 cents. I mean, they're moving around as the market moves, but about 60 to 70 cents on the put side and also on the call side. Now, generally speaking, for the most liquid names in the world, like SPY, like QQQ, you're going to see 1 penny wide markets. You're going to see 3 penny wide markets. You're going to see really, really tight bid-ask spread differentials. Now, with a lower liquidity name, we might be willing to accept slightly wider markets, but Circle at 60 to 65 cents for a $100 stock, I would much prefer to see that at maybe 10 cents or 15 cents. But let's now take a look at Netflix. If we look at Netflix with 44 days to go, same thing, right? But this is a $1,200 stock. So if I look at the bid-ask spread differential for the at-the-money strike, look at what we see. We see at the 12.15 strike, you can see that you're only about $1 wide on the put side. You're a lot wider on the call side, $2 wide. But you have to keep in mind, this is a $1,200 stock. So on a relative basis, I would argue that Circle is a lot less liquid than Netflix, because the bid-ask spread differentials are going to scale with the stock price. So Circle is gone off the list. The liquidity is just not good enough. The next market metric that we want to turn to is volatility. At Tasty, we feel the most opportunity as an active trader is with a focus on volatility. It's not directional. It's not trying to get bullish for the next leg higher or get bearish for the next leg lower. It's actually trading volatility, and specifically elevated volatility, and trying to sell that volatility to take advantage of its natural tendency to contract over time. Now, we already have an entire crash course dedicated to volatility, so definitely check that out when you have a chance. But simply put, our foundation is short premium, so selling options. By selling options, we're able to essentially put probabilities in our favor, put the passage of time in our favor, and then also position ourselves to take advantage of any volatility contraction over time. So we really like the short side of the option contract when it comes to the strategic choices that we make. But we don't want to just sell volatility willy-nilly. We want to be strategic and we want to be patient. So that is why we prefer to sell volatility when it is indeed elevated. Volatility is a unique characteristic in that it has been shown to demonstrate a mean reverting property. This is something that can be shown both empirically and also mathematically. Now, of course, you never know exactly when volatility is going to contract. It's never going to be that easy. But by selling elevated volatility, we are stacking the probabilities in our favor to eventually ride the volatility contraction later on down the road. Okay, so let's take our 5 remaining stocks, take a look at volatility, and see if we can't narrow down the list even more. So to begin looking at volatility, it's always kind of best practice just to get a gauge of where is market-wide volatility. And the best ways to do that are to look at the VIX or the /VX futures. So if I scroll down here on the Tasty default watch list and it's in alphabetical order, you can see the VIX right now is at almost 17. That's right around the historical average, maybe slightly over a historical average of around 16. Similarly, volatility futures are right around 17 or just over 17. So this tells me that volatility is around historical average, maybe slightly elevated in an overall market sense. But really, I'm not interested in market-wide volatility. I want to get laser focused with individual stock volatility. So similar to what we did with liquidity, let's just go through our stocks one by one, starting with Netflix. And the metric I want to look at is the IV rank. An IV rank shows me where volatility ranks on a percentile basis relative to where it's been over the last 12 months. So obviously a 9.6, like what I see here in Netflix, is telling me that it is essentially on the lower end of the distribution of all volatilities for Netflix for the last 12 months. So Netflix, 9.6. Okay, Starbucks, 20.6. So much, much better candidate for selling volatility because remember, I want to sell elevated volatility. So Starbucks certainly looks better than Netflix. Apple, IV rank of 14. So also looking relatively okay, at least in relation to what we saw with Netflix. And then Tesla also at 9.6. So very similar to what we saw there with Netflix. And then lastly, Amazon, only 6.2. So of the 5 remaining stocks, Amazon clearly has the lowest IV rank. So it essentially presents us with the least amount of opportunity as premium sellers. So Amazon is gone. Our list is indeed narrowing, and the time has come to finally choose direction here in step number 3. Are we going to play the stock higher? Are we going to play the stock lower? I mean, in my estimation, this is the age-old question. This is what everybody wants to know. And in my humble professional opinion, nobody knows where any stock or any market is going next. The markets are far too random and unpredictable. And so when it comes to picking direction, that honestly takes a lot of pressure off. I mean, by all means, use the technicals, use the fundamentals, use volume profiles, use order flow. Hey, you could even use your portfolio metrics to guide you. Quick little shout out to another crash course that is already on the YouTube channel all about portfolio management. But perhaps an even simpler method, and one that we generally deploy here at Tasty, is to kind of adopt a short-term contrarian mindset. So when something is down, we like to buy it, and when something is up, we like to sell it. All right, so let's take a look at Starbucks, Apple, Netflix, and Tesla and see if anything jumps out at us. All right, so for the 4 remaining stocks, Apple, Netflix, Tesla, and Starbucks, let's just bring up a daily chart, and we're not even going to measure any technical levels or moving averages or support resistance or any of that. I mean, you could do all that if you want to, but just very simply, I want to get a feel for, is something jumping off the page from a short-term contrarian standpoint? So Apple, to me, looks like a pretty obvious short. Now I say obvious jokingly because nobody knows what's going to happen next, of course. The randomness and the unpredictability will indeed take over. But if I had to choose a direction in Apple, it would be bearish. Okay, now Starbucks, conversely, this is a different story. To me, this looks like a bullish opportunity. Not to mention today, Starbucks is even down a couple of dollars. So for Apple, I'd probably want to get bearish. For Starbucks, I'd probably want to get bullish. If we bring up Tesla, this one looks a lot less clear, right? From a short-term contrarian standpoint, I think you could make the case that you could go either way in Tesla, bullish or bearish. And then with Netflix, very similar story to what we just saw in Tesla. I think it's hard to make a case either way. You could probably make a case for being bullish here. You could make a case for being bearish here from a contrarian standpoint. So it seems like Tesla or Netflix is probably on the chopping block. So how are we going to determine which one of these we should get rid of? Well, now this is where we can go back to some of the previous steps on this checklist to see if there was a clear winner or loser with liquidity or with volatility. Now, interestingly, remember with Netflix, the IV rank was 9.6. With Tesla, the IV rank was 9.6. I mean, that's quite serendipitous. It is literally a tie. But what about liquidity? This is where it's going to tell a very different story, right? Tesla, remember, we go to the overview tab, liquidity, 4 stars. Very, very liquid. Netflix, If I click on Netflix, liquidity, not so liquid. So only 2 stars on the liquidity meter. So Netflix is gone and Tesla remains. Okay, so direction is always tricky, but for now, Netflix is gone. Let's put that guy on the shelf. That leaves us with Starbucks, Apple, and Tesla. And it is now time here in step number 4 to decide, are we going to do undefined risk or are we going to do defined risk? And the answer here is simple. Defined risk. If you're just starting out, every single one of your trades should be defined risk, 100%. Now, is undefined risk more effective than defined risk? Yes. Is undefined risk going to essentially give you more opportunities than defined risk? Yes, but you're just starting out. We are just getting going. You have to build up your experience and your exposure to the market before you ever consider an undefined risk strategy. Remember, this isn't a race. This isn't a competition. There is plenty of time to grow into the riskier strategies that may be more effective sometime down the road. For right now, let's get laser focused on defined risk only. All right, so Apple, Tesla, and Starbucks, that's what's left. So which direction are we going to play? Well, as you can see, it largely depends on which stock we're going to choose. So let's proceed with the checklist and we'll circle back to direction. And to really drive this point home that essentially this case could be made with any of the stocks that we have left, Tesla, Apple, Starbucks, it doesn't matter. Defined risk versus undefined risk. Let's compare and contrast like a short strangle versus an iron condor. Short strangle, undefined risk strategy, iron condor, defined risk strategy. So with Apple pulled up, let's sell a strangle together. So if I sell a 220 put and then I sell a 255 call, this is a classic short strangle. This is a great strategy, a very popular strategy. But when you click over to the curve view and you click on the analysis tab inside of the curve view, you get a nice visual representation of this strategy. And so it's essentially showing you that you have unlimited risk on both sides of the market. Just starting out, this is not something that we want to engage with. So back on the table view, let's buy some wings. Let's buy a 215 put and let's buy a 260 call. If you go back to the curve view, you can now see that your risk is indeed defined. Now, this is not the greatest trade because we're only collecting $1.20, but for illustrative purposes only, it does showcase the difference between defined risk and undefined risk. So with whatever stock we choose, we are definitely going to lean on defined risk because this is the best way to start as a new trader. Okay, but one of these stocks has to go. I mean, those are the rules. One step, one stock gets eliminated. Well, again, let's use the previous steps as a tiebreaker, right? Apple, IV rank 13.9. Starbucks IV rank 20.8. But Tesla IV rank still only 9.6. So we are going to eliminate Tesla, and that leaves us with only 2 remaining stocks. All right, so we've made it to the final 2. Tesla is gone. Tesla is forgotten. It's all about Starbucks or Apple. And so now it's time to select a strategy, pick one of these stocks, and execute the trade. And if you are just starting out like a pretty brand new trader, the one strategy that I would focus exclusively on in the beginning is a pretty clear choice: the vertical spread. And more specifically, since you want to sell volatility, the short vertical spread. Now with short vertical spreads, you are going to be directional. If you want to be bullish, you would choose a short put spread. If you want to be bearish, you would choose a short call spread. And remember, with Starbucks, we were leaning to the bullish side. And with Apple, we were leaning to the bearish side. So the strategy that we select is going to kind of go hand in hand with the stock that we end up choosing as well. And so to help us do all that and essentially complete the checklist, we are going to lean on some of the tasty methodology to choose our strategy, select our stock, and execute the trade. Okay, so we've got Starbucks and we've got Apple. If we're going to choose Starbucks, we're going to be bullish. If we're going to choose Apple, we're going to be bearish. So if we're going to choose Starbucks, we're going to choose a short put spread. If we're going to choose Apple, we're going to choose a short call spread. So one of the key rules with short vertical spreads inside of the tasty methodology is we want to make sure that we're collecting enough premium on entry. So with a vertical spread, we want to make sure that we are collecting at least 1/3 the width of the strikes. By doing this, the risk-return relationship is a little bit more balanced in exchange for a high probability trade. So if I go into Apple, October with 44 days to go, and you've got the stock at 237, let's say I just sell a 240, 245 call spread. If I do that, you can see the probability of profit looks good. The credit collected looks really good. I'm collecting 227, so well over 1/3 the width of the strikes. So Apple looks like a pretty good candidate right here and right now. Okay, so let's do the same thing with Starbucks. Starbucks, 44 days to go, October cycle. Let's go just one strike out of the money. Let's sell an 85 put and buy an 80 put for the 85-80 short put spread. Look at the credit collected. It's only $1.33. So it is actually much less than 1/3 the width of the strikes, even with Starbucks having a higher implied volatility rank. So it appears that the winner is indeed Apple. So with Apple at 237, our short call spread is selling for about 230. Let's see if we can get filled. And there you go. We are now bearish on Apple with a short call spread, having worked through the 5-step checklist that we just worked through. And so I hope this helped, and we'll see you guys next time.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hello everybody, Tim Knight here. We are done with our first of 8 FOMC meetings for the year. It was a non-event, as people expected, and I watched most of the press conference. I might still be going. I don't know, I have to do this show usually when he's still talking, but a lot of the questions were political and he just batted them right back saying, not going to talk about that. So there's really nothing big from it all. And you can see by the quotes, I mean, the ES, this is a 7,000 point index. It's unchanged. It's just waiting. We're all waiting for the earnings. After the close today, Meta, Tesla, Microsoft all come out. Trillions and trillions of dollars in market cap, as well as a bunch of others. Is IBM in there too? I mean, these days it's almost like an afterthought. I think maybe it is. So it's a pretty big deal. There's a lot of stuff coming out after the close. Tomorrow afternoon we have Apple, which isn't as big a deal as all these others, not only because there's so many of them today, but also Apple doesn't tend to shock. They tend to come in at whatever they said they would come in at. So yeah, this in about an hour, things should be a lot more interesting than they are right now. Let's get started, and we're going to start off quite appropriately with gold. Those of you who've read me for a while, watched me for a while, know that I'm a big precious metals fan. A few years ago, I went out on a limb and said gold might be $5,000 a few years from now. Well, I felt a little silly saying that at the time, but it was kind of shot in the dark because humans have a tendency to like big round numbers. So 5,000 sounded about right. Well, we got there on Friday, and we've left that record in the dust. We are approaching 5,400. We could be at 6,000 next week. We could be at 10,000 sometime this year. Anything's possible. Gold and silver are making a big statement about the world currency system. And I wrote a book years and years ago called Panic, Prosperity, and Progress, which is about interesting financial events in human history over the past 600 years. And I had a whole chapter dedicated to the Hunt brothers silver debacle back in 79 and 80. And I've gone ahead and put it out there for free, just because I think it's a good read. If you want to check it out, just Google I assume you may or may not know my website, but I'm on Substack too. Just Google Substack Slope of Hope, and it's the most recent article. So if you want to read that chapter, it's kind of long, so I'm breaking it into 3 parts, but it's a fun read to see what happened with the Hunt brothers and silver and their attempts to corner that market. And importantly, as amazing as silver was back then, it spent the next couple of decades as just garbage. By the time the early 90s were around, silver was like $2 or $3 an ounce. I mean, it was like iron. It's just nothing very precious about it. Whereas these days, go through your coin jars, you might find some old silver coins in there from back in the day when the U.S. included silver with their currency. But gold is leading the way. Gold is up about $250 an ounce. And let's think about that just for a moment. The change from yesterday, 250, was the value of an ounce when Bill Clinton was in office. I mean, that's extraordinary to me. Just the delta from one day to the next is the same as the entire value of an ounce of gold back then. And percentage-wise, very impressive, almost 5%. Silver's moving bigger on a percentage basis, but gold's kind of eye-popping because it's at a clear lifetime high, and the numbers are so huge. So yay, gold. GLD itself is up a little over 3%, lifetime high, obviously, and you can see the little cup with handle pad on the precede all of this. This was an amazing fake out here back at the end of the year when it cracked below that. Somewhere out there, somebody dumped all their gold then and has been kicking themselves ever since, because that was a nasty fake out. I don't know what the market was up to. As far as gold miners go, GDX looks like a lifetime high close coming up there, and it's up about 1.7%. And over in Silverland, as I said, the percentage change is bigger than gold's, because silver is much more volatile than gold. And so we're up almost 9%. We are close to those lifetime highs that we saw on Monday. And I saw a video last night that someone was kind enough to share with me, which made me even more convinced not to get in front of this precious metals train than ever before. It was a very articulate video, very sensible video, and he sort of laid out just how maniacal a market like silver can become. So if someone said it's going to be $300 an ounce next month, it may well be. This thing may go crazy, because only a few months ago, $100 an ounce seemed absurd. But this thing is just is becoming like Bitcoin back when Bitcoin used to be cool. So really, really remarkable stuff. And SLV, the ETF, is up about 2.25%. Looks like a lifetime high close on that one. So this is doubled since December. For financial masochists, there's this creature here, ZSL. I talked about this, I think, on Monday, because I saw one poor chap had put his entire portfolio into ZSL, which is the silver short, leveraged short, and it's down to a lifetime low, obviously, of, it's like they'll have to reverse split it. That's how these creatures are. But yeah, what a wipeout. Just don't, like, I'm I got a lot of bear running through my veins, but it doesn't apply when it comes to precious metals, especially these days. I will say earlier today, short some XME. I'm having doubts about even that, even though it's kind of a watered down version. So I might just bail on that before the close, because boy, metals are just Herculean these days. Anyway, getting away from precious metals, the earnings yesterday weren't as big as this afternoon, but they're still kind of a big deal. And they all turned out very positive. Texas Instruments, TXN, that's quite a bar, up about 10%. Huge green bar there to a lifetime high. I beg your pardon, not a lifetime high, but it's near a lifetime high. It's a very, very good performance from TXN. And STX, this must have faked some people out, because STX actually fell pretty sharply after earnings. It's not reflected here because this is a daily chart. This is just normal daytime hours data. But I guess the conference call turned that around, because this is up over 20%. And this is definitely a lifetime high. And this is, bear though I may be, even someone like me will stay away from stuff like this, because this thing is a beast. Look at that. Absolutely incredible. Just astonishing. So STX exploding higher to a lifetime high. And in sympathy, although I've always thought that was a funny word, but I guess from a physics perspective, it makes sense. But it always sounds kind of sad, like it's falling. But in sympathy can also be up. WDC is up 12% to its own lifetime high. And SNDK, which has been setting the world on fire without anybody's help, also pushing to a lifetime high. And a strong day, about 10% gain for SanDisk. So all these storage companies are just doing incredibly well. It's not directly related, but that sent good vibes over to semiconductor land. SMH, lifetime high, 2.6% gain there. Because quarter to quarter, I guess everyone's waiting for like a break, the bad news, something to slip with the AI mania. And thus far, it hasn't happened. Now, we're only about the middle of the way through the earnings season, and the big boys haven't reported yet. But so far, all the data seems to continue to say that, from a financial perspective, everyone participating in the AI mania is doing quite well, not just in press releases, but in their financial data. So SMH, lifetime high on that one. I am short a couple of semiconductors, one or two maybe, that are weirdly weak, because when you're dealing with it's like there's an old saying about if something goes up and it should go down, buy it. And if something goes down and it should go up, sell it. Well, we'll see those charts in a bit, because there's some stuff that's going down that really has no business going down. Anything that has to do with semiconductors, you would think would be just blasting higher daily. Very generally, the spider. It's still below the broken trend line. So the bears still have a molecule of hope that this thing could turn around. As I said yesterday, it's kind of a shame that we jumped above this trend line, but we're still below this broken trend line. We are at lifetime highs. Where it closes is unknown, because as of right now, we're up at 0.02% on the ES, but it's just hanging out around lifetime highs right now. But tonight's a big deal. Tonight should pretty much settle if this thing's going to slump away from the trend line or just roll its eyes and jump right above it. The small caps, IWM, are actually down about 0.4%. This gap has held. This island reversal has held. And so we got a nice down day on Thursday. Is that Thursday? No, Friday. And then a little more on Monday. Just kind of hanging out, doing nothing yesterday. And then a strong open today, but now we're a little bit below yesterday. So we have been easing below that after this just massive run where small caps could do no wrong. So that seems to have stopped for the moment last week. As far as bonds go, TLT down a bit, but nothing definitive. As you can see, there's weeks and weeks of just noise here, just messy stuff. Kind of untradeable to my mind. Although for options traders, I'm sure there's all kinds of opportunities, but just as a simple directional play is just a directionless mess. Over on the short side of things, just a few odds and ends for you. Axon. Remember this one? This one's falling nicely, over $50 today. Nice tumble on this one. I don't know what, and I say this all the time because it doesn't matter what the news is or anything. I just sometimes I'm just curious. Is it earnings? Is it change in political atmosphere? I'm just slightly curious why it's turning tail like this, but it's undeniable that it's turning down. And this mass of this distribution top has done its job, and we've tumbled away from that. So that's pretty cool. Axon's the old taser company, the body cams and the taser. They came public back when I used to work in an investment bank back in the early 90s. TASR was the ticker. They were hot stock back then too. This is one of the items that I mentioned that I'm short, and it should, if it had any self-respect, to be going up. This is ARM, semiconductor firm ARM Holdings, and it's down today almost 5%, and that's great. I'm shorted. I'm just going to keep on tightening the stop. I am also short Broadcom, which is down a little bit, a little more than 0.25%. Had a strong open, but we're weak right now. And it is working on, to the best of its ability, what I'm hoping ultimately is a nice big top. It hasn't quite finished it yet, but it's doing what it can. So that's slowly heading in the right direction. FND, Floor and Decor, starting to behave itself, off about 4% on this one. It did penetrate into its own distribution chop somewhat, but we'll see. We'll see if it works out. It's a very big head and shoulders top. Maybe it'll ultimately pound below that. Another one, which you would think would be up today, Palantir. Almost 5% negative on this one. Hey, Duke. And we are working on this top as well. I have to keep stretching because it's just taking a sweet time. But this is definitely going the right direction. And it could be a few more weeks if we're going to complete this. But it's shaping up nicely. And this is the high techiest of tech stocks. And the cubes are up. Tech is strong, and they're going down. So that is worth noting. And just one more, nothing to do with tech, but I just like the chart, is Monroe, MNRO. This is I have to go way back in time because the top is so massive. I'm not going to bore you with that, but it's suffice it to say this is it's like multi-year top on this. And so I'm hoping to hold on to that for a long time. So just to blink quickly through the stocks that are going to announce. Here's Tesla, TSLA, which broke its own trend line a few weeks back and is kind of vulnerable to that. Microsoft, MSFT, which has had a very strong few days, but it's below its own cluster of, I think, fairly dense trading activity. And so that's pretty strong resistance around that zone. And then Meta, which is probably the most volatile of all these, it too has had a very strong 5, 6, 7 trading days, but it's up against a lot of trading activity in that zone here. If anything's going to leap surprisingly, it's probably going to be Meta, one way or the other. Of these three, I have a medium short position in Meta, and the other's nothing. So just to wrap things up, let you go. Here's the cubes. Not at lifetime highs. That line is right there. It's very, very close. And if earnings come in strong, it's going to jump right above that tomorrow. But we'll see. Okay, good luck to you. See you tomorrow. Bye-bye.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back, my friend, for the last call. And boy, do we have a couple movers in this market. We've got E-mini S&P 500 futures basically flat. Who cares about them? The NASDAQ up 88. It's up small. It's been pretty choppy of a session. You got the Dow down 41. You got the Russell down 11. The Russell, the weakest of the group today. Commodities ripping. You have oil up $1 near the high of the session here. You've got gold and silver both absolutely going bonkers to the upside. Gold's just below 5,400. Silver just below 116 here. Both at the highs of the session. You're talking about gold up 5% and change here, 5.33%. Silver up almost 9% here. Volatility futures basically unchanged, 1856, and bonds down 14. You're at the 115 handle. We had JPOW, FOMC. That was about as dull of a move, intraday move I think I can remember for an FOMC. You've had some face ripper earnings in some of the memory stocks. STX, which is Seagate, had a earnings after the close. It's up, $20. You look at some of the other ones like Micron and SanDisk. These are going absolutely bonkers. You got some big ones after the close today. Meta, Microsoft, Tesla as well. So what do you make of this entire day, this everything? Is it just, does all that matters to you is gold and silver? Is that all that matters to the market? That's my big question. It seems like it's taken all the air from everything. It's like, who cares about anything else?
It has. Yesterday, SLV and ZSL, the silver short ETF, they accounted for 16% of total trading volume on the NYSE. So if you're not trading these things, you may find the market to be a little bit dull. Silver itself is $5 off the lows 3 hours ago. So it's continuing to move. Gold up 5% now, Nick. They don't seem to be bothered by what Powell was saying, nor do stocks, for what it's worth. But I don't think that's a surprise. I mean, you can see it on the platform. We have the SR3 contracts there for the 3-month SOFR rates, and the market wasn't pricing in anything for this meeting, really not pricing in anything for the next few months. Mm-hmm. And Powell said that they don't really know what to do right now because everything's kind of in balance. Inflation's a little bit warmer. There's concerns over labor, but it's not as bad as they feared. And growth is certainly hotter than anticipated. So they're kind of just sitting on their hands. I will say my favorite part of the press conference is that Powell more or less hinted, confirmed my belief, which is that he intends on sticking around until the next Fed chair is confirmed, which, as we know, Republicans in the Senate are saying they're not going to confirm Trump's next Fed chair until the investigations into Powell and the Fed are dismissed or at least ended. So Powell seems to acknowledge the fact that he may not be leaving his post come May.
Is it a hostage situation, or is this sort of like wanted? Do you think he's staying there of his own volition, or is this like kind of like hostage taking?
Didn't the Grateful Dead drummer die a few weeks ago? I mean, if it was, he'd probably be following around Dead and Co.
That's true.
In his post-retirement years, but who knows if the band's going to continue, so maybe he needs something to fill the time with now.
That's funny. Well, in other news, some of these earnings, do you have any interest in any of these tech earnings? Microsoft, Meta, you got some of the ServiceNow is in there, IBM is in there. Do you think these are going to be the next movers for this market? I mean, we're sitting here at 7,000 on the E-minis, the NASDAQ just above 26,000. You got the Dow at 49,000. We've kind of been choppy here for the whole session. You think that that's our kind of next move is going to be determined by these earnings after the close, or you got to wait for the rest of them that are coming? Because I kind of look at this and I think, if these come back to favor, if you get like a Meta blowout where it's back to, 750 or near highs there, you get Microsoft back to 500 and change, you're going to have capital reallocate
for sure
to that sort of trade. Do you think that's a risk? Do you think it's more of just kind of a rotation? Do you think there's anything specifically that's susceptible to a little bit of downside? Or do you think it just doesn't matter? It's just buy anything?
I don't want to be that cavalier about it. And I do have interest in this afternoon's earnings reports because I have long deltas in both Meta and Tesla here on the follow page right now. And you make a point about Microsoft, like if we get back to 500, you're probably seeing a turn in the broader market. The NASDAQ going to put into an attempt at the highs once more if we see Microsoft at those levels. So, I mean, Nick, it's interesting. There's this dichotomy right now in the earnings. The folks who are selling the picks and shovels are making lots of money. If it's memory, if it's GPUs, right, from the Broadcoms and the NVIDIA of the worlds, AMD, ASML, all the way over to the Microns and the SanDisk and the Seagates, they're doing fine.
Yeah.
The question is whether or not the people who are buying those picks and shovels, the Microsofts, the Metas of the world, they're actually able to turn that into a profit themselves. So, the CapEx build out, it's great. I think Microsoft and Meta putting up some numbers showing that the AI boom is actually leading into legitimate revenues as opposed to the continued build out would go a long way to soothsaying this market. So I'm looking at them right now. I don't think we need any more affirmation from any chip makers or semiconductors that the business is booming.
Yeah, we know that. We got that. We got that on deck for sure. Your silver just got 116, just rallied about $1 in about one quick bar there. Does the volatility there spook you at all? SLV, just to give a proxy for silver in general, you've got 100% implied volatility pretty much across the curve. I mean, over the next couple months here, you get as low as an 80% implied volatility middle of this year. It basically tells you that the market, the option pricing, and the speculation, which is significantly to the upside, is priced as if metals could potentially double in the next year. How does that feel to you? I mean, that's what implied volatility tells you. 100% implied volatility.
You're right.
I'm not the smartest guy ever. It's a math equation. It tells you 100% up, 100% down. That's what is priced in right now. So 0 or double. How does that make you feel?
It felt great. It makes me feel great.
The 5,500 call was one for the ages. We should clip that. We should have that as like a watch us, and then it'll just be like Vecchio 4 months ago calling for 5,500.
I got back into silver. I got out of silver last Friday, and I said, "This thing's probably going to slow down." And then it rallied another $20, and I said to myself, "What am I doing here? I got to get back in." Yesterday on overtime, I was talking with Ilya about a chart. I know that he's short right now, but these consolidations and uptrends have just been yielding continuation. So I'm now sitting long. I was able to get in about $3 ago when it was in 113s, the 57 DTE, long 117, 118. It's risking one to make two. I'm comfortable with that on top of all the gold exposure that I retain. Gold's at 5.7% now. So the metals continue to work. Ilya was asking me, why are the metals rallying so much after that interlude period in the futures, right? Like 5 p.m., we close our doors, 6 p.m. Eastern, the machines turn back on and gold is gapping up. I don't have a good reason. I don't know. Maybe Asian traders are waking up going, oh, Trump's still president. Okay, we should get buy more gold today. I don't have a good rationale, but it continues to work. So we're not going to step away from a winner.
I hear you, man. I mean, gold, we might get 5,500 out while we're talking here. It's up 300 now, almost 6%. You got silver up almost $11 here, a little over 10%. I mean, this is wild moves. And equities seem to not, equities / vol, who cares? No problem.
It's really fascinating because it's not even like U.S. stocks are doing that well, comparatively speaking. The emerging markets are still doing fantastic. The dollar's getting slugged. You could make a case that SPY, I mean, last year, the U.S. markets were the worst performing developed equity markets in the world. So, who's to say that stocks can't keep going up, but gold and silver go up even faster? That's the camp I've been in. It seems to be working for now. Maybe that changes tomorrow, but I don't think it will.
The other story that's been a big story, obviously the dollar weakness. You've had a slight bounce over the last like 2 sessions or so, really since Trump spoke at the end of the day yesterday. A little bit of a move in the euro, which was up above 120 earlier this morning. It's come off a little bit, as well as some of the others. I think 6C is kind of the strongest of the group here. What do you make of that story? You think that continues? Does a face ripper in the dollar make any sense, or is that just like kind of a fading hope to buy gold at lower prices?
Yeah, I mean, I personally would prefer to sell any rallies in the dollar right now. We just had a breakdown to 4-month lows. We broke a 6-month long period of consolidation to the downside. It feels like the dollar wants to go lower. And Trump yesterday, he says lots of things all the time. He was the least committal on the dollar's strength or weakness than I've seen about anything in financial markets, which is almost to suggest that the administration doesn't care so much if the dollar continues to weaken, because that helps with our exports, right? So if we're going to be doing this reshoring, redomiciling manufacturing here, what's a way to help ensure that these businesses that are redomiciling, which the data suggests it's actually not happening, but if that were the goal, you'd want to make sure that they could go into the market with a currency tailwind at their back, not a strengthening dollar. So, okay, I suppose that makes sense. But Nick, any rally here in the euro, in the pound, or any weakness in the euro or the pound, I think we got to take it as an opportunity to load back up on more dollar shorts. So that's what I'm sitting around waiting to do.
It's funny because Trump has projected his thoughts and has gone towards them. Market-wise, anytime he said, good time to buy, it's been a great time to buy. Anytime he says, I don't care about the dollar's, the dollar's fine, it seems like it's correct to sell the dollar. I mean, he doesn't have much of a poker face to markets, it doesn't seem. The taco, that's a little different, but when he speaks directly to financial markets, it's usually not sugar-coated.
Yeah, we don't talk about taco around here.
No?
I would actually like for the producers, anytime someone mentions taco on the network, they automatically bleep us out. We don't want to tempt the fates here, Nick.
117 on your silver. There you go. What, do we get 120? How high is too high? Where do you get concerned? Where does it? 125. 125.
Yeah, I mean, I think silver's never been at a point in our lifetimes where we've had to say, well, is this something that as an input to industry, could it result in a company going, yeah, I could make the solar panel, but if I have to put silver in it, I'm actually going to lose money per panel. So it's not economically feasible for me to make these anymore. We're getting there. 135 is probably at the high end where that really becomes apparent. I've seen other estimates saying it's closer to 125. Either way, price discovery is fun. People, I mean, the fact that silver swaps are trading the way that they are, people just can't get enough of this stuff. I know that there's a lot of demand coming out of Asia and the Middle East right now. When you look at prices on the street in Dubai or Shanghai, for some reason, silver is the hot trade right now. So it's an irrational market. It's really, give yourself duration is all I can say. You don't want to be caught in something short term where you get a $5 sell off intraday and then a $5 move to the upside. And yeah, it's tough to stomach. So SLV is probably the best product for people.
Yeah,
but,
for sure.
I'm our futures guy here, so I trade SI.
I hear you. And the SI options, you got to be careful because the bid-ask spreads are wide, especially with the volatility you're seeing. Route your orders away from the mid-price, do some price discovery, as you were saying. Even the SIL contract, which I've been trading, is probably too big for my trading here. I should be sticking more to SLV, but I'm an addict, so I've been slinging around the SIL contract. E-mini's down 3 here. You've got an anemic 961,000 contracts. I hope we get to 1 million contracts. Again, I think you said it perfectly, and I guess we both did, but it seems like all the air is going towards this metals trade, this even into the currencies, I guess, a little bit too. The story just isn't about equities right now. And that kind of concerns me for bullish Meta, Microsoft, NASDAQ, which I am leaning here. It just doesn't seem that that's the story, that anybody cares.
No one cares about the equities right now, which on one hand, Nick, maybe that's the reason why this thing can keep going, because no one's paying attention to it. It's not getting any love. It's not getting any hate. Stocks can drift higher, low volume. Volatility is staying low enough. A 15, a 16 handle isn't the end of the world for equity market longs.
Yeah.
So silver's just going to move a bunch. I mean, I'm as someone long, I like the market going up. I got to say, when I put the new position on in the follow account today in the silver longs, it's trading. I'm just checking it here. It was filled at 10:26 a.m. The 117, 118 call spread. 10:26 a.m. Silver was trading at. I purchased that when silver was trading down at, or SLV equivalent was 101.74. Okay, and I'm looking at the prices. It has 112.45. Okay, in the SI contract. This thing is this makes no sense to me that this is up $4 from when I entered it.
That's volatility for you. Volatility goes both ways.
Yeah, and you just got to be comfortable losing a lot of money. I know people say like, "Oh, I got in silver and lost money." Like, I'm not surprised. It's like it's natural gas now.
Yes.
So it's rather be lucky than good. Most people probably shouldn't be trading it.
Yes, for sure. Speaking of natty gas, the front contract has rolled off. We're now back into the 27-day contract. It's come off a little bit, about 1% today, but nothing too big there. That has been another one of the big stories. Oil, I guess, it's all commodities really have been kind of the story here. I haven't looked at copper. I'm sure that's up. Yeah, copper's back up about 2%. You look at some of the other metals like platinum futures up 158, kind of giving you back near highs. I guess you're a little bit off the highs, but it's really been a commodity-driven story. I did see throughout the day some of the miners, like a GDX, was lower on the session. It's now up $2 and change. You haven't really seen the same velocity there as you would expect from the miners. You would expect to have as much, if not more, volatility than the physical itself. But I don't know if that worries you at all or changes your opinion on anything.
It did earlier today. I think I messaged you this morning that there was this, at 9:37 a.m. I messaged you. Interesting. GDX turns red despite GC being plus 3%. And then over the next hour, metals actually came back in, right? Metals bottom out right around 10:30 Eastern this morning. So just as kind of a tell for folks who are trading intraday, I'm not a scalper. I'm not an intraday trader. The way I've been approaching gold and silver, it's been out of the money calls, puts, mostly calls. chasing to the upside here, giving myself 30 to 60 days to see these things play out. And obviously that's been the wrong way to approach it, not the optimal way recently because of how fast these moves are going. It's nice that I had those $5,000 calls, Nick, from December when gold was still at 4,400 an ounce, but there's still 80 something days to go. And so I'm only at 50% profit max potential. And I've got to like ride this out now a little bit, and hopefully the market doesn't turn against me. So
Oh, boo-hoo, Chris. So sorry.
Yeah, my steak's too juicy. My lobster's too buttery. I get it. Right.
The caviar. You only have one spoon so far. Oh, no.
No, but as I bring that all up to say that when you see these divergences, right, if I was really going to be a scalper on a day like today and I see GDX is no longer rallying when the futures market is and the spot market started to turn lower, that probably means futures aren't going to hold on to their gains in the very short run. And however long that lasts, it could be 15 minutes, it could be an hour, it could be the sign of something bigger. But that is one of the tells that I think you can look at here. If the miners don't follow the gold price and the spot price higher, that may be a sign that the rally isn't going to stick. But hey, who cares about any of that right now? Because the market got another green light today from Powell and co to keep bidding these up. You mentioned platinum, 5.8% to the upside. Everything metals.
It's just everything metals. That's all. Like, who cares about Microsoft or Meta when you can get 6 to 10%, 5 to 10% every single day in gold and silver? It goes to kind of the changing way of markets, I think, in just things are moving so fast.
I have a question for you. For Bitcoin and for stocks to really have a strong run, do we need to see gold and silver chill out for a bit? Because it feels like every incremental dollar that would have gone into Bitcoin, given global affairs, is being thrown into platinum, copper, silver, palladium, etc.
I think the Bitcoin story is in a tough spot until I don't even know what can bring it out of its spot of its rut. But I think you're right. I think the big tech names need to for the metals to stop. You have to have an alternative to go to, and I think it has to be these big name tech stocks, the Microsofts, the Metas, the Amazons. They have to start moving like they used to for the attention to get pushed back onto them.
I'm sitting short put spreads in Tesla and in Meta today going into these earnings. I'm pretty comfortable with that. I mean, Tesla only has an 8.3 AVR.
Yeah.
It feels like, I don't know, maybe this is just my headspace, and I haven't been able to capitalize on it as much as I would have liked to, given my prevailing attitude. But doesn't it kind of feel like Tesla's bulletproof right now? Like, we know that they have a lot of bad news and information built into the share price, given Musk's behavior and how he's turned off customers around the world. European sales are still in the tank. You know, isn't it really upside only then because of sentiment?
I think so. Yeah, I agree with that. I mean, I think Tesla has always been that way, though. Like, it's not a big change. I mean, you get bad numbers and the stock rallies $100. Like, that's, just the name of the game here. He comes on, he's got, a robot to show off or something. And yeah, I mean, like, that's the name of the game.
What surprises you most about this market today? Is it the fact that you have tech companies, semiconductors, telecom, tech broadly, XLK? Like, these are the leaders ahead of this bevy of tech earnings. Does it surprise you that the market's front running them a bit?
Yeah, a little bit. I think in general, I'm getting the vibes of the GME squeeze era. You have you have basically everything kind of flat, and then there's these pockets of things that are just going absolutely bananas, and it seems to switch every single day. Right now, it's in some of the memory stocks, like you mentioned with Micron and SanDisk. On the flip side, you have like the short report on Carvana. That stock is down, $70 right now. It's just these massive moves. The STX, was down. STX was basically flat after earnings, rallied 70 handles, from the start of the open, pretty much. Western Digital, another one, Micron. I mean, these are just astronomical moves. These are just huge, huge moves, not only from a dollar perspective, but a market cap perspective. And then you look at a, Meta that is down $2. It just doesn't it's so concentrated, and you have to be in it before the move happens because there is no buy the dip. It's just straight off to the running.
Microsoft's chart is starting to look a little bit better from my view. I really want to see 495 cleared to the upside before I get really bulled up on it. But something that could be happening, and I think today's, after with the earnings here in a little bit, this matters a lot. But go back to the beginning of November, Microsoft has treated its 50-day moving average as resistance a number of different times. Yesterday, it closed through it on the other side, on the north side of it, for the first time since November 3rd, right? So there's a small change in behavior here. Posture starting to improve. You look at Meta and you look at Microsoft, two of the stocks that lagged the most in the fourth quarter while the NASDAQ was attempting to make a run at highs again. They're getting close to turning the corner here. So this could be the hurdle we need to get there. Give me a Microsoft 495, give me a Meta 690 tomorrow, and then I'll be penciling in some calls at all-time highs for the NASDAQ that need to be purchased.
You think if they have their move to the upside, it comes out of some of the other tech names and it's kind of neutralizes the whole thing? Or do you think if they have a big move up, it's everything blasts off?
Maybe it comes out of the Russell and small caps because the Fed's not going to give us the cuts that clearly the small caps want. I mean, the Russell's still down today by over 0.5%, right? The NASDAQ here is now up 0.4%. And then the sector performance, right? There's only 7 sector ETFs that are positive on the day. So I would think small caps probably are the ones to take it on the chin. The Russell was a real big leader there. And now that it looks like we're not losing Powell and we're not taking over Greenland, maybe we're not going to get those cuts after all.
It's a peaceful takeover. We'll park the Armada outside of Greenland. We'll do that.
Yeah, that's the next risk we have to worry about, Nick. Which if you're trading gold and silver, if the U.S. doesn't attack Iran, what happens there? Fun.
As we go into the close here, E-minis up 4 here, NASDAQ up 105. You got Microsoft and Meta basically right after the close, and Tesla all within 5 minutes of the close, LRCX as well, ServiceNow and IBM shortly after that. But if you want to get an account, refer a friend and get $100 here. That's a pretty decent deal.
Pretty good deal. tastytrade.com/refer a friend. $100 to the referrer and the referral, however we say that. I can't get that right. It's a good deal, Nick. And I, again, as always, encourage people to check out the other offers from competing brokers.
Yes. Very good. Well, Mr. Vecchio, looks like we're going to end the day pretty much unchanged here. The E-minis down 4, but chopping around. There they go. They're basically flat on the session. NASDAQ up 90. You got Microsoft and Meta coming here shortly, as well as Tesla. So I'm sure we'll see a little bit of movement in the after-hours session here where you can get more Tasty Live with Mr. Vecchio and Ilya Spivak here coming up next. So we're going to take a quick little 90-second break. We're going to see y'all tomorrow morning, including my bestie, Chris, is flying in for this. We're going to have him live in the flesh. It's going to be awesome. We're going to take a quick little 90-second break. You're listening to Tasty Live. Stay tuned.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, Visit the News and Insights tab at tastylive.com.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Stocks don't care about Powell. Meta and Microsoft earnings matter way more. It's Wednesday, January 28th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in Chicago. We're here to take you through the next 25 minutes or so as we wind down the trading day here. Powell took to the podium this afternoon and did nothing that inspired the markets. We were around 70 and 4, Ilya, when Powell started to speak. When we got the policy statement at the top of the hour, we close out the day about 4 points higher. Matt, as we go to the charts here, however, is where the market is actually moving, breaking through to fresh session lows with our Microsoft and Meta earnings out. Meta's numbers were pretty good across the board, except for one area, which is probably driving this market reaction. We do see here that the EPS was $8.88 versus $8.02 expected. Not bad. Revenues, $59.89 billion versus $58.4. Good. First quarter revenue guided 53.5 to 56.5, Ilya, above the 51.27. Fantastic. CAPEX. 2026 CAPEX estimated 110.62 billion, guiding for 115 to 135. Total expenses for this year estimate 151 billion. Meta guiding 162 to 169 billion. So the numbers have been good, but it's costing a lot of money to keep the machine running. Microsoft has an even worse reaction. They had a Q2 revenue jump of 17%, but again, it's that continued CAPEX spend that's bothering everyone here. I think that's safe to say. Yeah. Tesla is out here after hours as well. Tesla EPS at 50 cents versus 45 cents expected. So these numbers are continuing to come out, Ilya, as I get more of them across my screen. Yeah, I mean, like even Microsoft, 4.14 on the EPS versus 392. Revenue's higher, guiding on more CapEx than expected, so the market's punishing the company.
I mean, you could say that this is relative to the results. You could say that the non-reaction to the Fed was in anticipation of this. I mean, we talked about this on Futures Power Hour earlier today, this idea that you got to give the Fed 24 to 48 hours to settle when you have this much other event risk immediately after. You're not going to have a reaction because the market is going to want to see what actually the landscape looks like. They're not going to attempt to make up their mind in front of large event risk like this. They're going to wait to show conviction. They're showing conviction now. It's a little bit after hours, obviously. It's thin. So we'll see how all of this shakes out overnight and how it all works tomorrow. But the one thing I think that you clearly come away with here is Tesla was always a story different from a lot of the other names. And we're seeing that here. We're not seeing it break out of its key ranges. I think you need to see that before you can get overly hype. I think we can get a very clear sense. I mean, you've got the daily chart here. I think you get a good sense of where the range is. And so if you get back up there into the sort of mid fours, okay. If you can clear that, now you've got a breakout. Until you do that, though, what has actually occurred here? Not very much.
Tesla, we were talking with Nick here on last call, and I was saying maybe it feels like Tesla has a little bit of, it's a little impenetrable right now. It's up here after hours, trading into 443. We closed at 430, so not an insignificant little rally, Ilya.
Yeah.
Quarterly sales are down 3% year over year. I think that's less worse than what a lot of people would be suggesting.
Less worse
right?
is a good way to put it.
But beyond that, I mean, the Microsoft, the Tesla, the Meta here, the market's kind of washing over all of it right now as we're going through the numbers. Wash in ES, we're back to 7,003, which I suppose that's a really good way to describe the day because we just get to 1.1 million contracts traded here after hours. That is too light for a Fed day, Ilya. That's where we should be around 1 o'clock Eastern time.
Yeah.
In terms of trading volumes on a healthy and normal healthy volume day. And that's basically where we scrap by here into the close. I'm curious about your take on the Powell press conference. You and I were talking together on Futures Power Hour when the actual rate decision itself was released, and we walked away thinking it's broadly neutral.
Yeah.
The press conference itself, I don't think yielded anything noteworthy. We talk about that being the more important of the two, but 2 Eastern until 3. I mean, the market trades in a 25-point range, which is nothing on a Fed day.
Yeah, I mean, that just, I think, speaks to how nervous the markets were going into this. Nobody really wanted to commit. You have a Fed day with lots of impact potential. All the credit to Jay Powell. They tried to press him, as reporters do, on that proof of life video that he recorded after it turned out that the Department of Justice had issued subpoenas that may yet lead to a federal indictment over these renovations to the Marion Eccles building, the Fed's building in Washington, D.C. But he didn't take the bait and danced around it. But if you're the markets and you're looking at this yesterday, you're looking at this before the Fed announcement, and you go, okay, we've got a bunch of big tech earnings. Before that, we've got the Fed. He's going to get pressed on this. Why am I going to have conviction directionally? Why don't I just sit back and wait and let whatever happens come? So I think that much is sort of what we're seeing here. Recall back in October where Fed Chair Powell came out and gave everybody a big spook with how forcefully he was trying to talk down rate cuts. And then it took 24 to 48 hours to get a meaningful top carved out in the S&P, a top that, by the way, we've yet to breach. And so when we look at this, we, I think, get the sense that what Powell did here was sort of strategic vagueness, but the thread through it was less dovish. He said the economy has been surprising on the upside. He says the risks to both the labor market and inflation have receded. All of this, even though he said that a rate hike is not on anybody's bingo card, paraphrasing, he also does not seem to be in any kind of hurry to cut. Says we're going to take it meeting by meeting. We have time for economic data to say what it's going to say. And that's not what the markets wanted to hear. Not surprisingly, the S&P did not rally on the Fed announcement. And so I think we're going to have to just watch at the dust settling over the next several hours into the Asia and European markets. And of course, most importantly, in US hours tomorrow, because this story is not over. And after the close tomorrow, there's Apple, there's more tech earnings. So we're going to have to see where the market ultimately lands, but I don't think the reaction at this point is a foregone conclusion.
Meta here, market digesting the earnings as the session goes on and digs deeper into the numbers, up $26 here, $27 after hours, 695 and change. Maybe we're going to get a run at 700 after all. Ilya, this to me is a really important chart, though. I mean, if this is where the market ends up, we have the daily close marked here, but if we're trading at 696, it means we're through the swing lows of July, of the swing low that we had in October, the spike high that we had here in December. We're breaking the downtrend off of the September and the October highs. Being up at 690, 700, it's a nice retaking of some bullish posture in our meta. And I would lead that then to looking at what's happening in the NASDAQ, because despite the move off of the day's highs, we do notch a close through that key level that we've been watching here, which was the low after the Fed meeting on October 30th. That comes in at 26,130. You have highs here through December, January clip short. So the NASDAQ kind of feels, depending upon how the market digests these earnings in the Fed meeting tomorrow, it's starting to get into a place where the sky is a little bit more blue.
It starts to smell a little breakout-ish. Yeah, it's starting to smell a little breakout-ish. And I think when you look at where you're at here, I mean, if you want to call that range top, something around the 26,000 mark, maybe a little bit above, it looks like we scaled it today if this holds. Now, if this holds is obviously a hugely loaded statement, because just over the past little bit, as we got these earnings, we tried to fumble the ball and get back down.
We did.
But since then, we're back up again. And this is going to be a back and forth that's going to continue here. We're going to have to see how this ultimately lands tomorrow. But
can I point out on our 12-hour chart, if you go to an 8-hour chart, you go to a 4-hour chart, that area where the market is finding support here after hours.
It's a backfill.
Punching. It is. It's a punch through resistance, pull back into resistance. Now the market's picking back up. So just little, telecom was a leader today. XTL, which has been one of these, just one of the growth themes. Telecom, semiconductors, tech, right? Telecom, another new all-time high. Semiconductors, another new all-time high close. The rest of the NASDAQ isn't there yet. But given the price action we're seeing, I mean, hey, maybe we go into the second half of this week. We got a weaker currency and an administration not trying to stop it, Ilya. Weaker currency is probably good for some of these mega cap tech names that get 50, 60% of their revenues from abroad. So
it certainly was the weak dollar was certainly a very big support for U.S. markets last year. They would have done maybe 2/3 worse had the dollar not collapsed in the first 6 months of last year. Of course, then it stabilized for the next 6 months, but at a very low level. And now it looks like it's getting back into outright sell-off mode. But I'm looking at the same thing here. I'm looking at this level around the 26,000 level as a range that's attempting to get scaled. We've established kind of a toe foothold above it. If we can hold this on these retests overnight and going into U.S. markets tomorrow, we might have a breakout, and that might send us in the direction of, let's call it 26.6, 26.7. And that's the highs from October. I might have to take my shorts here that are essentially contingent on this range holding and flip them the other way.
Come on in. The water's warm.
If the price action deems it, then I go where it goes.
So we have our trade set up in the NASDAQ for the S&P. It looks like they're going to try to break out here. Failure up here, Ilya, again, with the S&P not getting through 7K. There's no such thing as a quadruple top. There are triple tops. There's no such thing as quadruple tops or quintuple tops. So, 1, 2, third door knock here. Either we're going to fail or we're going to break. But we're going to be getting away from 7,000 sometime soon. I'd be shocked if we meandered here for the next few weeks.
What's interesting is that same move that we're looking at in NASDAQ is failing in the S&P. We got the breakout through, let's call it 7,014, 7,015, something like this, which was the range top going back to late October. And we even tried to close above it. And now we've closed back under. So it's an interesting set of circumstances here.
All right. So why is gold continuing to go up 6% today? Silver up 10. I mean, you and I have our theories here. We got our gold breakout yesterday, and I can't believe that was $300 ago when we were talking about this on Futures Power Hour as a potential long opportunity and a breakout coming in the next 8 to 20 hours, thanks to the Druckenmiller method.
Yes.
God, I'm really kicking myself here because I said, I already have enough enough gold exposure, and I'll ride this out. That was silly because the GCJ6 position I have, it went from 92 to 94% max profit. Should have rolled into something new because a 5,400 call or 5,450 call would have worked out really nicely in very quick order. But we're not going to complain about missed opportunities because there's still plenty of gold and silver exposure here.
Yeah,
I think between the two of us.
Yeah, I rolled from the G contract into the J last week. Frankly, now, of course, I wished I rolled the entire position versus just half. But if it's working, it's working. And the next time we get a meaningful pullback, I'll probably add. But it's working, and there's no reason to question it. I think silver is interesting as well because it frankly didn't do as well as gold today. And so you have this interesting dichotomy where maybe silver is a little bit frothy from a speculative perspective. Maybe it does make sense to kind of look at gold outperformance near term versus silver, at least for now, until silver can work off some of this froth. But for the precious metals as a complex here, I think the story remains the same. And what we've been talking about really since last year is bifurcation of speculative narratives. We're used to, from 08-09 crisis onward, this sort of risk-on, risk-off thing where the markets splinter into two buckets. And one bucket goes this way, the other one goes that way, and everything is correlated. And if it's risk-on, this bucket goes up, that bucket goes down. And if it's risk-off, it flips. The issue with gold has been it has refused to enter a bucket. And it almost has a different, separate speculative narrative from what stocks are doing. It's not a risk-off narrative. It's just a separate narrative. And by the way, that's more normal. It's more normal to have multiple stories. This is, everybody, finance 101. You have to diversify. Why? Because there's different narratives that drive different things. And when one thing works, the other might not. And that's why you don't get one risk-on story. You get an assortment of different risk-on stories. Gold is a separate risk-on story from what's going on in stocks. Clearly you can see that here today because the S&P is much soggier than gold is. But also the S&P is not collapsing to justify some sort of risk on, risk off gold story. It's a thing unto itself now.
Can I point out about the S&P? I mean, very much like the NASDAQ here, the high that we have in October is 70.14. We're trying to pull back above that here with this candle today. This is a 12-hour candle. So we're not going to get the daily close markdown, but you can see that in the S&P and in the NASDAQ here that you
take
get
a look at the
these
8-hour candle on the S&P, because what's strange there is it on that time frame, it has already broken back down and closed down there.
Yeah, how the market digests Meta, Tesla, Microsoft, clearly what those earning calls will say will perhaps be the deciding factor for whether or not these charts can actually break out. Meta's up to 695 here after hours. Microsoft itself coming back a bit. It did close today. What do we have here on our charts? At 481, we're back to 463, and we hit a low of 442 after hours. Tesla, likewise, it's up to 443, still from 430. So yeah, there's a nice little bunch of price improvement here as the day's going on, as the session's going on.
Support turn resistance on Meta seems to be about 691, 690. That's
690.
That's the former support from back in early October, and we've had kind of a range oscillating with that as resistance now. We're testing above it here. Let's see if it sticks.
For me, tomorrow when the market opens, it's going to be a good day to get. I mean, this is a very small position. It's a single put spread in Meta here, but with the market having moved up now and that 816 DTE, I'll just take that off and make a quick few bucks on it. So rolling forward, we'll have to see where vol goes tomorrow morning. But if this is indeed breaking out, I would maybe want to put some chips on like 750, 800 calls. Get something for a breakout potential, perhaps.
Yeah.
This is obviously important because the Fed's important because of the earnings. They're important. I don't think you and I care much about those in actuality, and I hate to say that or admit that. We really only care about what's happening in gold and silver. So tell me, what are you doing now? Because you and I find ourselves on opposite sides of the trade here. I got long this morning around 10:30 Eastern in a 117, 118 call spread in SIK 6. I know that you've been leading a little bit of short action in SLV.
Yes. So I didn't take it off today. Part of my strategy here was to stay nice and far away from expiration to dilute delta exposure, because I still believe in the long-term narrative. I just think there might be some speculative fuzz here that can be worked off. So I still have those out of the money short call verticals looking to sell the 80, buy the 84 and in SLV. And they moved a big $14 today. So nothing. So I'm looking at this and going, all right, this is whatever this is. We can wait until tomorrow to see if the horizontal high there where we got rejected in silver holds or doesn't. Because I think that's really the big test here. If you come back and take a look at where those highs were that got everybody so hot and bothered earlier, that was the high from January 26th. We're basically right there. And we're either going to break it or we're not.
This thing is jumping 10, 20, 30, 40 cents at a time. Yeah. So if you're going to be trading this, you got to be trading it small. You got to be trading it risk defined. And
give yourself more time. Go out further on the expiration scale, because then if the underlying gets jumpy, at least your options are a little bit diluted because there's still tons and tons of theta in there.
Is the volatility too high? I mean, Nick pointed this out earlier, Ilya. It's an IV index of 105.6. So the market's priced for what? Silver zeroing out or doubling?
Yeah.
Over the next year. That's obviously crazy. And by historical standards, we don't usually get IVRs in the 130s all that often. but it also feels like the times that we're trading through right now are not normal by historical standards.
Yeah, this is nothing about this is normal. Let's just be clear.
Either way, it feels like it was I had a pretty good day here trading. I'm going to continue to do what's working for me, which is long a little bit of oil, both through short puts and long calls. Still long gold. Got back into silver this morning, which feels good. I know that you and I may find ourselves at odds there, but I hope that I am the winner, even though I like seeing my friends succeed. I hope you don't succeed this time.
I mean, such is the nature of markets. There's got to be a buyer. There's got to be a seller. Without that, there is no market.
The dollar, I'm hoping to sell a rallying, as you and I were talking about on Future Power Hour. Other than that, the second half of this week, vol's in a little bit for equities. And we got the big events out of the way. We got the bulk of the tech earnings and we got the Fed out of the way. So tomorrow's market reaction, I think you would agree, that paves the path for the true understanding of how the market feels.
So you're saying the
events.
PPI numbers for December won't be the make or break moment for this market?
If I am getting off of a plane tomorrow morning in Chicago and the market is melting down because of PPI and I don't have service in O'Hare, I will eat my shirt when I get into the office. But
you heard it here first, folks.
Very doubtful.
Needless to say,
PPI and claims will be the straw that break the camel's back.
You wouldn't expect it. You wouldn't expect it. Whatever we see tomorrow, which by the way, that isn't to say that tomorrow won't be a crazy day. It might be. We just got a lot of information late in the day. The market's got the Fed, but then they got earnings to wait for. Now they've got the earnings and they have the Fed, so they can synthesize these things together, and they're going to do something with that information tomorrow because they'll have a lot to think about overnight. So it's not to say that tomorrow is going to be a slow day and that we've already priced in everything that there was to price in. History, even just over the past several months, would tell us don't get ahead of yourself. Markets can take 24 to 48 hours to think this stuff over. But PPI is not going to be the straw that breaks the camel's back.
Ilya here, rally into the close. We have about 30 minutes left in the futures day. We have these companies' earnings calls coming up, but Meta, Microsoft, Tesla, net. We find the S&P 500 and the NASDAQ breaking through their FOMC meeting highs, so to speak. Outside of that, though, you're going to be here to continue the conversation. I believe you're breaking down everything Powell said today and what the Fed may do next on macro money, which is coming up here on Tasty Live now that overtime's out of time. So be sure to tune in tomorrow where both of us will be in studio for a special show, 4 p.m. Eastern, 3 Central, right after last call, as we are here on the network every Monday through Thursday. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Stick around, though. Macro Money up next here on Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The man has spoken. We're on the other side of the Fed policy announcement and Fed Chair Powell's commentary. So what does it all mean now, and what do these markets do next? That's what we're going to try to figure out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we can go directly to the slides here as we try to answer, surprisingly, the biggest question that is surely on everybody's mind that's watching any semblance of what's going on here. What now? Because clearly we had ourselves a meeting. The policy announcement was, as you might expect, certainly the markets were not looking for a change in rates and they didn't get it. The statement here, very interestingly, shaving off anything that might look even a little bit like directional conviction. So if we take a look here, we can see available indicators suggest that economic activity has been expanding at a solid, note that is a upgrade from moderate pace. Job gains have remained low. Notice they've not slowed. So the writing here seems to suggest that the economy has improved a bit and risks to the labor market have dissipated a bit. The unemployment rate has shown some signs of stabilization. Inflation remains somewhat elevated. We know that much. The committee seeks to achieve its 2% long-run goal. That's all as it was. What's interesting here is that we took out the part that says that the committee judges that downside risks to employment rose in recent months. So, of course, the critical bit here is this was the logic for the Fed's rate cuts last year, that the Fed identified emerging risks to the labor market and said, okay, our balance of risks between inflation and the labor market have changed. Inflation risks have become less of an issue. Employment risks have become more of an issue. Let's cut rates. Here, they seem to be walking that language back as though the 75 basis points that we got at the end of last year is maybe enough for now. Note that then we say, in support of its goals, the committee decided to maintain the target range. Note also, we took out this language about short-term purchases. We already know about that. And we also have some dissents here. Stephen Meehan, of course, dissented. That's not surprising to anybody. And Chris Waller dissented as well in favor of a quarter-point cut. Now, that's seemingly less dovish, at least for Stephen Meehan, than has been the case. In fact, it's almost like a pattern emerging here where when the Fed cuts by a quarter percentage point, Meehan wants half. When the Fed doesn't cut at all, he wants a quarter. So take whatever the Fed does, add a quarter-point cut, and that's where Meehan is, perhaps. So looking at the statement here, we can see an emphasis on maximum vagueness. It's a short statement. Doesn't break a lot of new ground, but it does seem to suggest that the Fed's perception of the economy has somewhat improved. Now, not surprisingly, the fireworks were going to be had in the press conference more so than the statement. And here's what we have Fed Chair Powell saying here, a good start, or a good part rather, of slowing jobs
market represents the declining workforce. This, of course, is the demographic impact of the baby boomers retiring, so that we are not going out there and hiring perhaps reflects the idea that there's a supply shortage. There are fewer people to hire. In fact, last year, the year before that, there was a lot of conversation at the Fed about how immigration is helping to keep inflation down because it's helping to offset what otherwise would be labor shortages because of these demographic changes. Now, of course, we've had a very different stance on immigration enforcement since the beginning of last year. And so now it's seemingly a question of there's not so much a lot of layoffs, but hiring has significantly slowed. And the argument here seems to be that a general decline in the labor force, that is, fewer people looking for jobs and not finding them, is why we have this current situation. The actual labor force is declining because there are fewer people out there looking to get hired. And on the inflation front, we can see here, still the same case once tariff inflation passes through, ostensibly somewhere around April going into May, when you rebase year-on-year calculations to where you're comparing not to a period before the tariffs, but now the full 12-month comparison is still a post-tariff comparison. You should see goods inflation start to ease out of the calculations. And that seems to be still the point that the Fed is making. We likewise have some interesting comments here on the political aspect. Fed Chair Powell saying the Cook case, that of Lisa Cook, is perhaps the most important in Fed history. This is the case where the president attempted to fire Lisa Cook, Governor Lisa Cook, and that case is now before the Supreme Court. We're going to see if they decide that the president has those powers. Seems like the justices are leaning on no, which is, of course, what Powell has been arguing the entire time. But this is going to be an important test of whether the Fed is really and truly insulated from political pressure in a way that would uphold the principle of central bank independence, a key pillar of U.S. economic stability and policy. The Fed chair then says, we'll make decisions on a meeting-by-meeting basis. There's a broad support for holding rates this go-round. And if we look at perhaps the punchline here, a rate hike isn't anyone's base case. Now, that's interesting, of course, but of course, in the same breath also, Powell says the economy has surprised us with its strength. And that's despite the fact that the Fed has been upgrading growth forecasts, both in the last SEP in December, the last summary of economic projections, as well as the preceding one in September. So what does this mean for policy expectations? Well, so far, it looks like the markets still want 2 cuts. We've got the first one here baked in for June still, the second one on the menu for December. And again, this leaves us with the markets at 45 basis points. That is to say, they are closer to 2 cuts than 1 by a long mile. They're only 5 basis points off from the full 50 basis points being priced in. And of course, this leaves intact the conflict that has so bothered investors. We can see here that as this outlook for Fed policy stopped getting more dovish, so too the S&P 500 seemed to run into some sort of a wall here near the 7,000 level. And it's because in the Fed's reckoning, they only have 1 cut on the menu for this year. Clearly, the markets want more than that. And we see here that the Fed is acknowledging some of what we've been talking about, which is to say that in the third quarter, the economy did much better. In particular, this consumption component and its contribution to the overall story has improved meaningfully. There was obviously some trouble here in the first 6 months of the year where we had these wild swings in inventories and in imports. around front running for the tariff regime, but most ominously of all, consumption slowed to a trickle. And that's 68% of GDP. So that's not anything that anyone ought to have taken lightly, and they didn't. But in the third quarter, we can see these wild swings moderate. We get a much more normal set of inputs here for non-consumption components of GDP, whereas consumption helpfully improves. Now, since then, here's our S&P Global PMI numbers. As ever, 50 is neutral here. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what we see here is the government shutdown effect is certainly on display. We have a little bit of a slowdown here in the third quarter. Going into the fourth, here's the third. Looks fairly chipper. Here's the fourth. Less so. But nevertheless, we're basically at the midline for the range post-COVID. So coming out of the pandemic, here was the aggressive catch-up run to get growth back to normal form. There's a bit of a corrective move the other way. But then right around the beginning of 2023, we sort of settle into the new normal, somewhere between 50 and 55 on this PMI index. And what we find is, yeah, we get a slowdown, but we're basically right in the middle of the range. And already in January, we're ticking up a little bit. So after a relatively brisk third quarter, it looks like we're on pretty good footing for the fourth. And indeed, the ISM numbers, a different version of the PMIs from a different publisher, different survey, different methodology a little bit, but the same kind of framework for the numbers, with 50 as the neutral, above growth, below contraction. This is even more optimistic, at least for the service sector, which is by far the most important part of the economy, employing close to 80% of all Americans. And so what we find here, if we kind of put together a crude model saying overall, let's say about 70% of the economy is services and 30% is manufacturing. As a matter of fact, this is a little bit more downbeat on manufacturing. We can see for the S&P Global version, the manufacturing sector is growing. For the ISM one, it is in contraction mode. And that aside, services is much more buoyant. And because of that, and because services is such an outsized part of the overall pie, it seems like this is even more supportive of strength in the fourth quarter. And when we look at this Atlanta Fed GDP Now model, we can perhaps see why. The tone of the economic data here, just looking at that green line and not necessarily taking it at face value, there's still plenty of time for this to change, but not materially so. And although the actual level is going to move around some as more data is thrown into the model, is a nowcast after all. It's not the final word on anything until the actual data is out. But it does give you a sense of the direction of travel for the economic data. And there, clearly the slope is pointed in a direction. So as we look at this, you get the sense that if the Fed is as data dependent as Powell has described them, there's probably not a big case to cut in a hurry. In fact, the Fed looks more right on this front than do markets calling for more easing. It's a similar story for inflation. We find here that inflation has been moving in the Fed's direction for the most part. You do get this stabilization in goods inflation, which is, of course, what Powell is looking for and what we just heard him say. Services inflation continues to cool, all of which seems to support the idea that if you get to a place where you've got goods inflation filtering out of the calculation because you rebase into a world where you're comparing year on year numbers that both drop within the tariff timeline. So
let's call it after Liberation Day, then you should get this start to rebase down. Meanwhile, services inflation continues to head lower, and that's by far the biggest component of inflation overall, something like 1.8% of a 2.7-ish% CPI. And so as you look at this then, you get the sense that indeed the Fed might be forgiven for saying that there is no rate hikes anywhere on the menu. But as we've discussed before, the wild card here is crude oil, which seems to be going higher and boosting break-even inflation expectations baked into the bond market as it goes. This, of course, is a major issue, and we saw crude oil significantly higher again today. The lag between these moves and CPI seems to be about a month. And so what we have here on top of a bunch of fiscal stimulus in tow from the OBB fiscal package, the one big, beautiful bill, which is essentially 2 years worth of tax cuts jammed into a single move. We also have all of the easing that the Fed has already done. It takes about 12 to 18 months for rate cuts to work their way into the economy. So we have all of the 100 basis points from late 2024 just entering the economy now. And of course, beyond that, we have an additional 75 basis points from late last year. So there's a ton of easing here, and crude oil seems to be rising, among other things, for geopolitical reasons, because what the U.S. is doing in capturing Russian shadow fleet oil takers and taking out Nicolas Maduro in Venezuela, at the same time that it's sent what it's calling an armada to live off the shores of Iran while there are these protests, as though to menace the regime and say, look, we're here. If you start to crack down hard, there's going to be consequences. But of course, even if we don't intervene, we nevertheless have Iran teetering on the brink amid these popular protests. And that, of course, is a major shock to the oil market because, according to The Economist, the shadow fleet supply line that carries incognito the sanctions-busting crude from Iran and Russia and Venezuela, that is currently under disruption. The U.S. is capturing the tankers. It's obviously taken out Nicolas Maduro in Venezuela. We also have this Iranian situation, which with our involvement or without it, is going to come to a head to something. And all of this compromises global crude supply for the largest importer on the board, China, which is willing to take this illicit crude. And so we've had a breakout higher in crude oil. We probably have legs for that breakout to continue because this is not a story that's going away quickly. It's a story that's likely to be with us for a while. And so this represents inflationary impetus, which perhaps the Fed is, for now at least, being cavalier about. And of course, if this inflation builds, well, then it'll be difficult to justify rate cuts. Now, as we've argued here before, what the markets want with these rate cuts isn't, strictly speaking, something to support growth, which already looks solid, isn't, strictly speaking, related to inflation or the dollar. Those seem to be relatively okay for what the Fed is looking to achieve. But the bigger issue is the markets want cheap money as a kind of safety blanket, where they're looking at the volatility in economic policy making from Washington, D.C. and saying, you know, just in the past 4 or 5 weeks, got into a tiff with the European Union over Greenland. We extradited Nicolas Maduro. We threatened to indict Fed Chair Powell. All of this volatility is too scary. Give us cheap money so that if we end up betting wrong against the backdrop of all of this commotion, we can borrow back and go again. And that's, of course, captured here in the U.S. Economic Policy Uncertainty Index. It tracks
how economic uncertainty is talked about in the press. It gives you a sense of what's going on. And you can see here it is still quite elevated. In fact, the most elevated it's been since COVID, which was itself the highest on record since 1985. So we've still got the situation where the markets clearly want more cuts than the Fed. And the Fed is out here saying, we don't have the economics to do that. And the market's seemingly saying, well, yeah, we know. Thing is, we don't care about the economics. We care about having cheap money in the event that some tail risk emerges because the White House does XYZ thing, and that has unintended, violent, and market dislocating consequences. So it would seem like what's going on here has been left largely intact from a macro perspective before the Fed meeting versus after. We're looking at a situation where the market is saying, right, so you're not going to dig yourself into a political hole, so everything is vague. You're not commenting too much on the president. You're not commenting too much on the political influence that he's trying to exert. But at the same time, you're not really taking us into a different direction policy-wise. You're keeping things as open-ended and as status quo as possible. And what that means here is that the markets are overpriced for rate cuts. At least they have more rate cuts there than the Fed has agreed to endorse. And so what that represents then is still a downside risk, as we saw right here. And so looking at what we have here, it's this fuzz around the average that seems to be the issue. And if you focus on trade policy specifically, of course, tariffs are a bedrock of the president's perspective here. Certainly since Liberation Day, this thing has improved some, but the amount of volatility around the center here is outsized, to say the least. It's much less tightly wound to the averages than it was during COVID. And so with that in mind, we still have the same basic disparity on the board. Markets want cuts as Kevlar. The Fed isn't prepared to give them those cuts. You can see here that this trade uncertainty is already showing itself with this first decline in trade volumes since 2020 and the biggest one since the 2008 financial crisis. So the problem here persists. And of course, these tech earnings are very much part and parcel of the story, because if you disrupt global trade, you likewise disrupt the AI supply chain, because you can clearly see here, it is very much distributed around the big centers of economic activity. Of course, the US has the models, so it's at 38%, but Asia has a big part of the business. The Asia Pacific region, in fact, as a whole. Europe has a big part of this region contribution. I mean, certainly we know that microchip lithography is a Dutch situation. And so if we're going to get a retrenchment on global trade, the concern, of course, ought to be that we're going to puncture the very thing that's kept markets elevated. And so this is why it seems that traders still want rate cuts. Didn't get one today. Powell is perhaps modulating to a conversation where they won't get one anytime soon. There's very clearly an absence of a sense of urgency from the Fed chair here. And so the next question becomes, okay, so when do markets react to that? And perhaps having some earnings here from Meta and Microsoft after hours neutered the possibility for those moves. But now those are out of the way, and we have the benefit of watching over the next 24 to 48 hours how all of this settles. And so positioning-wise, I haven't changed anything today. I'm still long gold, short the dollar via the pound and the euro, short Bitcoin via a put vertical, short the bonds, where we see some more progress today, certainly a little bit more weakness for both the belly and the long end of the curve. Still short risk, and begrudgingly still short silver, only as a tactical consideration, looking for it to calm down a little bit and doing that via a put vertical. We'll see still if that continues to work. Silver pointedly did not take out its record high on today's rally, and gold didn't confirm that rally. So perhaps we're not out of the woods yet on this silver story. And of course, long crude oil still, because it looks like that's in the middle of a breakout. And that is macro money for today. The flow of economic data slows down significantly from here. We'll get PPI tomorrow, but now it's all about digestion, how the markets will ultimately react to what they heard today, what they'll do with that. And that's going to be a story for tomorrow's trading session, which we'll recap here on Macro Money, as always, after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and what might follow. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money returns tomorrow. Meantime, happy trading.